Hey guys, what's up? So, welcome to our marathon, welcome to our revision. So, when you're appearing for the exams, and as assured, as promised, that I'll be recording and giving you the marathon. So, here we are here with complete marathon. It's CA Interlaw, 100% English, and new syllabus. So, this marathon is applicable for all the students appearing for CA Interlaw exams. And in case if you have studied through me in English, okay, at anywhere in India, you know where you have studied, so this marathon is applicable to you. In case people who are from outside and they want to revise, so you can open your notes. People who have studied through me, you open your notes, your handwritten notes, what we have written in the class, so that quickly we will recall. So you will see the entire file. Okay, it depends upon, I'll be recording in parts or compiling it in one video or maybe in 2 or 3 parts. All depends upon the future plan. So today is the first chapter what we are doing. Okay, so it's very easy syllabus. We have studied it together. We had a lot of fun in the class, lot of jokes around hungry India, poor India. I hope you guys had enjoyed it. Now it's the time for the real test. It's your exam. Okay, so I need either 70 or a rank, because if I get 70 or a rank, I will take you to Dutch. Okay, so without wasting a time, let's quickly start. Chapter number 1, preliminary. So open your notes. Okay, it's a revision session. I will not be explaining you. It's just a recalling session again and again with the different with the same codes what we have studied, or same tone or same examples, so you recall the concept. Open your notes. The definition will be just here and there, 1 or 2 numbers here and there, but it is exactly the same or the similar content, you can say. So from your handwritten notes, preliminary. So my point number 1, it says Companies Act 2013 is applicable to whole of India. That is your section number 1. Correct? Definition का section number is 2. The first definition what we did is your relative. Relative is दो साथ साथ. First, AB and baby, that's husband and wife. Number 2, members of HUF. Number 2 is your members of HUF. Number 3 is your others. Others में for yo-yo, papas, mamas, brothers, sisters, son's wife, daughter's husband. Okay. Now always remember, in daughter it is only daughter. Rest everywhere there's a step person. Okay. Only in daughter there's no step daughter. Rest everywhere it is step. Now the next definition is your financial year. Okay, I'm not saying the number wise, I'm just going with the notes. So this is the notes of a student what I have dictated in the previous batch, but you come to your notes where you have written financial year. Okay, definition. So definition will be just here and there, but everything is written in the notes. Financial year. Generally in India we follow 1st April to 31st March. 1st April to 31st March. Correct. But the problem is for the first financial year, if the company is incorporated on or before 31st December, if the company is incorporated on or before 31st December, the financial year would end on the coming 31st March. For example, if the company is incorporated on 25th July 22, the financial year would end on 31st March 23. From 25th July 22 to 31st March 23, the coming 31st March. Sir, what if the company is incorporated after 31st December? Now, when I say after 31st December, that's basically 1st Jan and onwards. Correct, 1st Jan and onwards, then the financial year would end on the next 31st March. That is basically the company is incorporated on 21 Jan 23. Okay, the financial year would end on the next. That is basically 31st March 24. Not the 23 wala 31st March. It is basically 31st March 24. So this is very important definition, financial year. Okay. However, there's a benefit here. If a company is a holding company or a subsidiary company or an associate company, if a company is a holding company, subsidiary company or associate company of a company incorporated outside India, and is required to follow a different financial year. If a company is an Indian company which is a holding, subsidiary or associate company of a company incorporated outside India, and they have to follow a different financial year for the purpose of consolidation. So they will make a request to whom? CG. Okay, on an application made to CG, then it may allow any period as a financial year, whether it may period is a year or not. It could be for 10 months also, 12 months also, 13 months also, 15 months also. It could be April to March, or it could be Jan to December, it could be July to June, it could be any. So you have to make a request to CG. That's your MCQ. Then holding company, subsidiary company. If a company is having more than 50% of the paid share capital in another company, the company which is holding, it is called holding company. The other opposite company is called a subsidiary company. If baby is having more than 50% of Santa Limited, then Santa becomes a subsidiary of AB Limited. So you become holding subsidiary at more than 50%. Or else the other way is when you control more than half of the board of directors. Okay. Now, if AB is holding 30% in Banta, Baby is holding 15, Santa is holding 10%. Is Banta subsidiary? The answer is yes, of AB Limited. So you become holding in subsidiary at the rate, at the percentage of more than 50, more than 50, more than 50. The other way is controlling more than half of the board of directors. In case of wholly owned subsidiary, the percentage is 100%. How much is the percentage? 100%. Okay. So then this is the definition. If a company holds more than 50% of the paid-up capital of another company or controls the composition of board of directors, then such company becomes a subsidiary of the company and the first company becomes the holding company. Then if a holding company along with its subsidiary or subsidiaries hold more than 50% of the another company, then that another company becomes the subsidiary of the main holding company. Now, if you are holding the shares in fiduciary capacity, the trustee capacity, like if you have given a collateral and you are holding those shares, it will never be counted. So, shares held in fiduciary capacity, that's trustee capacity, will never be counted for the 50% thing. Then, associate company. At what percentage you become associate? Minimum 20%. Minimum 20%. So, it means a company which has another company has significant influence, that is holding minimum how much percent? 20% of the paid up share capital, that is voting power, and it includes a joint venture. If you are holding minimum 20% of another company, then that company becomes your associate company. So 0 to 19.99999 is investment. 20 to 50% is basically your subsidiary. More than 50 till 99.99 is your subsidiary, and 100% pay you become wholly owned subsidiary. Then next definition is your free reserve. So what does free reserve means? Free reserve means reserves which are available for distribution as dividend or any amount representing unrealized gains, notional gains, revaluation of assets or change in carrying amount of the asset or liability shall not be treated as free reserve. So they can ask you in identifying what is not free reserve. Any amount representing unrealized gains, notional gains, revaluation of profits, change in the carrying amount of asset or liability, it shall not be treated as free reserve. Then next definition is government company. So for government company, the percentage is 51%. Holding subsidiary, it is more than 50. For government company, it is minimum 51%. It is a company in which minimum 51% of the paid up share capital is held by the CGSG or both. Okay, a subsidiary of a government company is also a deemed government company. Audit is done by CAG. Audit is done by whom? CAG. Examples: BHEL, GAIL, SAIL, MTNL. Then in your book, in your notes, next definition, very simple, only for the purpose of MCQ. Sir, authorized capital or the nominal capital. It is basically the maximum capital of which the company is registered. Maximum capital, okay. Then called up capital. It is a part of that. It is a part of such part of capital which has been called for the payment. Please make the payment. Sir, issued capital. It means the capital which is issued for subscription for time to time. So authorized capital, called up capital, issued capital. We have done an illustration in our book, I think, if you remember that. We have calculated. So please refer to that illustration. Understand, it's a revision thing. It is not an explanation thing. For detailed explanation, you can buy the lectures. Okay, it's in English also, 100% English. It is in Hindi English also. For law also, for audit also. And for CA final audit, it is in Hindi also, it is in English also. So especially for South students, it is recorded in 100% English. Again and again, I am telling you, people who have studied through me, they know it that we are just going for the revision and all the concepts are clear. We are just recalling the concept. It is not an explanation. People from outside, so if you want a detailed explanation, you have to purchase the lectures. This is just for the revision thing. Now, books of accounts. What is my BUA? Sir, BUA will include details of income expenses, details of assets and liabilities, details of purchase and sales, and cost records. Details of income and expenses, details of assets and liabilities, details of purchase and sales, and details of cost records. Now, so books of accounts includes details of income, details of expenses, details of assets and liabilities, details of purchase and sales, and items of cost records for the companies covered under section 140. That's the definition of books of accounts. The next definition is company. So very simple. Company means a company which is incorporated under Companies Act 2013 or any other previous law. Company means a company which is incorporated under Companies Act 2013 or any other previous law. Kassa definition. Waste. Financial statement. So financial statement means balance sheet, P&L, cash flow, balance sheet, P&L, notes to accounts, statement of changes in equity, and cash flow statement. So 5 things will give you financial statements: balance sheet, P&L, cash flow, notes, SOKI. Balance sheet, P&L, cash flow, notes, SOKI. However, cash flow is not applicable to DOS. DOSS. Dormant, OPC, small, startup private company. Startup private company. Startup private company. So cash flow is not applicable to DOS. Dormant, OPC, small, startup private company. Dormant, OPC, small, startup private company. Again I say FS. FS means balance sheet, P&L, cash flow, notes, SOKI. Cash flow statement is not applicable to, very important point, cash flow statement is not applicable to DOS, Dormant, OPC, small, and Section 8 or startup private company, startup private company. Then liability. In case of a company limited by shares, the liability is limited to the extent of unpaid amount on share. The liability is limited to the extent of unpaid amount on shares. In case of a company limited by guarantee, the liability is limited to the extent of guarantee given. To the extent of guarantee given. Understood? Now, next definition is KMP, key managerial person. So key managerial person में who will be included? CEO, CFO, CS. Okay, CEO, CFO, CS. Then officers not more than one level below the board. Officers not more than one level below the board, and others as prescribed. CEO, CFO, CS, other officers not below than more than one level below the board, and others. Okay, besides CEO, we had MD, manager, whole-time director. So basically in KMP definition, it is basically three people who will be sitting currently: CEO and CFO and CS. From CEO, you can choose either MD or manager or whole-time director. So CEO or MD or manager WTD and CFO and CS. Officers not more than one level below the board and others as may prescribed is not yet applicable in the syllabus. Okay, but in the definition you will study all this. Now, very important, listed company ka definition. So sir, listed company means a company which has listed any securities on any recognized stock exchange. It means a company which has listed any of its securities on recognized stock exchange. Following companies will not be covered as listed company, will not be considered as listed company. Number one, a public company which have not listed their equity shares on recognized stock exchange. A public company which have not listed their equity share on RRC, but they have listed what? Non-convertible debt securities as per SEBI regulations 2008. Non-convertible redeemable preference shares as per SEBI regulation 2013, or both. So if a public company have not listed their equity share but listed that non-convertible debt security like a bond or non-convertible preference shares or both, it is not a listed company. Number two, a private company which have listed what? Non-convertible, same point, debt securities as per SEBI regulations 2008, it is also not a listed company. Third, a public company which have not listed their equity shares on recognized stock exchange but listed on this exchange specified under section 23(3) of the Companies Act 2013. That is basically unrecognized stock exchange. Unrecognized stock exchange. A company which have not listed their equity shares on RIC but listed on a stock exchange specified under 23(3), that's basically your unrecognized stock exchange. So this is the definition of listed company. Very, very, very important. Can come for MCQ or a 2 mark, a 3 mark, a 4 mark or 5 mark. Sir, what is a net worth? So net worth means first you take paid up share capital, you add free reserves, you add securities premium, you add credit balance in P&L. You add what? Credit balance in P&L. Okay, if it's a debit balance, you will minus it. You will get some figure. You will reduce accumulated losses. You will reduce deferred expenses. You will reduce miscellaneous expenses not written off. You get the figure of net worth. Paid up capital, add free reserves, add sec prem, add credit balance in P&L, less accumulated losses, less deferred expenses, less miscellaneous expenses not written off. You get a figure of net worth. Important May 23, November 23 ka exam question. Okay. Reserves created out of DAR. DAR has to be ignored. DAR has to be ignored. D is depreciation reserve, A amalgamation reserve, R revaluation of assets. Reserves created out of revaluation of assets, write back of depreciation and amalgamation should be ignored while calculating net worth. DAR has to be ignored. DAR has to be ignored. Next definition is called what? Officer in default, OID. So following are termed as OID. Number one, whole time director. Number two, KMP. Number three, there is no KMP, then such directors or directors as may be specified. Number one, whole time director. Number two, key managerial person. Number three, if there is no KMP, then such director or director as may be specified by the board in this behalf. If no such director is specified, then all the directors would be called as officer in default. Fourth, any person who is under immediate authority of the board of directors or is in charge with any responsibility. Sir, any director who is under immediate authority of board or KMP and is in charge with any responsibility. Fifth, any person on whose advice or instructions the board is accustomed to act. Exception, people of professional capacity. Like if a chartered accountant is giving some advice, so he is not OID because he is giving advice in a professional capacity. Sixth, every director who is aware of the contravention. Every director who is aware of the contravention. 7. In respect of issue or transfer of shares, who will be responsible? Share transfer agent, registrar, merchant banker. In respect of issue of shares or transfer of shares, who would be responsible? Share transfer agent, registrar, or the merchant banker. So this is the definition of OID. So net worth important, OID important, and listed company important. Sir, define what is a private company. Very simple. A private company is a company having minimum capital as may be prescribed with the following restrictions. What are the restrictions? That is TRP. Restriction on transferability of shares. R say restriction on membership. P. Prohibition on public issue. TRP. Restriction on transferability of shares. R. Restriction on membership. P. Prohibition on public issue. Now when we count membership, it is only 200, right? So when you count 200 members, two important rules. Employee member, ex-employee member should be excluded. Employee member, ex-employee member should be excluded. Joint shareholder should be counted as one. Very simple. TRP. Restriction on transferability of shares. R say restriction on membership. P say prohibition on public issue. Okay, employee member, ex-employee member should be excluded. Joint shareholder should be counted as one. Now when you talk about public company, sir, when you talk about public company is a company which is not a private company and having minimum paid up share capital as may be prescribed. A subsidiary of a public company will be deemed to be a public company for the purpose of this act, even though in its article it is still a private company. So a private company whose holding company is a public company, then this private company becomes what? A deemed public company. Deemed public company. Promoter. So promoter means a person who is named as a promoter in prospectus. This also came in the exam long back, or in annual return, or who has a control over the affairs of the company as a director or shareholder, or in accordance with whose direction or instruction the board is accustomed to act. Like if he is giving some instruction, he is a promoter. Except professional capacity, same point. A promoter is a person who is named as a promoter in the prospectus or annual return. Number 2, who has control over the affairs of the company as a director, or on whose directions, advice the board is accustomed to it, except professional capacity. Except professional capacity. Then, last definition, very important again. Small company, MCQ, descriptive, it can come in the exam. So, sir, small company is always a type of a private company having paid up share capital of less than or equal to 4 crore. Having paid up share capital of less than or equal to 4 crore and turnover of less than or equal to 40 crore and turnover of less than or equal to 40 crore. Paid up share capital less than or equal to 4 crore and turnover of less than or equal to 40 crore. 440, 440, 440. 4 and 40, 4 and 40, up to 4 crores and up to 40 crores. If the government want, they can increase this limit up to 10 crores. This limit can be increased up to 100 crores. Nothing in this clause shall apply to which company? Holding company, subsidiary company, section 8 company and company governed by special act. 4 types of company can never be a small company. Holding company, subsidiary company, section 8 company, company governed by special act. 4 types of company can never be a small company. Holding, subsidiary, section 8 and company governed by special act. Very important definition, small company. Cool hai? So we have completed all the definitional part. In case of 1 or 2 or maybe extra, I would have written in your notes. So please read those definition. But small company, listed company ka definition, promoter ka definition, OID ka definition, net worth ka definition, all these definitions are important. You will see those in paper. Cool. With this, your first chapter is completed. Done. Dividend. Okay. So the section numbers what we did was in this chapter was 123, 124, 125, 126, 127, 235, 91 and 51 as per the module. Minimum weightage 4 mark, it can go for 8 mark also. So dividend are of 2 kinds, final and interim. Final is proposed by board of directors, declared by members at AGM by passing ordinary resolution, correct? So there are 2 kinds of dividend, final and interim. Final is proposed by board, declared by board. recommended by board. Propose and recommend means the same. Price propose and recommend means the same. At AGM by passing OR, and that is by OR. Okay. Interim is proposed by board, declared by the board. At board meeting by passing board resolution. MCQ. All these are your MCQs. So sources. Section is 1, 2, 3. Sources 1, 2, 3. Section 1, 2, 3. Sources 1, 2, 3. Section 1, 2, 3. Sources 1, 2, 3. First source, free reserve. Current year's profit, previous year's profit, accumulated profit. But after providing depreciation and losses should also be set off. Third, money given by CG or SG if payment of dividend is guaranteed by CG or SG. Free reserves, current year's profit, previous year's profit, accumulated profit. But after providing depreciation, losses should also be set off. Money given by CG or SG if payment of dividend is guaranteed by CG or SG. In case of interim, so it is current year's profit and surplus in P&L account. Current year's profit and surplus in P&L account. Current year's profit and surplus in P&L account. Okay. This interim ka, so surplus in P&L account means opening balance of P&L. So the next point was transfer to reserve. It is voluntary. What do you say? Transfer to reserve is, guys, voluntary. Transfer to reserve is voluntary. If company is declaring 10% dividend, they have transferred to reserve 5% allowed, 3% allowed, 2% allowed, 1% allowed, not transfer allowed, because transfer to reserve is voluntary. Transfer to reserve is voluntary. The next section is very important, section 127. In the questions or in the module, if you see in our book also, maximum content is on section 127. All the questions are on 127. So dividend is declared at AGM. It should be paid within 30 days of declaration. Dividend is declared at AGM. It should be paid within 30 days of declaration. Okay, if 30 days have passed, that means section 127 is contravened. Company, you are liable for simple interest at the rate of 18% per annum. Company liable for simple interest at the rate of 18% per annum. Director 1000 rupees per day and maximum 2 years imprisonment. Director 1000 rupees per day, maximum 2 years ka imprisonment. However, penalty will not be levied in the following cases. First, no default of company. The code is DDLJD, no default of company. If there was no default of company will not pay the penalty. Number 2, directions given by shareholder could not be complied. And the same has been communicated to shareholder. Sir, whatever direction shareholder has given, like please do the ECS in my account, like direct credit, but ECS is getting bounced back due to some other bank issue, and the same has been communicated to shareholder, no penalty. L, operation of law. L is what? Operation of law. L is operation of law. J is jhagda means there is a dispute to receive dividend and the last point, amount is lawfully adjusted against any limit due by shareholder. So guys, the code is DDLJ, but there are 5 pointers. No default of company, direction given by shareholder could not be complied, and the same has been communicated to shareholder. L is what? Operation of law, and J is jhagda. Jhagda means dispute to receive dividend. And there's one more point, amount is lawfully adjusted against any limit due by shareholder. Next, dividend is declared at AGM. It should be claimed within 30 days. Dividend is declared at AGM. It should be claimed within 30 days. If 30 days have passed and investor have not claimed it, company, you will transfer the amount within 7 days after 30 days. Okay, to unpaid dividend account. Company will transfer the amount to unpaid dividend account. And in unpaid dividend account, it will stay for how many years? Sir, 7 years. It will stay for 7 years. Okay, if the company has transferred on 10th day, law says you have to transfer within 7 days, but you have transferred on 10th day. So day 8, day 9, day 10 ka delay. So 3 days ka delay, 12% interest. That interest will also go to the member. In the proportion of dividend. In unpaid dividend account, it will stay for 7 years. After 7 years, it will go to IPF. What is IPF? Investor Education Protection Fund. Sir, after 7 years, it will go to IPF. So to go to IPF, the days are 30 days. So this 30 days will be counted from after 7 years. Sir, you have to send money plus you have to send shares also. So money will go plus shares will also go to IPF. Can the investor claim the money? The answer is yes. Can the investor claim the shares? The answer is yes. You can claim the money also, you can claim the shares also. Acha, you have to apply to IEPFA. Investor Education Protection Fund Authority. If section 124 is contravened, what do we say? If section 124 is contravened, company, you are liable for 1 lakh rupees and 500 rupees per day. Company, you are liable for 1 lakh rupees plus 500 rupees per day, subject to maximum 10 lakh. If anything is 124 is contravened, important penalty, it can come in MCQ. 1 lakh rupees plus 500 per day, subject to maximum 10 lakh. 110. Officer 25,000 minimum 100 rupees per day subject to maximum 2 lakh. So in case there's a default 100 rupees per day subject to maximum 2 lakh. At the most company is liable for 10 lakh, at the most company is liable for 2 lakh. Clear? Okay, the next point, dividend declared should be less than or equal to proposed. Dividend declared should be less than or equal to proposed. Dividend declared should be less than or equal to proposed. Who will propose it? Board will propose it. Board recommends it. Board says it is 10%. We can give dividend this year. So members, you can't increase it. Either it can be same or you can reduce it. If you say I don't want to declare any dividend, it's absolutely okay, because 0 is less than or equal to proposed. Now whatever is the proposed thing, it is allowed. You can't increase. Members cannot increase the rate of dividend. Then revocation. So revocation means cancel. Once the dividend is declared, it cannot be revoked. Once the dividend is declared, it cannot be revoked. However, it can be revoked in two cases. One is ultra virus, other one is going concern affected. One is ultra virus, other one is going concern affected. Clear? Next, interim dividend. Interim dividend is recommended and declared by board at board meeting by passing board resolution. This we have done previously. Interim dividend is recommended and declared both by board at board meeting by board resolution. Okay. Out of current year's profit and surplus in P&L account. These are the two sources what we have done previously. Out of current year's profit and surplus in P&L account. In case company has losses, guys. In case the company has loss in the current year, up to the end of the quarter immediately preceding the date of declaration of interim dividend. Sir, what does this line mean? So for example, we are declaring the dividend on 15 July 23. April, May, June, I have loss. April, May, June, guys, I have a loss. But I want to declare interim dividend. So loss is, even though dividend is linked to profit, we are giving you the permission. You can declare the dividend. But boss, please take care of the rate. What is the rate? My rate of interim dividend should be less than or equal to average rate of last 3 years. My rate of interim dividend should be less than or equal to average rate of last 3 years. My rate of interim dividend should be less than or equal to average rate of last 3 years. My rate of interim dividend should be less than or equal to average rate of last 3 years. People who understand little Hindi, in my language you have studied in class. Dhanda kar, par ganda mat kar. Do the business, guys, do the business, but please take care of the rate. The amount of dividend, including interim dividend, should be deposited in a scheduled bank within 5 days of declaration. Very important MCQ. People generally forget this. Boss, once the company is declared, so the company should not use the money. They should deposit this money in a scheduled bank, and from there they will give the money. So to go to scheduled bank, the money should be deposited in a scheduled bank. The days are 5 days. Clear this much? Okay. This rule of 5 days is not applicable to a wholly owned government company. So it will be 5 plus 30 or all inclusive 30. 5 plus 30 all inclusive 30. It will be, sir, all inclusive 30. So 5 plus I did 25 more days. So from the date of declaration, it is 30 days. From the date of declaration, it is 5 days. So it is 5 you have to deposit in a scheduled bank. From there you will pay the money. So ideally you have only 25 days. Okay. Understood this concept? Then this rule of 5 days is not applicable to a wholly owned government company. Logic it is, wholly owned government company, who will declare? Members. Who will get the money? Members. So 100% members are declaring, 100% members will get the money. So why you want to keep it to a scheduled bank and then bring back again to the members? Because it is wholly owned government company, it's government owned. So what is not applicable? So this 5 days wala thing is not applicable. This 5 days wala thing is not applicable to a wholly owned government company. But can they declare dividend? Yes, sir. Can they pay it? Yes. So they have to pay within 30 days. But deposit in a scheduled bank and then paying from there, that is not allowed. That is not applicable to them. Okay, so they can pay it from their normal bank account. Interim dividend should be paid within 30 days of the board resolution, else there is a penalty plus exemption. What is the exemption, sir? DDLJ. Interim dividend should be paid within 30 days of board resolution, else there is a penalty plus exemption. Sir, what is the exemption? DDLJ. Same point. Okay. Then next section says closure of register. Oh guys, we have done a lot of sections here. If you remember sources ka section was 123, time limit ka section was 127, unpaid ka section was 124, IPF ka section is 125. So 123, 124, 125, 127, only 126 is pending. 1 to 3 sources, 1 to 4 unpaid, 1 to 5 IPF, 1 to 7 time limit. Again 1 to 3 sources, 1 to 4 unpaid, 1 to 5 IPF and 1 to 7 time limit. Some people will be saying, sir, do we need to remember section number? The answer is yes, you need to remember section number. You need to remember section number. Okay. Next section is section number 91. So generally what happens, I will sell the share today, so it will not get debited from my account today. Someone will buy tomorrow, but it will not be credited in his account in the same day. So the general time limit in a book is T plus 2, but practically we have moved on to T plus 1 now. T is trade day plus 1 day. Right now in books it is T plus 2 only, but in practical life, when you buy today, like for example today is Monday, I am buying it, the shares will get credited in my account by Tuesday. Okay, but in the book it is Monday plus 2 days. So company is confused to whom to pay dividend. So they close the book and they select one date. That date is called as record date. That date is called as what? Record date. So it says, it means the period during which the company lawfully refuses to accept the application for transfer of shares. That means you can buy and sell the share, but it will not be credited to you your demat account. But it will not be getting into your name, will not be getting into an ROM. So they close the register. So it can be closed. The register can be closed for maximum 45 days in a year. The register can be closed for maximum 45 days in a year and 30 days at any one time. Maximum 45 days in a year and 30 days at any one time. Maximum 45 days in a year and 30 days at any one time. So it is 30 plus 15. So continuously 30 days, entirely in a year 45 days. Okay, before closure of register, you have to give minimum 7 days ka notice. Before closure of register, you have to give minimum 7 days ka notice. Okay. If section 91 is contravened, then there is a penalty of rupees 5,000 per day subject to maximum 1 lakh. 5,000 rupees per day subject to maximum of 1 lakh. 5,000 rupees per day subject to maximum of 1 lakh. 5,000 rupees per day subject to maximum of 1 lakh. This is the penalty. Clear? Now, the next point, it says condition for paying dividend out of the past profit which are transferred to reserve. Out of the past profit which are transferred to reserve. Guys, the content is very important. Out of the past profit which are transferred to reserve. So, in the current year, we do not have money, or we have money but it is less money to pay the dividend. So what we do, we use the reserves. So current year's profit, previous year's profit, accumulate profit. If you remember the condition was given like this. So you can use the money, but there are certain conditions. Rule 3, 3 condition. Rule 3, 3 condition. In respect of inadequate profit or absence of profit. In respect of inadequate profit or absence of profit, company may declare dividend out of the past profit which are transferred to reserve. Which are transferred to reserve by complying with rule 3. By complying with rule 3, 3 conditions. Okay. What are the 3 conditions? My rate of dividend. ROD means rate of dividend. In your notes you must have written this. My rate of dividend should be less than or equal to my rate of dividend should be less than or equal to average rate. My rate of dividend should be less than or equal to average rate of last 3 years. My rate of dividend should be less than or equal to average rate of last 3 years. So do the business, but don't make it dirty. Very simple. Dhanda kar par gandha mat kar. When you had money, you had given lot of dividend. This time you don't have money, so please keep the rate as maximum. Whatever the rate, average rate you have given. The above limit shall not apply to a company which has not declared dividend in each of the last 3 years. So what does this line mean? See, we are in 23, so 22, no dividend, 0, 21, 0, 20, 0, 0 plus 0 plus 0 divided by 3, calci is 0. However, if you have declared dividend in any of the year, if you have declared the dividend in any of the year, then sir, this condition would be applicable. Imagine in 2 years you have given, so 0 plus 10% assume plus 14%, so 24 divided by 3. Always for average you will do it for 3 years. Imagine only in 1 year you have given, so 0 plus 10 divided by 3. Divide is always by 3. In the entire company cycle, you will take average of last 3 years. So condition 1 may not be applicable if you this proviso if you comply. And amount withdrawn from reserve. What will you say? Amount withdrawn from reserve should be less than or equal to 10% of the paid up capital and free reserve. Amount withdrawn from reserve should be less than or equal to 10% of paid up capital plus free reserve. Whatever amount you have withdrawn, first you will use to set off the losses. First you will use to set off the losses of the current year. And balance of reserve, guys, balance of reserves, balance we want should be always higher. So balance of reserves after withdrawal should be more than or equal to 15% of paid up capital. Balance of reserves after withdrawal should be more than or equal to 15% of paid up capital. Balance of reserves should be more than or equal to 15% of paid up capital. This can come in MCQ, this can come in descriptive, this can come in as solving sum also. We have done 2 questions in the class from our question book, from the question bank of our notes. Make sure you do it correctly. Both the questions are very important. First is less than equal to, and here it is more than equal to. Less than equal to, more than equal to. Clear? Then important point. In case the company has declared dividend out of the profits, but which is not transferred to reserve, that means we have not transferred to reserve, we have just carried forward opening balance of P&L, and you want to give dividend from that money, then the company can declare without any restriction. That means rule 3 is not applicable. That means rule 3 is not applicable. If imagine you are declaring the dividend from the past profit transferred to reserve, in year 2 you are using reserve, then condition 1 and 2 and 3 have to comply. But if you have earned the profit in the past year, but it is not gone to reserve, you have just carry forwarded opening balance of P&L, and you are giving money from the year. Instead of putting it reserve, here what you are doing, you are carry forwarding it here, right? And in the current year, in year 2, imagine this is year 2, you are giving dividend from here. So this is not current year's profit, this is past profit, but not transferred to reserve. Past profit not transferred to reserve. So you are giving dividend from here, sir, then no restrictions applicable. Without following rule 3, you can give the dividend. Clear? Then again one more point, rule 3 is not applicable to wholly owned government company. Rule 3 is not applicable to wholly owned government company, that is they can declare dividend out of the past profit which are transferred to reserve without any restriction. So they can declare dividend without any restriction. Understood? Very important concept. One section was pending, section 126. This talks about abeyance. Guys, 126 talk about abeyance. What does it says? So where any instrument of transfer of shares has been delivered to any company for registration. Practically it is very vague section because everything is now online. Imagine old times when there was one person who will sell the shares to another person, transferor, transferee. They will get into an agreement. The transferee will take the agreement to the company. Company, please register my shares. But it is not yet registered. In the meantime, company has declared the dividend. So what will happen? Company will transfer the amount of dividend. To unpaid dividend. They cannot give to transferor because his name is cancelled. They cannot give it to transferee because his name is not registered. Okay. So what will they do? They will transfer the amount of dividend to unpaid dividend account. Okay. However, unless authorized by the registered holder in writing to transfer to transferee. If AB, sir, if the transferor have said it to please transfer it to transferee, then it will go to transferee, or else it will be transferred to unpaid dividend account. In the meantime, they will keep in abeyance. In relation to such share. What? Any right shares or any bonus shares. Abeyance means to stop or to hold. They will keep in abeyance. That means it will kept on hold. Later on you can claim, but just till the time transfer formalities are over, you cannot claim the dividend, you cannot get the shares. Okay. Section is 126. So guys, we have completed all the sections. 235 was dividend includes interim dividend. 1 to 3 sources. 1 to 4 unpaid. 1 to 5 IPF. 1 to 6 abeyance. 1 to 7 time limit. I am going little quick. Again and again I am telling you in all the lectures, I am going little quick because it's a revision for your exam. So it will help you in your last revision and in 1.5 day revision. Okay. So dividend may be paid in cash or check or warrant or electronic mode. Dividend may be paid in cash or check or warrant or electronic mode, but it can't be paid in kind. MCQ, it can't be paid in kind. Dividend can be paid in cash, check, warrant or electronic mode. If a company fails to comply with section 73 and 74, that is prohibition on acceptance and repayment of public deposit, they shall not declare dividend so long as the failure continues. So what does this line mean? If you have taken money from public and you have not repaid them, now why you have not repaid? Because you don't have money. So you can't declare dividend till you have not rectified the default. Sources of IPF, section number is what? 125. Sources of IPF, section number is 125. So the code was Dadi is great. So IPF is a fund established by the central government. Money will come in this fund from following sources. Dadi is great. Unpaid dividend. D. A. Outstanding application money. D. Unpaid deposits. One more D. Unpaid debentures. I. Interest on above. Dadi is interest on investments made out of IPF. G. Grants donation from CGSG company financial institution. So the code is Dadi is great. Unpaid dividend, outstanding application money, unpaid deposits, unpaid debentures, interest on above, interest on investment made out of IPF, grants donation from CGSG company financial institution. Okay. Sir, where will they use? It's a theory answer they can ask you in the exam. Where will they use the money of IPF? Sir, refund of unclaimed dividend, natural deposits, debentures, application money due for refund. So whatever the sources you have studied here, DADD. So for refund of that. Okay. Second source is very easy. It's the name of the answer. Promotion of investor education, awareness and protection. Third, Distribution of any disgorged amount, that is compensation to eligible applicants and shares or debentures. So if any investor is aggrieved due to any reason, they will give money from IEPF. Fourth, reimbursement of legal expenses as per section 37-245. Ignore 37-245, just write reimbursement of legal expenses. And last, my favorite, any other purpose which is incidental. Any other purpose which is incidental. If you want to claim the money, where will you make application? If any person wants to claim money from IEPF, they have to apply to IEPFA. They have to apply to IEPFA, Investor Education Protection Fund Authority. They have to apply to IEPFA, Investor Education Protection Fund Authority. Clear, is it? Perfect. So chapter is done. Finish, over. Dividend chapter is over. Hi guys, what's up? Welcome to the class. So today what we are starting is, we are starting with a chapter called as charges. So minimum weightage 3 marks, it can go to 6 mark also. From last 3-4 attempt, it is coming compulsorily. I mean compulsory, it's coming for sure in the paper. It's not coming in question number 1. Yeah, you can find it in question number 4 or 5 approx. Okay. So charges. Whenever company takes a loan from a bank, they need to register. They will be giving some collateral. That collateral needs to be registered. The security needs to be registered with ROC. ROC means Registrar of Companies. That concept is called as charges. If you have heard the word mortgage, hypothecation, pledge. So mortgage is of immovable property, pledge is of movable property, hypothecation is also of movable property. In pledge, the possession gets shifted to the creditor. In hypothecation, the possession is with us only. The debtor. So whether it's a mortgage, whether it's a pledge, whether it's hypothecation, but you need to register that charge with the ROC and you need to disclose it. So the chapter in this section starts at 77, okay, and it would go, I think, till 77 to 87. First, explain the charges and the procedure for registration. Section number is what? 77. So very simple. Charge means an interest or a lien created on the property or assets or undertaking. You will always say PAU, P-A-U, property, assets, undertaking, or both, as a security and includes a mortgage. Okay. Now in the module, if you see, there are given the date before 2018, that's 2nd November 2018, and 2nd November 2018, after 2nd November 2018. See, old provisions are there because practically it is relevant, but for us in the exam, they will ask all the provision after 2/11/2018 only. So it says, if the charge is created on or after 0/2/11/2018, then you have to register the charge within 30 days along with the prescribed fees. Babu, yeah, within 30 days along with the prescribed fees. In form number CHG1 for all the assets and CHG9 for the debenture. DEBENTURE, 9 alphabets, debenture. Okay. If 30 days are over and you are Gajni, short-term memory loss, you forgot to register, then register it within the next 30 days, that is within 60 days from the date of creation with additional fees. So it is 30 days with the fees, next 30 days with additional fees, Okay, if it is not registered in the next 30 days, like still you forgot the next 30 days, then register within further period of 60 days with ad valorem fees. Ad valorem means like it is percentage of the property. Like if it is 1 crore property, 0.05% will be the fees. Who will decide that fees? ROC. So it's very simple. 30 fees, next 30 additional fees, next 60 ad valorem fees. 30, 60 fees, additional fees, ad valorem fees. MCQ. Okay. ROC will issue a certificate of charge in form number CHG2. We applied in CHG1. ROC will give a certificate in CHG2, which shall be a conclusive evidence that all requirements of charges have been complied with. If the charge is not registered within the actual 30 days and registered in the action period, the right of the lender or the charge holder shall not get affected. See, it is the obligation of the company to register it. That doesn't mean that if you have not registered it, bank will come to you and say, give me the money. What will you say? Sir, we have not registered the charge, so you forget the money. No, nothing will like this will happen. Banker right is there to claim the money. He will come and claim the money, whether you register it or whether you not register it, or whether you register it within the 30 days or within the next 30 or within the next 60 days. Okay, it does not affect the rights of the charge holder, that means the bank. If the charge was not registered, it shall not be taken into the accounts by the liquidator appointed under Companies Act. So what does this line mean? See, first obligation is always of the company. If company does not do it, will be doing in the next answer. Bank will register the charge. So why would bank be interested? See, because if the charge is not registered in case the company goes into liquidation. So if you have studied in accounts liquidation, there's something called liquidation estate, like all the assets are collected together and then sold out. If you remember the hierarchy, last में the money is given to the equity shareholder. The first priority, the topmost priority is always of the liquidator and liquidation expenses. The second is of the secure creditor. Your bank has got the security, so is a secure creditor, but that charge should be registered with ROC. If it is not registered with ROC, then the bank becomes unsecured creditor. So that's the bank is always behind us. Ki please register. If you are not registering, we will register it. So if bank has registered the charge, so the fees or the additional fees or the add valorem fees, whatever the bank has paid. So bank ka to it was not duty. So whatever expenses bank has incurred, it will claim from the company. Okay. Non-registration of charge will not impact the obligation for repayment of money. This we have discussed already. So it is your duty to register it. If you have not registered, that doesn't mean you will not give the bank money. Bank will come and claim the money. The only exception is at the time of liquidation. So you will get the, bank will get the money, but he will be an unsecured creditor. So that is the reason if company is not registering, then bank will register the charge. Okay. Then explain verification of instrument, evidencing creation or modification of charge. So when the charge is created, when you're giving a collateral, so bank and you will get into an agreement. That agreement ka copy who will sign? Every instrument evidencing creation or modification of charge shall be verified as follow. If the property is solely outside India, like proper outside, it should be signed by common seal if common seal is there, or a director, or a company secretary, or an authorized officer of a charge holder, means the bank, if bank is getting registered, or the person interested in the mortgage, means what? The purchaser, the buyer of the property. So if you have heard this word, that if the property is on loan, you can't sell it. But you can sell it with the permission of loan. So company says, okay, 1,000 crore property is there. Bank, we are selling it. Now imagine Mukesh Ambani, bank, a company selling it to Mukesh Ambani. So Mukesh Ambani will be the person who have taken the loan. So whoever is the owner of the property, like whoever is in the contract, the company, the bank, the buyer, everybody, it is your obligation to get it registered, and then you have to make it sign. Who will sign it? If common seal is there, common seal, or the director of a company, or a CS of a company, or an authorized officer of a charge holder, means the bank, and the purchaser of the property. Either of it can sign. If the property is partly or wholly in India, either in India or partly outside, partly in India, like on the border of India, Pakistan, for example, okay, it should be verified by the director or a CS or an authorized, that is, or the authorized officer of the charge holder. Only 3 people are here. Common seal is not there, buyer is not there. Okay. Section 77 we did for the registration, or 78. Procedure for registration by charge holder and bank ka procedure. If a company fails to register the charge, then the bank, the charge holder, will apply to ROC for registration. The ROC within 14 days of such application shall give the notice to the company. Hey company, bank has come for registration. You tell me why I should not register it. Explaining why charge should not be registered. Circle the word 14 days. 14 days is important MCQ. If the charge holder has registered the charge, all expenses can be recovered from the company, that is fees or additional fees, whatever it is. Clear? So 14 days is an important MCQ. Section 77 was duty of company to register. 78 charge holder. 79 modification. Sir, modification means alteration, changes. Anything change is called as modification. Sir, it means variation of any terms, including variation in rate of interest, either by mutual agreement or by operation of law, Then some examples of modifications are change in the terms and conditions, change in the limits, like loan ka amount is increase or decrease. Sir, ceding, that is to give up a pari passu charge. This is one point only. Ceding to give up a pari passu charge. Pari passu charge is always on the debentures. Then change in the rate of interest, we discussed it earlier. And partial release of the property or change in the repayment schedule. Whatever it is called as modification. Every company applying for modification shall apply in form number CHG1. ROC will give the certificate in CHG3. See, for creation, modification, the form number is CHG1. Registration certificate CHG2. Modification certificate CHG3. Form number MCQ for the purpose of MCQ. 77 done, 78 done, 79 done. Sir, 80. Date of notice of charge. Very important question. where any charge on a property assets under, that is POW, is registered under 77, then any person who is acquiring such POW shall have a notice, shall be deemed to have a notice of charge from which date? So from the date of such registration, from the date of such registration. What does this mean? If on 11th October 2021 company has taken a loan, okay, charge was registered under section 77, charge was registered under section 77, clear? Now imagine on 10th July 23 someone is buying the property, like buyer has come into the picture. So this section says the buyer will have a notice that the property is on loan and the charge is registered from the date of such registration, from the date of such creation. That means from which date? From this date, not from the date of buying the property. It will be assumed that you have a notice of charge from this particular date. See, ROC will not come and inform to everybody. It is your duty to check it. But it is your duty. So it will be assumed that you have a notice from which date? From the date of such registration. Section number 80. 77 company का duty, 78 charge holder का duty to register, 79 modification, 80 date of notice of charge, 81 very simple, register of charges, register of charges. The ROC shall keep a register containing details of charges for every company in such form, in such manner as may be prescribed. This register shall be open for inspection by any person on payment of such fees as may be prescribed. So it is ROC का duty to keep a register of charges. Sir, 82. Procedure for satisfaction of charge. Satisfaction means when the payment is done. Okay, so company has made the payment to the bank. So company shall inform number CHG4 to the ROC on payment or satisfaction in full within 30 days of such payment or satisfaction. So company will intimate to ROC inform number CHG4 within 30 days of payment or satisfaction. So a very important MCQ, the period of 30 days can be extended to 300 days. 300 days. The period of 30 days can be extended to 300 days from the date of such payment. So registration was 30 plus 30 plus 60. Satisfaction is 30 plus 300. On receipt of information, same point, ROC will now within 14 days of receipt come ask the charge holder as to why payment or satisfaction in full should not be recorded. So same point, within 14 days now here the ROC will go to the HDFC, I mean the bank. Hey bank, this company is saying that they have made the payment. You tell me why I should not register the satisfaction. Okay, no notice shall be sent if the intimation is given by the charge holder. Logical. If the charge holder, that means bank has only informed that I have got the payment. Why would the ROC will give notice to the? Why would the ROC will give a notice to the charge holder? If charge holder does not show cause, ROC will issue certificate of registration of satisfaction in form number CHG5. If show cause is shown, if given, ROC will inform the company about the same. So applied in CHG4, got the certificate in CHG5. Applied in CHG4, got the certificate in CHG5. Certificate, I mean application for registration was 1. Modification application was 1. Registration certificate was in 2. Modification was in 3. Satisfaction application 4. Certificate in 5. All form numbers need to be remembered. Then next, now, so power of ROC to make entries of satisfaction in absence of intimation from the company. So ideally in 82 we have done, it is a duty of the company to intimate. If the company has not intimated, someone else will intimate that someone else is basically the buyer of the property, If evidence is shown to the ROC, that the debt secured by the charge has been paid or satisfied in full or in part, or the property undertaking has been released or ceased to form part of the company's property, then ROC may enter in the register of charges a memorandum of satisfaction that the debt has been paid in whole or part, or the part of the property is released or ceased to form part of company's property or undertaking. So whatever line above you have studied, the same line you have to copy it here. Okay, the ROC will register it. This power can be exercised by ROC even if no intimation is received by him from the company. So it can be exercised by the ROC even if no intimation has been received from the company. That means someone else have informed. Someone else means what? The buyer. The ROC will inform the affected parties within 30 days of making the entry in the register of charges, the bank and the company, and ROC will issue same certificate in form number CHG5. So satisfaction certificate is CHG5 what we did. Here the only point is, can ROC do it? Yes, the ROC can do it on not intimation from the company but intimation from the buyer of the property. Section number 83. 84. Sir, intimation of appointment of receiver or manager. So what happens if company is not paying the money? Bank will take the possession of the property and bank will not keep the property with them. Bank will appoint someone to manage the property. That person is called as a receiver or manager. If a person obtains the order to appoint the receiver or manager of the property, or if any other person appoints such receiver or manager of the property, then he shall inform the company and the ROC about such appointment within 30 days of passing the order. So the person who is appointing has to intimate to the company and the ROC within 30 days. Okay. Any person appointed above, like imagine we have appointed Shah Rukh Khan. Okay. Any person appointed above on ceasing to hold such appointment shall give notice. Then when Shah Rukh Khan's work is over, he will intimate to the whom? To the ROC and to the company. The notice of appointment or cessation shall be given in form number CHG 6. So when you are appointing, file CHG 6 within 30 days. If the person's appointment is over, the work is over, the person will intimate to the ROC and the company in form number CHG 6. So 1 was registration, 2 was certificate, 3 was modification ka certificate, 4 was satisfaction ka application, 5 was satisfaction ka certificate, 6 was appointment or cessation of appointment of the receiver, CHG 6. Now, full time pass answer, company's register of charges. Every company shall keep at its register office a register of charges in form number CHG 7, which shall include such particulars as may be prescribed. In the previous section, what we did, it was a duty of the ROC to keep the register. Here, it is company ka duty to keep the register of charges, form number CHG 7. Then a copy of instrument creating the charge, like the loan agreement, should also be kept along with the register of charges. So, the register of charges में all the details, when you have taken a loan, what loan you have taken, what collateral you have given, date, okay, the period, everything will be written there, and the loan agreement ka copy also you should keep. Then, the register of charges and the instrument of charges. What it is? The register of charges and the instrument of charges shall be open for inspection during business hours by member creator without any fees. Member creator, no fees, you can bindas inspect it. But by any other person on payment of such fees as may be prescribed. By any other person on payment of such fees as may be prescribed. What is the prescribed fees? That is practically. Okay. So this is company's duty to maintain the register of charges, form number CHG 7. CHG 7. Section number is 85. Then very important answer, penalty for contravention. If any provision of this chapter is contravened, then company is liable for 5 lakhs and officer is liable for 50,000. Company is liable for 5 lakhs, officer is liable for 50,000. If any person furnishes false or incorrect information with respect to registration of charges, he would be liable under AK 47, that is section 447. Section 447. If any provision of this chapter is contravened, then company is liable for 5 lakh, officer is liable for 50,000. If any person furnishes false or incorrect information, he will be liable under section 447. Clear? Then rectification of charges. So rectification means the changes. What will happen here? If there's a mistake, you can change it. The CG on application file in form number CHG 8. The CG on an application file in form number, guys, CHG 8 may direct rectification of either omission, you have omitted something, or you have given some misstatement with respect to creation, modification, satisfaction of charge. So when you have given some application, either you have omitted some fact or you have given some wrong fact. So you can go to CG and make an application form number CHG 8. CG will give the direction to rectify it. Or direct extension of satisfaction of charge beyond 300 days from the date of such payment. Means, sir, if you remember, satisfaction ka intimation was 30 days, extended 300 days. If 300 days are over, still you have not intimated, so you have not contravened anything. I have made payment to the bank, right? Bank ka payment is done, but I need to release that charge ka thing. So I need to intimate to someone, right, to the ROC. So 300 days are over. So still you can go to to the CG and take extension of more days. So this 300, direct extension of days I have not given, and those extended days will be counted from the date of such payment. When you have made the payment, from that date the CG will give you extension. So in entire chapter, important MCQ, in the entire chapter, right from section 77 till 86, the authority was ROC. Only in section number 87, rectification order would be passed by CEG. Rectification order would be passed by CG. Okay. Now, these are the forms. It's written for your reference. CHG 1 is registration, CHG 2 is certificate of registration, CHG 3 is modification, CHG 4 is application for satisfaction, CHG 5 is certificate for satisfaction, CHG 6 receiver ka appointment and cessation, CHG 7 register of charges by the company, 8 rectification, 9 was debenture ka registration. Okay. Last important note, it shall be the duty of every company creating the charge, whether within India or outside India, whether property is in India or outside India, whether the loan is from within India or outside India, on any POW. POW means property asset undertaking, whether tangible or intangible, situated in India or outside India. Wherever the properties, wherever they have taken the loan on your POW, property asset undertaking, you shall register the particular charge as per section 77. Cool. 2 questions you have to refer it from the module, page number 6.22 of ICI module, question number 6 and 7. Those were little tricky questions. And guys, with this, we have completed with the charge chapter. Finish. 77, 72, 87. 9 forms are there. 30, 30, 60. Fees, additional fees, ad valorem fees. Satisfaction is 30 plus 300. And when ROC is informing that why I should not register the charge for the at the time of creation, why I should not register the satisfaction, the days are 14 days. Days are important for MCQ. For sure, you will see this chapter in 3 to 5 marks. Okay. Bye guys. Take care. Enjoy and aim for a rank or 70 plus, whichever is earlier. Bye. Hi guys. What's up? Welcome to the class. So today we are starting with a chapter called as Accounts of Company. Lot of limits are there. Lot of MCQs are there. Lot of case questions are there. Very interesting. Very easy chapter. Plus this is common with audit paper also. So all the students who are appearing for audit paper also, I will tell you which sections are relevant for audit. The content do remains the same. The sections, this chapter starts at section number 128 and it will go to 138. But out of all these sections, not every section is there in audit. Till 133 is there, 34, 35, 36, 37. 134, 135, 136, 137. These 4 sections are not there in audit. Rest every section is there in audit. Okay. My first section is section 130 that talks about internal audit. Sir, internal audit is applicable to every listed company and every public company and every private company. Applicable to every listed company, every public company and every private company. In public company, the code is DP-LE2. In listed, you never check the limit. It is directly applicable. In public company, the code is we have done DP-LE2. DP-LE2. D is what? Deposits. P is paid up share capital. L is loan. T is turnover. The figures are 25, double 50, double 100, double 200. In case of private company, the figures are LE2. Loans and turnover. Loans or turnover. All the figures are or. Okay. Then minimum 25, minimum 50, minimum 200, minimum 200. The thing to remember here is loan ka figure is exceeding 100 crores. The loan ka figure is what? Exceeding 100 crores. The loan ka figure is exceeding 100 crores. Cool. Now, also one more thing to remember, the figure of deposits and loan. The figure of deposits and loan to be seen at any point of time. All the data has to be seen for the last year ka 31st March. Paid up capital will be last year ka 31st March. Turnover will be last year 31st March. But deposits and loan will be last year ka at any point of time. All the data for this year ka applicability has to be seen for last year. Okay. Now internal auditor can be individual or a firm or a body corporate. Internal auditor can be a CA, CMA, other professional or employee of a company. Internal auditor can be anybody. Now appointment of internal auditor is done by the board at a board meeting through board resolution. Appointment of internal auditor is done by the board at board meeting through board resolution. The manner and interval of internal audit is prescribed by CG. What time, where to do, how to do, it will be prescribed by CG. So out of statutory audit and internal audit, internal stat audit is mandatory, internal audit is not mandatory. Internal audit becomes mandatory only when this section becomes applicable. That is section number 138 MCQ. Remember DP-LE2, there LE2. Deposits and loan has to be seen last year at any point of time. Loan ka figure is exceeding 100 crores. That means 100 crores and 1 rupee. 100 crores and 1 rupee. All the figures are or. Then section 133 talks about accounting standards. 133 talks about accounting standards. So whenever central government will bring accounting standards or Ind accounting standards, let's say Ind AS, okay, AS or Ind AS, it will be coming to section 133. It says CG will prescribe the accounting standards including any addendum. Addendum means any additions as recommended by the ICI in consultation with NAFRA. The CG will prescribe the accounting standard including any addendum means additions as recommended by ICI in consultation with NAFRA, National Financial Reporting Authority. Cool, very easy section, very simple section. Next section is section number 130. 130 and 131 both are linked. It says reopening of accounts. Accounts are closed, it is closed, now you want to reopen. So who can reopen? Company you can't itself reopen. Sir, persons eligible to reopen is Pandav. We generally say is Pandav. There were 5 Pandavs. CG, income tax, SEBI, any other regulator or body or any other person concerned. CG, income tax, SEBI, regulator or any other person concerned. However, they would need someone's approval. Who will give the approval? The court or tribunal. Who will give the approval? The court or tribunal. The five people can reopen the books: central government, income tax, SEBI, any other regulator or any other person concerned. But it should be approved by court or tribunal. What are the grounds? Sir, earlier accounts are prepared in a fraudulent manner. Earlier accounts were prepared in a fraudulent manner, or the affairs of a company were mismanaged, thereby casting a doubt on the reliability of FS. So what are the grounds? Earlier accounts were prepared in a fraudulent manner, or the affairs of a company were mismanaged, thereby casting a doubt on the reliability of FS. So if the central government income tax people have doubt that your accounts are prepared in a fraudulent manner, or that means they have the evidence, or they have a doubt on the reliability of the FS, then the accounts can be opened. So for how many years? It is same as section 120 will be doing in 128. So for any of the last 8 years. If CG have told the company to keep the books for more than 8 years, like for 10 years CG have told, so these people can open the books for any of the last 10 years. Okay, for any of the last 8 years. But if CG prescribes longer duration, then the BUA can be reopened for such longer period. This is section number 130. So what is 131? It is called as voluntary revision. Voluntary revision is in section 131. If company wants to revise the accounts, so voluntary revision can be done on two things. One is FS, other one is board report. One is FS, other one is board report. So voluntary revision can be done if there is a non-compliance of section 129, that is financial statement, or section 134, that is board report. If voluntary revision can be done, that is by the company itself, only if there is a non-compliance of section 129 or non-compliance of section 134. Now, so revision can be done in any of the last 3 years. Revision can be done in any of the last 3 years. Revision can be done only once for a financial year. Like for example, we are in 2021. So we can revise 1920, 1819, 1718. So we can revise any of the last 3 years, correct? Now imagine we have revised 1819. Now we move on to the next year, 2122. So the last 3 years would be 2021, 1920, 1819. Line says you can revise any of the last 3 years, but it can be done only once for a financial year. Now, in 21-22, can I revise 18-19? The answer is no, sir, because you have already revised this. A FS or a board report can be revised, but a revised FS or a board report cannot be re-revised. Sir, 131 is applicable only when FS is delivered to ROC, or it is given to the members or laid before the company in general meeting. It is delivered to ROC or sent to the members or laid before the company in general meeting. Then only if someone has got the FS and you want to revise, then only it is possible to revise. Okay, company will disclose that it's a revised FS or a revised board report. So what is the procedure? Company shall apply to the tribunal. Tribunal will make an application to CG or income tax, who will submit the representation. Tribunal will pass the order. Tribunal order copy shall be filed with ROC. Okay. 130, 131 again important question. You will revise it now. Read it again. Done? Now, question number 5. It says financial statements. Question number 5 is financial statements. Okay. Sir, section number is 129. What does financial statement means? Sir, P&L, balance sheet, cash flow, notes to account, and SOKI. SOKI means what? Statement of changes in equity. Balance sheet, P&L, cash flow, notes, and SOKI. Sir, all the FS should be prepared as per AS. If AS is not followed, then the fact should be disclosed. 3 things you will disclose it: the deviation, the reason, and the financial effect. The deviation, the reason, and the financial effect. And one thing you will follow always AS, one other thing you will follow Schedule 3. It is applied to all the companies. But Schedule 3 is not applicable to banking, insurance, electricity, or any other company prescribed by CG. For all the companies we follow Schedule 3, but Schedule 3 is not applicable to following companies. Sir, in case of OPC, small company, dormant company, startup, private company, very important MCQ. OPC, small, dormant, startup, private company is not required to prepare cash flow statement. OPC, small, dormant, startup, private company is not required to prepare cash flow statement. Then, the financial statement should give true and fair view, and it should be presented at general meeting to the members. If the company has subsidiary or associate or joint venture, then it should mandatorily prepare cash flow. It should mandatorily prepare consolidated financial statement. If you have a subsidiary, associate, joint venture, you have to prepare CFS. Exemption from CFS: A Limited, B Limited, C Limited. A has invested either 100% or 51%, and B has invested 51% in C Limited. This is Dadaji, this is Papa, this is the son. Okay, the grandfather, the father, and the son. So what will happen? A will do conso with B, B will do conso with C, correct? Ultimately, all the main conso will be done by A. That means B will not do the conso. So B is getting exemption. B will get the exemption when A has obtained NOC. Sorry, B has obtained NOC from all the members or one member. When B has obtained what? NOC from all the members or one member. Sir, who's all members and one member? So one member will come when A Limited is 100% holding in it. All members will come when it is 51%, because to the extent of 51 it is A Limited, rest 49 shares are held by someone else, and B is not a listed company, not wanting to get listed, and its ultimate holding company, that means the Dadaji prepared CFS. Then B is exempted from preparing CFS. B is exempted from preparing CFS. Sir, if 129 is contravened, it is imprisonment up to 1 year, fine minimum 50 or maximum 5 lakhs or both. 50 to 5 lakhs up to 1 year or both. Sir, who are the persons responsible? Managing Director, Whole-time Director of Finance, CFO, any person authorized by board, and all the directors in case of absence of any of the above. Sir, Managing Director, Whole-time Director of Finance, CFO, any person authorized by board, or all the directors in case of absence of any of the above. So what is the section number? 129. So you will go through it. 129, financial statements. Done? Now, sir, question number 6, books of accounts. Section number is 128. So, how would you get proper books when it is giving true and fair view and kept on accrual basis and on double entry system? So, no company is exempted to keep books on cash basis. All the companies in India, including Section 8 company, it is an MCQ, a small question. Can a Section 8 company keeps book on cash basis? The answer is no. It should be kept on true and fair and an accrual basis on double entry system. Sir, BUA includes all these things. Details of assets and liabilities, purchase and sales, income and expenses, and cost records. Details of assets and liabilities, purchase and sales, income, expenses, and cost records. Now, so where should the BUA be kept? So, BUA should be kept at register office or any other place in India. Okay, BUA should be kept at register office or any other place in India. Okay, when you're shifting it to BUA to any other place other than register office, board will pass a board resolution. Board will pass a board resolution, intimate to ROC in form number AOC5. Intimate to ROC in form number AOC5 within 7 days of passing BR. Within 7 days of passing BR, it should be kept at register office or any other place in India. Board should pass a board resolution. It should be intimate to ROC in form number AOC5 within 7 days of passing board resolution. Can I keep my BUA at BR? The answer is yes. Can I keep my BUA at London? The answer is no. Why? Sir, the books should be kept at any place in India. However, can I keep my branch, if I have a branch in London, can I keep my BUA at London branch? The answer is yes. But that branch should send summarized return at the register office at quarterly intervals. So branch ka BUA can be in foreign, but main BUA of the company cannot be in foreign. Electronic record. It should remain accessible in India for subsequent reference. It should remain completely in the original format in which they were received. It should be in legible form. There should be proper system for retrieval, storage, display, printout. At the time of filing annual financial statement to ROC, annual financial statement, that means once in a year. Following details should be given: name of the service provider, IP address of the service provider, location of the service provider, address of the cloud. So these 4 things were already there. Fifth, it came as an addition where service provider is located outside India. The name and address of person in control of books of accounts in India. Where the service provider is located outside India, name and address of the person in control of books of accounts in India. So BUA should be kept for last 8 years. Okay, if the company is in existence for only 2.5 years, then 2.5 years. CG says keep the BUA for 10 years, then for 10 years. Sir, inspection of BUA. It should be done by the directors. It can be done only by the directors. It can be done only by the directors. Inspection of BUA can be done only by the directors at the register office or any other place in India. In case of foreign financial information, director you can't inspect. Director will give a request to the company. Company will give the information within 15 days, the period and the information. Director will give a request stating the period and information. Company will complete the request within 15 days. In case of subsidiary, you cannot inspect the BUA. But if board resolution is passed by the holding company, then you can inspect the BUA. If board resolution is passed by the holding company, then you can inspect BUA. If section 128 is contravened, same penalty, 50,000 to maximum 5 lakhs. In 129, imprisonment was also there, but here it is not there. Same people, MD, WD, CFO, any person authorized by board. There all the directors were also there, but first 4 is same. No member can inspect the BUA. No member can inspect the BUA. Only a director can inspect the BUA. Okay, no agent of the director can inspect BUA. No agent of the director, only the director can inspect BUA. With effect from 1st April 23, every company shall use only those accounting software which has a feature of audit trail, that is a sequence, creating edit log of each change made in the BUA. Like when if you're making any entry, if you pass the entry in September, you are sitting in November now, and if you want to make any changes, you can make changes, but that changes should be reflected in that software. What changes you have made, the date and the time. It is called edit log facility. In auditing language, we call this as audit trail. Okay. Read question number 6. Done? Now, circulation of financial statements, section number is 136. The financial statements, including consolidated financial statements, audit report and other documents, should be circulated to Malti. Malti means member, auditor, official assignee in case of insolvent, legal representative of deceased member, TSA, trustee of debenture holders, at least 21 days before the general meeting. In case of section 8 company, it is 14 days. In case of section 8 company, it is 14 days. Now, the above document should be sent in less than 21 days. In case of a company having, like for example, the general rule is 21 days. But if you want to send only in 10 days ka gap, 10 days ka gap, or 15 days ka gap. So in case of a company having share capital, who will give the approval? Majority number and holding minimum 95% of the paid up share capital of the company. Out of 100 people, 51 people should say yes, and their holding should be minimum 95%. In case of a guarantee company, member holding 95% of the total voting power should give approve. Then you can send the FS, CFS and other documents in less than 21 days. Then, member or trustee of debenture holder can inspect the financial statement at the register office during business hours. Member cannot inspect the BUA, but he can inspect the FS. In case the company does not allow the inspection, company liable for 25,000, officer for 5,000. Company for 25,000, officer for 5,000. In case of a listed company, the above document shall be available for inspection at the register office during business hours for 21 days. During business hours. Achha, listed company can send summarized financial statements, but if a shareholder is there, he says no, I want full FS, then you will give them full FS. In summarize, what it will contain? Salient features in form number AOC3, AOC means accounts of company, and other documents. It will be sent to the member or trustee of debenture holder, but only a listed company can send summarized FS. Okay. Special point, very important. In case of a listed company and in case of a public company. In case of a listed company, in case of a public company, having net worth of more than 1 crore, it will be and turnover of more than 10 crore, and turnover of more than 10 crore. Here she has missed this. And in case of a listed company or in case of a public company net worth more than 1 crore and turnover more than 10 crore, these companies can send FS through email if shareholders have given their email ID. Okay, if shareholder has not given email ID in the demat, if he has requested specifically, then through email. And if they have not given email ID, they will be sending through physically. Company will be sending through physically. This benefit is given only to these two companies. Listed company and public company having net worth of more than 1 crore and turnover of more than 10 crore. Sir, is it mandatory for them? No. If they want, they can send. They only can send through email. Rest other companies which are not falling in this category have to send it physically. Then, website by listed company. In case of a listed company, the FS including CFS and the subsidiary separate FS should be uploaded on the website if any. If listed company has a foreign subsidiary, and that foreign subsidiary has prepared the CFS as per the laws of foreign country, that means in that language, and that if that CFS is placed on the website, it will be allowed. Sorry, if listed company is a foreign subsidiary, if our company is a foreign subsidiary and that foreign subsidiary has prepared the CFS as per the laws of foreign country, and if that CFS is placed on the website, it will be allowed. You are not giving separate FS, you are just uploading the CFS, it is allowed. If foreign subsidiary is not required to get its accounts audited as per the laws of that country, then still the Indian holding company shall prepare CFS, place on the website, give it to ROC, that unaudited FS. So still you will give your subsidiary FS to the ROC, place it on the website and give it to the members. Requirements will be there even though they are not required to do audit. That is section 136, circulation of FS. If you have circulated, then file it with ROC also. Section number is 137. What it says? So the FS including CFS, other documents should be delivered to ROC. AGM is conducted and FS are adopted. Within 30 days of AGM, inform number AOC4. Within 30 days of AGM, inform number AOC4. Sir, if AGM is conducted but the FS is not adopted, such unadopted FS should be filed with ROC within 30 days of AGM. ROC will treat them provisional. Then the AGM will be adjourned, and at that adjourned AGM, the FS will be adopted. Still you will file again to ROC, inform number AOC4 within 30 days. So you will file double. One provisional, other one actual. Sir, what if AGM only is not conducted? So the FS plus other documents should be filed along with the fact of not holding AGM
and along with the reason. The FS, other documents, the fact of not holding AGM and reason should be filed with ROC within 30 days from the last date on which the AGM should have been held. From the last date on which AGM should have been held. In simple words, every time we will file it with ROC. Every time we will file it with ROC. In case of OPC, you will file it within 180 days from the closure of financial year. In case of OPC, you will file it within 180 days from the closure of financial year. So, if section 137 is contravened, who are the persons responsible? The company, the MD and CFO. If MD is not there or CFO is not there, then any director who is authorized. If such authorization is not there, then all the directors of a company. Company, MD and CFO. If MD, CFO is not there, any director is authorized. If such authorization is also not there, then all the directors of a company. So what is the penalty? Company is liable for 10,000, 100 rupees per day subject to maximum 2 lakhs. Officer 10,000 rupees, 100 rupees per day subject to maximum 50,000. Subject to maximum 50,000. Penalty is important. XBRL, Extensible Business Reporting Language. Normal companies file AOC4, but this companies file AOC4 XBRL. Listed companies and their Indian subsidiaries. A company having paid up capital of minimum 5 crores, that means both public private. A company having turnover of minimum 100 crore, public private both. Or a company is required to prepare FS as per Ind AS. They will not file AOC4, they will file AOC4 XBRL. However, banking, insurance, power sector, housing finance, NBFC is exempt from XBRL. If you fall in this category but you are banking, insurance, electricity, housing finance and NBFC, you are exempt from XBRL. Cool? Read. 137, little important. Read. Question number 9. Okay. Babu, yeah. Explain NAFRA, National Financial Reporting Authority. The CG will constitute NAFRA, comprising of a chairman and 15 other members. The chairman and the members should not have any relation with the audit firm, including any related consultancy firm, during the course of their appointment and 2 years after ceasing to hold such appointment. 2 years, your MCQ. If a professional or other misconduct is proved, then NAFRA will order for penalty on the CA firms. How much? In case of individual, 1 lakh, max 5 times of the remuneration. In case of a CA firm, 5 lakhs, maximum 10 times of the remuneration. Individual, minimum 1 lakh, max 5 times of remuneration. In case of a firm, minimum 5 lakhs, maximum 10 times of the remuneration. And he will be debarred. NAFRA will debar the member of the firm for minimum 6 months, maximum 10 years. To be an auditor, internal auditor, or undertaking any audit in respect of FS or internal audit of any activities of a company or a registered valuer under section 257. You can't become internal auditor, you can't become stat auditor, you can't do any audit, you will be debarred for minimum 6 months, maximum 10 years. Then, NAFRA has a power to investigate the auditors of following class of companies. NAFRA will not investigate these companies. NAFRA will investigate the stat auditor of these companies. First, listed company, whether in India or outside India. Unlisted company having paid up capital minimum 500 crores or turnover minimum 1000 crores or loans, deposit, debentures minimum 500 crores. Capital 500 crores, turnover 1000 crores, loans, deposits, debenture minimum 500 crores. All the 3 data has to be seen on 31st March of last year. Banking company, insurance company, electricity company, special act wala companies. Fourth, any other company prescribed by CG. Then, foreign subsidiary or foreign associates of 1 to 4 if the income of such foreign subsidiary or associate is more than 20% of consolidated income or net worth is more than 20% of consolidated net worth. NAFRA will not investigate this company. NAFRA will investigate the statutory auditor of this companies. NAFRA can come in the exam as MCQ. Then, question number 10, signing of FS and board report. So, FS section number is 134. FS should be signed if chairman is authorized by the chairman. If chairman is not authorized, then 2 directors out of which 1 should be MD. 2 directors out of which 1 should be MD and CEO, CFO, CS wherever they are appointed. If chairman is authorized, then chairman. If chairman is not authorized, then 2 directors out of which 1 should be MD and CEO, CFO, CS wherever they are appointed. In case of OPC, it should be signed by 1 director who is a sole member of OPC. Then, signing of board report. If chairman is authorized, then chairman. If chairman is not authorized, then 2 directors out of which 1 should be MD. Similar, and or a CEO, CFO, CS is not there. That was for the FS signing. This is for the board report signing. In case of OPC, who will sign it? Only 1 director will sign it. Then, contents of board report and DRS, you will do it from your book. It can come as a descriptive, very rare, because paper mein we cannot trust anything. In case if you want to read contents of board report, we have marked in the book. People have studied from different teacher. Please mark any 6-7 points of your choice. DRS mein 6 points are there. What is DRS? Director's responsibility statement. It can come as a direct question. Write the contents of DRS. Okay. Last section, CSR, corporate social responsibility. It is applicable to every company. Here you will have to check for every company, listed, public, private. For everywhere you have to check the data. Listed company mein, in other sections you don't check the data, but only for this section we check for listed also. Net profit minimum 5 crores or net worth minimum 500 crores, turnover minimum 1000 crores, 500,000. Net profit or net worth or turnover in the last year. So net profit means what? Profit from overseas branches, whether operating as a separate company or otherwise. Dividend received from company in India, for which section 135 is applicable. Net profit will include everything except these 2 things in the question if you find it. Profit from overseas branches, whether operating as a separate company or otherwise. Dividend received from other companies in India, where section 135 is applicable. So those will not be included in net profit calculation. If 135 is applicable, you will constitute CSR committee. In committee, minimum 3 directors, out of which 1 should be independent directors. If ID is not there, then minimum 2 directors. Private company with 2 directors, in the committee only 2 directors would be there. 3 directors, 1 should be ID. If ID is not there, then minimum 2 directors. Private company with 2 directors, then minimum 2 directors. Then, if CSR amount is up to rupees 50 lakhs, no CSR committee is required. If CSR amount is only up to 50 lakh rupees, then no CSR committee is required. Duties of CSR committee, it should be as per schedule 7. duties of CSR committee and activities as per schedule 7. You have to read it from the book, you can skip that point. Very important, following activities are not CSR. These 5 activities you can do, but this is not CSR. Activities undertaken outside India, donation to political parties, activities taken in normal course of business, activities taken for employees and their families, activities not as per schedule 7. These activities you can do, there is no prohibition, but this will not be counted as CSR expenditure. So how you should spend? So CSR activity should be spent as per company CSR policy, either through section 8 companies or a registered trust, which is established either by the company, either singly or with other companies, or either by section 8 company registered trust society established by CGSG. There is no condition. However, you can collaborate with other section 8 companies or registered trust or society, but those section 8 those trust, those society should have minimum 3 years ka track record. If it is your own or if it is of government, no condition. But it is a private trust, like for example Being Human or Reliance Foundation. It's a private trust or private society or private section company. If you want to collaborate with them, so they should have a track record of doing CSR of minimum 3 years. Minimum 3 years. One company can combine with other company for CSR, like my company and Baby Limited. We both can combine together and do CSR. But the report would be given separately. Report would be given separately. CSR should be spent as per company CSR policy or project or program. Then company can build its own CSR capacities along with the agencies having a track record of minimum 3 years. Like I can have my own section 8 company for CSR, or I can collaborate with like any other agency, like let's together build a CSR capacity. Those agencies should have minimum 3 years ka track records. Now employees will be working. My administrative overheads can be maximum 5% of total CSR expenditure in one financial year. My admin overheads can be max 5% of the total CSR expenditure in one financial year. Sir, how much I have to spend? Minimum 2% of average net profit of last 3 years. However, I can give local area ko preference. If my company is incorporated for less than 3 years, I will do average net profit of the immediately preceding years, like 2 years ka average you will take. Okay. Sir, in case of foreign company, is it applicable? The answer is yes, if it falls within the limit. Committee may minimum 2 directors, out of which one would be authorized person, like scrape wala AA, authorized person. One would be nominated by foreign company. The other would be nominated by foreign company. If a company spends on amounts in excess of requirement, that is more than 2%, then such company may set off the excess amount against the requirement to be spent in such number of accounting years as may be prescribed, and they have prescribed it can be adjusted in the next 3 years. If you have spent 2.5%, that 0.5 is extra, you can adjust in the next 3 years. But here you will write as may be prescribed. If a company fails to spend minimum 2%, like 1.8 you have spent, 0.2 is pending, then it shall specify the reason for not spending in the board report, and if the amount relates to an ongoing project, like we are constructing a Sulabh Shauchalaya, public toilet, okay, then it should transfer minimum within 30 days of the close of financial year to unspent CSR account in a scheduled bank for 3 years. From there you will use it for next 3 years. If in 3 years the amount is not spent, then within 30 days from the completion of the 3rd year, you will transfer it to CSR fund under schedule 7. Here, if it is not related to any ongoing project, we were distributing blankets but we could not get any poor people, whatever is the unspent CSR fund, you will unspent CSR amount, you will transfer it to unspent CSR fund within 6 months from the close of the financial year. Within 6 months from the close of the financial year, this CSR fund is as per schedule 7. If 0.6 and 9 is contravened, 0.6 and 9 is contravened, 6 is what you have not spent minimum 2%, 9 you have not transferred it, then company twice the amount to be transferred or rupees 1 crore, whichever is less, this will be the penalty amount. Officer, 1/10, that is 10% of the amount to be transferred to CSR, or rupees 2 lakhs, whichever is less. This is the penalty. Section 135 is crucial. Lot of MCQs, lot of small pointers are there. Applicability, spending, set off, transferring, anything can come. Understood the chapter? Cool. So we have done 128 to 138 accounts of company. 34, 35, 36, 37, leaving this 4 section. Rest every section is applicable in audit paper also, guys. Aim for a rank or 70 plus, whichever is earlier. Bye guys, take care, enjoy. Hi guys, welcome back to the class. So we are doing now audit and auditors. Okay? Now the chapter starts at 139 to the section goes to 148. 139 to 148. It's a common chapter with audit paper. So all those people who are appearing for audit, guys, please deposit 2 rupees in the Swiss Bank account. Okay. My first section is 277 relatives. This you have to refer to the nature of company vulnerability. We have done the definition of relatives. It's important. It will be useful in audit paper. Then signing off audit report. Section number is what? 145. So the person appointed as an auditor shall sign the audit report. If a firm is appointed, then CAs who are partners and holding COP, can sign the audit report. If a firm is appointed, then the CAs who are the partners and holding COP can sign the audit report. Okay. Section number 145. Penalty, very important, can come in as an MCQ in audit paper also, in law paper also. Penalty, section number 147. In case company has contravened, then if company contravenes section 139 to 146, if a company contravenes section 139 to 146, minimum penalty 25,000, maximum 5 lakhs, minimum 25, maximum 5 lakhs, officer 10,000 to 1 lakh, officer 10,000 to 1 lakh. In case if auditor is contravening, 3 section 139, 144, 145, it came in the exam. 139 is appointment, 144 is prohibited service, 145 signing of audit report. Normally the penalty, this penalty is same, 25,000 to 5 lakhs, and besides 5 lakhs is 4 times the remuneration, whichever is less. So minimum is 25, maximum 5 lakhs or 4 times the remuneration, whichever is less. Then the range will be decided, and depending upon the range, then the ROC will levy the penalty. If willfully, purposely, if you have contravened the section, imprisonment up to 1 year, or minimum 50,000, maximum 25 lakhs, or 8 times the remuneration, or both. Imprisonment up to 1 year, or minimum 50,000, maximum 25 lakhs, or 8 times the remuneration, whichever is less, or both. Then section number is 144. It says prohibited services. The code is Mardi. Mardi how many times? 3 times. So the code is Mardi. That means an auditor cannot render the services. See, the prohibition is not on the services. The prohibition is where you are the stat auditor, you cannot render these services. The prohibition is not on these services. The prohibition is on where you are, where you cannot, where you are the stat auditor, you cannot render these services. M. Management consultancy services. A. Accounts and bookkeeping. A. Actual services. R. Rendering of outsourced financial services. D. Design and implementation of financial information system. I. Internal audit. I. Investment advisory. I. Investment banking. I can definitely do these services. I can definitely give these services. But if I am giving these services, I can't become the stat auditor in the same company and in the entire group. Okay. Then qualification. Sir, for an individual to be an auditor, he should be a chartered accountant holding certificate of practice issued by ICAI. For a firm, majority of partners. For a firm, majority of partners should be CA plus COP. Sir, disqualification. Very important in the exam, you will find only the question on this. Sir, A. So 141 subsection 3, disqualification. A to I. A. A body corporate is disqualified. A body corporate other than LLP. That means LLP is qualified. B. Officer or employee body corporate is disqualified. Third, partner or employee of officer or employee body corporate is disqualified. D. A person or a firm or a relative. Person, firm or relative is holding any security. Any security means any security. 1 rupee ka share if you are holding, debenture holding, preferential holding, anything you are holding, call, put, derivative, anything you are holding, you are disqualified. In case of relatives, you can hold up to 1 lakh rupees. If relatives are holding up to 1 lakh rupees, then the person is qualified. If it is more than 1 lakh, the person is disqualified. Up to 1 lakh is qualified. Okay, if the relative was holding 80,000, I became the auditor then. Now, what happened? Relative bought some more share, 1,20,000. Then I became disqualified. So I am not immediately disqualified. I will be given days. How many days will I be given? 60 days to take corrective action. 60 days to corrective action. MCQ. Indebtedness more than 5 lakhs. Guarantee more than 1 lakh. Indebtedness more than 5 lakh. Guarantee more than 1 lakh. In which company, guys? In Chas company. Company holding associate subsidiary of such holding. Company holding associate subsidiary of such holding company. Then a person or a firm who's having business relationship. A person or a firm who's having business relationship with Chas is disqualified. There are 2 exceptions. So if you are rendering professional services, at ALP means arm's length price, where at HATA means hotels, airlines, telecommunication, hospitals, any other. Hotels, airlines, telecommunication, hospital, any other. Then F. A person whose relative is a director or KMP in the company. A person whose relative is a director or KMP in the company, you are disqualified. If my wife is a director in Baby Limited, I can't audit Baby Limited because my relative is a director or key MP, key manager person in the company. You can audit only maximum 20 companies. If it is more than 20 companies, that is 21 companies, you are disqualified for 21st. Sir, in 20 ka limit, 4 companies will not be included. That means it will be excluded. OPC, small company, dormant company, and a private company having paid up capital less than 100 crores. OPC, small, dormant, private company having paid up capital less than 100 crores. Okay. Then, sir, convicted for frauds, 10 years have not elapsed from the expiry of conviction. convicted for frauds and 10 years have not elapsed from the expiry of conviction, so you are disqualified. And if you are rendering section 144 services, okay, so that is prohibited service. So A to I, if you are getting attracted, you are disqualified. Other than A to I, you are qualified. Always remember, if I am disqualified in a holding company, I am disqualified in the entire group. Or if I am disqualified in a subsidiary company, I am disqualified in the holding in the entire group. This has to be seen only in CHAS. CHAS has to be seen only in DAI. Guys, CHAS has to be seen only in DAI. So D is what? D is this one. Security indebtedness guarantee. E. So E is business relationship. E is business relationship. And I is what? Prohibited services. CHAS has to be seen only in DAI. If I am disqualified in a subsidiary company, I am disqualified in the entire group. This has to be seen only in DIE. Clear? Section 141(3). Then remuneration of the auditor. This also came in the exam. Section number is 142. First auditor remuneration will be decided by the board of directors. Subsequent auditor will be decided by the members in general meeting. However, the members can delegate it to the board. Delegate means they can transfer it. Then the auditor can reduce his fees, but he cannot reduce the scope. If he has reduced the scope, he will be guilty of professional misconduct. He will be guilty of professional misconduct. Clear this much? Then auditor branches is the direct question. You will read it from the main book, whatever notes you have been given. People have studied from different teacher. Guys, refer your question, your module or your teacher book for audit of branches. There's a point here. If I am the stat auditor, I can audit head office, local branch, foreign branch. If I am not going for local branch, company will appoint another person who will be CA plus COP. If I am not going for foreign branch, the company will appoint another auditor who will be qualified as per foreign law. Who would be qualified as per foreign law. That was a twist there. Okay. Then appointment of auditor. Section number is 139. To enter into the company, the section number is 139. To go out of the company, the section number is 140. First auditor ka remuneration. First auditor ka appointment. Okay. In case of a government company, non-government company. Okay. First auditor. So, CAG will appoint within 60 days from registration. If the CAG fails, then board within 30 days. If the board fails, member within 60 days at EGM. And he will be the auditor till first AGM. It is 60, 30, 60. 60, 30, 60. 60, 30, 60. Then, in case of non-government company, board will appoint the first auditor within 30 days from registration. If the board fails, then members within 90 days at EGM. And he will be the auditor till first AGM. He will be the auditor till first AGM. 30 and 90. 60, 30, 60, 30 and 90. 60, 30, 60, 30 and 90. Clear? So it is 30 and 90 at EGM, and he will be the auditor till first AGM. Then subsequent auditor. In case of a government company, he is appointed by CAG within 180 days from the commencement of financial, and he will be the auditor till the next AGM. 180 days. Okay. In case of government company. So in case of a non-government company, this is, guys, very important. He will be appointed by the members at the first AGM by passing OR, and he will be the auditor till 6th AGM and thereafter. 1 to 2, 2 to 3, 3 to 4, 4 to 5, 5 to 6. Sir, he will be again, he will be appointed by the members at the first AGM by passing OR, and he will be the auditor till 6th AGM and thereafter. Individual is appointed for 5 years, and for a firm is appointed for 2 terms of 5 years each. Individual is appointed for 5 years, firm is appointed for 2 terms of 5 years each. Company will ask for a declaration from the auditor, and he will give a declaration that he is not disqualified under section 141(3) A to I. In the book, there's a contents of certificate. Please do that answer very importantly, because they have asked in the exam what are the contents of certificate to be given by the auditor when he is getting appointed. We have marked in the notes. Okay. Company will file with ROC ADT1 one number ADT1 for the appointment within 15 days of appointment. ADT1 15 days. Okay, 15 days of appointment. Then casual vacancy. Sir, in case of a government company, casual vacancy will be filled by the CAG within 30 days. If the CAG fails, then board will fill within 30 days, and he will be the auditor till next AGM. In case of non-government company, if the reason is resignation, it's a very, very big thing. So board will appoint within 30 days of casual vacancy. In case of other reason, disqualification, insanity, incapacity, same point. Board will appoint within 30 days of casual vacancy. But in case of resignation, members will confirm the appointment within 3 months. This is not applicable here. He is auditor till next AGM. He is auditor till next AGM. This is casual vacancy. Then reappointment of retiring auditor. So he will be appointed in the 3 cases. If my auditor ka term is completed, he is called as retiring auditor. So when will the term complete? In case of individual, 5 years. In case of firm, the 10 years. Okay. Now, if the term is completed, he will be reappointed. In case he falls in ABC, That means if he is not disqualified, if he has not resigned, or no new auditor is appointed. If the auditor, if my retiring auditor, that means a person whose term is completed is not disqualified, has not resigned, or no new auditor is appointed, then the person can be reappointed. Then rotation of the auditor. In case of a listed company, rotation is not applicable to everybody. It is applicable to every listed company, every public company having capital of 10 crores, every private company having capital of 50 crores, or others where the paid up capital is less, but loans or borrowing is more than or equal to 50 crores. So listed, public, private, others, listed, public, private, others, listed, public, private, others. The figures are 0, 10, 50, 50, 0, 10, 50, 50, 0, 10, 50, 50, 0, 10, 50, 50. Listed, public, private, others, 0, 10, 50, 50. Listed, public, private, others, 0, 10, 50, 50. This you need to remember. Okay. It is not applicable to OPC, small company, IFSC, public and private company. IFSC means International Financial Service Center company. Individual will be appointed for 5 years, firm will be appointed for 2 terms of 5 years each. Individual appointed for 5 years, he will chill for how many years? 5 years. Firm is appointed for 2 terms of 5 years each, he will chill for 5 years. 5 years, 5 years, 10 years, 5 years. Cooling period is 5 years. Clear? Hi guys, what's up? Welcome to the class. I was recording it auditors, and then something happened in the system, so I had to stop in between. So that's the reason you will see a little change in the video. So we were doing rotation, that was the last answer I was teaching, and then I stopped in between. Apology for that. Apology. Okay. So guys, rotation of auditor is applicable to every listed company. So my auditor will work for 5 years, then he will chill for 5 years. It is called as rotation of auditors. Well, for a firm, he will work for 2 terms of 5 years each, and then he will be disqualified for 5 years. Okay? That means my auditor should not come again. This rule is not applicable to every company. It's applicable to few categories of company. Number 1 is listed company. Number 2 is unlisted public company. Number 3 is private company. 4th is others. 0, 10, 50, 50, 0, 10, 50, 50, 0, 10, 50, 50. Listed, it is directly applicable. Unlisted mein, it is minimum paid up capital is 10 crores, and private mein minimum paid up share capital is minimum 50 crores, and others mein, that means an unlisted public company or a private company where the paid up share capital is less. Paid up share capital is less, but loans or borrowings is minimum 50 crores. Loans or borrowing is minimum 50 crores. Listed method is directly applicable. Okay, it is not applicable to OPC, small company, IFSC, public and private company. My individual auditor will work for 5 years. He will chill for 5 years. My firm will work for 2 terms of 5 years each, chill for 5 years. Okay, notes. Now, if there is a common partner on the date of appointment in 2 firms, then the new firm is also disqualified for 5 years. If a partnership from old firm to the new firm, then the new firm is also disqualified for 5 years, provided the partner who shift is a certifying partner. Who is it? The partner who shift is a certifying partner. If a firm is a part of a network, the brand name like EY, PwC, then all the firms of that particular brand or network will also be disqualified for 5 years. So 3 rules are there. Common partner disqualified, shifting of partner, new firm disqualified, provided the new the firm in which the new partner is going, the new partner is a certifying partner. He signs the balance sheet of the old company. Third, if the firm is a part of a brand or a network like EY, all the firms of the EY will be disqualified to be the order of that particular company. They can audit other places, but they can't audit the same company for 5 years because a new auditor will come. Very important answer for MCQ, because previously it was very important for descriptive, now it is more in MCQs. Okay, rotation is not applicable to every company, is applicable to this category of company. Then question number 11, removal of auditor. Section number is what? 140. So removal before expiry of term, removal of at AGM. Removal before expiry of term, removal at 6th AGM. Very important, removal before expiry of term. So you are removing the auditor, it's a very big thing. Board will pass a board resolution and board meeting. Application would be made to CG in form number ADT2. Application would be made to the CG in form number ADT2 within 30 days of passing board resolution. Within 30 days of passing board resolution. The board will pass a board resolution. Number 2, application would be made to CG in form number ADT2. ADT1 was appointment. ADT2, 2 number removal. Within 30 days of passing BR. So we took board resolution. Number 2, we took CG approval. Number 3, general meeting. CG will give the approval. Then a general meeting would be called, and what we will be passing? SR would be passing. We will be passing SR within 60 days. You will be passing SR. Appointment is through OR, but the removal would be through SR. Removal would be through SR because it is before the date of appointment, before the expiry of term. It's a very big thing, before the expiry of term. And before removal, what he will be given? An opportunity of being heard. An opportunity of being heard. So board will pass a board resolution at board meeting. Number 2, application will be made to CG in form number ADT2 within 30 days of passing BR. Third, CG will give the approval. Number 4, general meeting will be called within 60 days. Within 60 days, within 60 days, within 60 days, important MCQ, and SR would be passed. Just read the term before expiry of term. and a portion of being heard would be given. Sir, what about at 6th AGM? That means when his term is completed, how you can do? Sir, if the new auditor is appointed, or providing expressly that the retiring auditor shall not be reappointed. My old auditor shall not be reappointed, that means his removal is there, or instead of him, we are appointing someone else. Okay. Steps at 6th AGM. Members will give a special notice to the company that the retiring auditor should not be reappointed or new auditor should be appointed. Company will give that notice to the auditor, and a right of representation would be given to the auditor by the management, that he will have a right of opportunity of being heard. More important in the exam, before expiry of term, SR, ADT2, CG approval, and 60 days mein general meeting should be called. Sir, resignation. Sir, the auditor can resign at any point of time. However, he has to file ADT3 within 30 days of the resignation. So the auditor can resign anytime. He has to file ADT3. ADT1 appointment, ADT2 removal, ADT3 is your resignation. Sir, he has to file with the company, the ROC and the CAG in case of government companies. If ADT3 is not filed, see the penalty, very important. Minimum 50,000 or the remuneration of the auditor, whichever is less. Minimum 50,000 or the remuneration of the auditor, whichever is less. And in case of a continuing default, is 500 rupees per day, subject to maximum 2 lakhs. Subject to maximum 2 lakhs. Minimum 50,000 or the remuneration of the auditor, whichever is less. And in case of continuing default, 500 rupees per day, subject to maximum of 2 lakhs. Subject to maximum of 2 lakh rupees. Okay? Now, next. Change of auditor based on tribunal's directions. Here, the auditor has committed the fraud and the tribunal is removing him. Okay, section number is 140 subsection 5. 140 bracket mein 5. 140 bracket mein 5. So, MCQ, the tribunal. Who will pass the order? Tribunal. Here there is no CG. Tribunal will pass the order. Either suo motu, that is on its own, or an application made by CG, or an application made by CG, or an application made by any person concerned, or an application made by any person concerned. He will pass an order for changing the order if the auditor has acted or abated or colluded in a fraudulent manner. If the auditor has committed any fraud, then tribunal will pass the order. However, if the application is made by CG, the tribunal will pass the order within 15 days of the receipt of application. For suo motu and for other person, days are not given. Only for CG the days are given. Within 15 days, the tribunal will pass the order. The tribunal will pass the order that the person will be disqualified for 5 years, to be the auditor in any company. For 5 years to be the auditor in any company. 140 subsection 5, 5 years ke liye disqualify. The guilty auditor shall also be liable under section 447. The guilty auditor shall also be liable under section 447. The civil liability will be of the firm and the criminal liability will be of the partner who has acted in a fraudulent manner. Civil liability, that means monetary fine, will be given by all the partners because the partners' liability is joint and several. Criminal liability, that means imprisonment, will be done by the person who has committed the fraud. 140 subsection 5, 5 years ke liye disqualify. 140 subsection 5, 5 years ke disqualified, plus 447 plus removal. If CG has made an application, removal order will be passed within 15 days. MCQ. Who will pass the order? Tribunal will pass the order. Clear this much? Then, sir, 143. 143 is your rights also, 143 is your duty also. Rights and duties. It is just a read section. Only for your purpose of reference and MCQ. More important in audit paper, they can ask you. Right to inspect BUA at all places, all BUA at all times. Okay. Right to receive remuneration. Okay. Right to visit branches. Right to receive notice and attend general meeting. Right to receive notice and attend general meeting. It is a right also, it is a duty also. It is a right also, it is a duty also. It is written in section 146. Written in section 146. MCQ. Attending general meeting is your right also, it is a duty also. So, duties of the auditor. Specific inquiry. 143.1. 2. True and fair view. 3. Reporting requirements of the auditor. 143.1 specific inquiry. It's an important answer. The code is LT dice. There are 6 areas. The auditor will check those 6 areas. The code is LT dice. Loans, transactions, deposits, investments, expenses, shares. Loans, transactions, deposits, investments, expenses, shares. LT dice. Loans, transactions, deposits, investments, expenses, shares. The auditor will report under 143.1, that is LT dice, only when he is not satisfied. If he has not reported, it is assumed that he is satisfied. If he has not reported, it is assumed that he is satisfied. LT dice. Loans, transaction, deposits, investments, expenses, shares. Okay. The main objective of the auditor is to give opinion. 143.2 true and fair view. Then 143 reporting requirement, it is just a read answer from the notes, you will read directly. Cool. Then, sir, reporting of fraud section 143.12. 143.12. Very important MCQ descriptive plus very important audit paper. Audit paper is very important answer. Sir, the auditor while doing audit, if comes across a fraud, he will first go and report it to audit committee immediately. The word immediately is interpreted within 2 days. Okay. If audit committee is there, then audit committee. If audit committee is not there, then to the board. Then board or the audit committee will revert back within 45 days. Within 45 days. If the reply is received, the auditor will go to CG within 15 days from the date of receipt of reply. Along with the reply, report and comment. Along with the report, reply and comments. Report, reply and comments. Okay. Now, for MCQ to go to CG, the days are 60 days. This is 45 plus 15. MCQ is 60 days. Always remember. Sir, if the reply is not received, still the auditor will go to CG within 15 days. Within 15 days from the after the expiry of 45 days. After the expiry of 45 days. Along with the report and the fact of non-receipt of reply. He will report in form number ADT4. He will report in form number ADT4. It is applicable to the stat auditor, cost auditor, secretarial auditor and branch auditor. If 143 value is contravene, in case of a listed company, the penalty is 5 lakh rupees, other company 1 lakh rupees. MCQ, RTP में there's a question. 143 value is contravene, in case of a listed company, the penalty is on the auditor 5 lakhs, in other companies it is 1 lakh. The penalty is on the auditor, the penalty is on the auditor. Section is 143.12. Okay. Lot of MCQs is there. 45 plus 15 is 60. Okay. What is the amount of fraud? Minimum 1 CR. What is the amount of fraud? Minimum 1 CR. Sir, you will report it to CG if the fraud of amount is minimum 1 CR. If it is 80 lakhs, you will just report it to audit committee and the board, plus it will come in Karo. For audit, I am telling you. In case of law paper, just remember 1 crore to CG. If it is less than 1 crore, it is only to audit committee or board. If it is minimum 1 CR, minimum 1 CR, minimum 1 CR, then it is to CG. Form number ADT4. What it is, form number is ADT1, appointment, ADT2, removal, ADT3, resignation, ADT4, fraud, ADT4, fraud, ADT4, fraud. Then, section 148, cost audit, okay. Sir, in case of a domestic company, foreign company, whether regulated sector or non-regulated sector, okay, yeah, it will come in both, providing goods, in case of production of goods or providing services, for both companies, in case of a domestic company, foreign company, that means all companies, whether you are in a regulated sector or non-regulated sector, either you are producing goods or providing services. If your overall turnover from all the products or services is minimum 35 crores, more than equal to means minimum 35 crores in the previous year, minimum 35 crores in the previous year, then this year cost record is applicable to you. Who is exempted? Micro and small enterprises exempted. Micro or small enterprise as per MSMED Act 2006, Micro Small Medium Enterprise Development Act 2006. Then, this is an example, you can do it on your own. Then, cost audit. In case of regulated sector, the limit is 25 and 50. Individual turnover 25 crore and overall turnover 50 crore. Individual turnover 25 and overall 50. In case of non-regulated, it is 35 and 100. It is 35 and 100. Non-regulated 35 and 100. Okay, exemption from cost audit. A company whose revenue from export is more than 75% of total revenue. Company whose revenue from export is more than 75% of total revenue. More than 75% of total revenue. Number 2, company in SEZ, unit in SEZ. Number 3, generating electricity for captive consumption. These companies are exempted from cost audit. Sir, what about micro and small? They do not have cost records. Why the hell they will do cost audit? They do not have cost record. Why they will do cost audit? Clear? Then, CRA1, cost record. CRA2, cost auditor. CRA3, CRA1 is cost record. CRA2, cost auditor ka removal, appointment, casual vacancy. CRA3, cost auditor will give report to the board of directors. CRA4, ex-bureau, board will give report to the CG. CRA1 is cost record. CRA2, cost auditor ka appointment, removal, casual vacancy. CRA3, cost auditor will give the report to the board and board will give a report to the CG in CRA4, ex-BRL. These are the form number for the purpose of MCQ. Understood? So with this, we have completed our entire chapter on auditors. Cool. Important chapter, 4 mark minimum. Audit again, it is again 4 mark in audit. So close to 8 marks on 200 we have done this. Cool. So bye guys, take care, enjoy and aim for a rank or 70 plus with your silver. We continue in the next class. Bye. Take care. So hi guys, welcome back to the class. So today we are starting with a chapter called as MOVA and AUDIT. So people have studied from different author, different teacher. You will have a MOVA in incorporation wala unit only, but we study this as a separate chapter because it carries at least 4 marks ka weightage in the exam. Okay. Now Memorandum of Association and Articles of Association. The most important two documents on which the company is standing. It is basically the MOA and OA. It is basically the MOA and OA. So the first question says distinguish between MOA and OA. These are the two main important documents on which the company is standing. Sir, MOA is basically the constitution of the entity. OA are the basically rules and regulations of the entity. In case of any fight between MOA and OA, which one will prevail? Sir, MOA will prevail. Alteration of MOA is comparatively difficult. It is easy. It cannot be amended retrospectively. Retrospectively means from the beginning or from the past. OA can be amended from retrospective effect. Like if I am amending today, I can say like from 2020, 2021, it will be effective. There are 6 clauses in MOA: name clause, object clause, register office clause, liability clause, capital clause, association clause or subscription clause, and there's one more clause called as nomination clause in case of OPC. Okay, these are the rules and regulations for the internal management of the company. Very rare in the exam, it's only for the basic thing. Now, what are the clauses? So there are, you just have to read this. There are 6 clauses. Name clause contains the name of the company. If the company is a private entity, so your name would end with private limited. The company is a public company, so the name would end with limited. Sir, object clause. Sir, object clause contains the object of the company. Object clause contains the object of the company, the main purpose. Main object, incidental object and other objects. Third, registered office clause. Registered office clause will contain the name of the state in which the company ka registered office is situated. It will not contain the address. So liability clause will talk about the liability. Whether the company is limited by shares, the liability is limited to the extent of unpaid amount on share. If it is limited by guarantee, the liability is limited to the extent of guarantee given. So capital will state authorized capital issued, subscribed, paid up to face value and total number of shares. Association clause or subscription clause. Private company minimum 2 subscribers, public company minimum 7 subscribers. Nomination will state about the nominee. In case of the death of the member of the OPC, nominee will come into the picture. Now, forms of MOA only for the purpose of MCQ. Table A, B, C, D, E. These are the standard format. If you don't want to make your own MOA, you can just copy paste it. A, B, C, D, E. Company limited by shares. B, guarantee without share capital. C, guarantee with share capital. D, unlimited without share capital. E, unlimited with share capital. So this is without, with. Guarantee without share capital, guarantee with share capital. Unlimited without share capital, unlimited with share capital. You need to remember this because in OA it is opposite. It is opposite. Share wala company, guarantee, unlimited. Without share capital, with share capital. Without share capital, with share capital. Then alteration of name clause. Always remember alteration section number is 13. In Hindi we say 13. 13 means 13. Alteration 13. 13 means yours. Alteration 13. 13. Sir, name clause alteration can happen due to 3 reasons. One is voluntary, other one is rectification suo motu, other one is rectification on the directions of CG. Sir, voluntary means on its own. My name is AB Limited. My company name is AB Limited. I want to change it to, let us assume, HP Limited, Dell Limited, Apple Limited. I want to change the name to voluntary list. So company will apply to CG for approval of name, for approval to alter its name. Change of name is not allowed if the company has defaulted in filing FS or annual return or default in repay to deposits, debentures or interest. If you have not given, if you have done some mischief with ROC, or if you have not given public money, so boss, your name change will not be allowed. What is the procedure? Company will pass SR. Very important MCQ. Company will pass SR to alter the name clause of MOA. Copy of SR, CG order copy and altered MOA should be sent to ROC within 30 days of passing SR. So all the documents will give it to ROC. All the documents will give it to ROC within 30 days of passing SR. Then ROC will check and issue COI. ROC will check and issue COI, which will be a conclusive evidence that all legal formalities have been complied with. All rights, liabilities, obligation, legal cases will remain same. No new legal entity has come into existence. Everything though remains the same. But the name has changed. Important point, section number 13 and SR. For voluntary name change, it is SR. Sir, number 2, rectification suo motu. Sir, suo motu means on its own. So, if someone has said my name is Reliance Limited. So, what is the spelling? R-E-E-L-I-A-N-C-E. And there is one more company, Original Reliance. R-E-L-I-A-N-C-E, Reliance Limited. We are in the same business, similar business. So, it is misleading name. It is called as undesirable name. So, the original company came to us and said, okay, AB sir, please change the name. So, now we are changing the name. So, it is not called as alteration. It is called as rectification. So, guys, for rectification, section number is 16. For rectification, the section number is 16. A company may be registered with undesirable name. An undesirable name is one which contains any unnecessary or fancy word. Any unnecessary or fancy word, or which is too similar to an existing company in the related business which may mislead the public. A company may be registered with an undesirable name, or an undesirable name is one which contains any unnecessary or fancy word or which is too similar to an existing company in related business which may mislead the public. So again, company will obtain the approval of CG. Very important, company will pass OR. So for rectification it is OR. For rectification guys it is OR. For alteration it is SR. Then rectification directions of CG. So continuing the same story, Mukesh Ambani came to us and said, sir, please change the name. I said, I will not change the name. So Mukesh Ambani has a right to go to CG. CG will tell to us, AB sir, please change the name because you are second registered company, original was that company and you are creating a problem for that company. So please change it. So if I am not changing it, CG will give me directions of 3 months, I think. CG will give me 3 months. Yeah, CG will give me 3 months and then I have to change it. If I am not changing it, CG will change the name on its own. Same point, if CG is of the opinion that the company is registered with an undesirable name, CG is empowered to direct that company to rectify the name. Then same as point B, answer B, 1, 2, 3. Same point this is. Company will obtain prior approval of CG, company will pass OR. Same procedure in both the case. Then, if a registered proprietor of a trademark can also apply to CG within 3 years, if your name is registered as a trademark, okay, and the second company is using that, still you can go to CG within 3 years. 3 years of either incorporation of the second company, or if they have changed the name or of the company, if it resembles to a registered trademark of such proprietor. So if I am the registered proprietor and someone is using the name, so the day the company got incorporated within 3 years from that date, or if they have changed the name which is similar to my trademark, so I can go and go to CG and ask for an action. The years is 3 years, MCQ. Okay. Now, so if such direction is issued by such CG, company shall make changes and inform to ROC within 15 days of such change. If the company does not make changes, then CG will allot a new name to the company within 3 months. So MCQ 3 months. 3 years is for the trademark thing. Okay. For section 8 company, if the company has changed its activities which is not in line with its name, like for example, Being Human. Being Human is Salman Khan's NGO and they are cutting the animals. Okay, they are selling the animals. Okay, slaughtering the animals. So it is not matching Being Human and slaughtering animals. So you have to change the name within 6 months from the change of its activities. So here for section 8 they have given 6 months. Normal company 3 months. Proprietor 3 years. Okay, section number 16. Alteration 13, rectification 16. Alteration में SR, rectification में section 16 and OR. Okay. Now, sir, what is the procedure for altering the object clause of MOA? Section number is 13. What is the procedure for altering the object clause of MOA? Section number is guys 13. So the company shall call for a board meeting and pass board resolution. Then at general meeting company shall pass SR. At general meeting company shall pass SR. SR copy along with the altered MOA should be filed with ROC. ROC will register changes within 1 month of filing SR and altered MOA copy. Done. Very simple. BR SR. Object clause you have to change. Very simple answer. In the exam they will not ask you direct answer. They will give you story. But answer is this only. Please write section number. You will get at least 1 mark. Not writing will not. Marks will not be directed. But yes, writing section number will fetch you at least half or 1 mark. And every mark is important to cross 39, 59, 69. And now I hope you will understand what is 39. 40 problem, 59 to get exemption, 69 Taj. Then, sir, what is the procedure for altering the liability clause of MOA? Sir, what is the procedure for altering the liability clause of MOA? So, no member shall be liable by an alteration in MOA, which states that he is liable to subscribe for more number of shares than he already is, or to contribute more than his liability on the nominal value of shares. So company, you cannot increase the liability or you cannot ask the member to buy more shares. If you have done that, he will not be liable. Okay. Then procedure for altering the capital clause. Procedure for altering what? Capital clause. So capital clause came in the exam by increasing the share capital by issuing new shares, or consolidation of shares of larger amount, or subdivision of shares. Like 1 rupee ka share making 10 rupee, 10 rupee ka share 1 rupee. This is called consolidation and subdivision. Converting shares into stock and cancelling the share which have not been taken by any person and reduce the share capital by amount of shares, so cancel. So you are doing forfeited and cancelling the shares. The alteration should be authorized by AUA and member should pass SR and inform ROC within 30 days of passing. Sorry, it is OR. Sorry, my mistake. It is OR. Please make the changes in the notes. Member should pass OR and inform ROC within 30 days of passing OR. Clear? Okay. Next, sir, what is the procedure for altering situational clause of MOA? Important answer, big answer. One, you are changing the state, like from Bangalore to Mumbai I have come, you are changing the state. So from Bangalore to Mysore, you are changing the city. So from Seshadipuram to Jayanagar, that is within the local limits, or Seshadipuram to Hoskote, I don't know how to pronounce Hoskote, outside the local limits. Sir, 4 situation. First, section number again 13, alteration. So board will call a board meeting and pass board resolution. At the general meeting, members will pass SR. Company will apply to CG for its approval. So 3 steps, same answer. CG will give the approval within 60 days. After obtaining the consent of creditors, debenture holders and the person concerned. Copy of CG order shall be filed with ROC, both ROC, because one state will cancel, one ROC will cancel, other one will register it. The new state ROC will issue fresh COI, which is a conclusive evidence that all legal formalities have been complied with. So big answer when you are changing the state. Question will specify what are you doing. Such change of city, that is within the same state. So this is section 12.5. This is section is 12.5. Okay. Here 2 situations are there. ROC is change, ROC is not change. ROC is change, ROC is not change. So both point. Like for example, I will give you Bombay example. There is a place called as Nasik. So if Bombay to Nasik I have changed, it is in Maharashtra only. I have changed the city, but ROC is not getting changed. If I am shifting from Bombay to Pune, again I am shifting in Maharashtra. That is within the same state. Here city is changed, but here ROC is also changed. Sir, in the exam, how will come to know? The institute will give whether ROC is getting changed or ROC is not getting changed. So in both the cases, company will pass SR, company will pass SR. Company will obtain the approval of regional director. Here, company will inform to ROC within 30 days of passing SR. Simple process. But when ROC is getting changed, you will obtain the approval of regional director. Regional director is of the ROC. Is an ROC officer. Regional director will give approval within 30 days. He will give the approval within 30 days. Then same point, company will apply to ROC for confirmation within 60 days. ROC will register change within 30 days from filing of such confirmation. 30, 60, 30. Regional director will give approval within 30 days. You go to ROC for confirmation within 60 days. And ROC will register within 30 days. 30, 60, 30 days you need to remember. Sir, within local limits, company will pass board resolution. And company will notify to ROC within 30 days of change. Company will pass board resolution and notify to ROC within 30 days of change. Because it is within local limits. Very simple process. Sir, what if it is outside the local limits? Company will pass SR, because outside the local limits it is SR. Company will notify to ROC within 30 days of change. Almost generic days are 30 days only. Then, next answer. What is the procedure for altering the AUDIT? Section number is what? 14. What is the procedure for altering the AUDIT? Section number 14. Sir, in respect of conversion from public company into private company. Sir, you will pass SR and take approval of CG. And in other cases, you will just pass SR. See, because if you are changing from public to private, your AUDIT will also be altered. TRP we need to add, right? So you will take approval of CG. In other cases, just for example, if I want to change my dividend rules, my general meeting rules, AGM rules, just pass SR. Sir, what are the conditions? The code is limits. Sir, L. It should be lawful and not unlawful or opposed to public policy. L. It should be lawful. I. It should not be inconsistent with the provision of Companies Act, MOA and orders or tribunal. M. It should not be oppressive or harmful to any member. I. It should not increase the liability of any member. T. Time. It will have a retrospective effect. Time. Retrospective means like from the previous. S. Sabki bhalai. It should be bona fide and in the interest of the company as a whole. It should be bona fide and in the interest of a company as a whole. Sabki bhalai means it should be genuine and bona fide. Okay. It should be lawful. It should not be inconsistent. It should not increase any liability on member. It should not increase the liability of any member. It should not be oppressive on any member. T. Time. It will have a retrospective. S. Sabki bhalai. It should be bona fide and in the interest of a company as a whole. Okay. So section 13 is everywhere. 14 is AUDIT alteration. 12.5 is when you change the ROC. 16 is rectification. Okay. Authentication of documents. So as per section 21, any DCP, documents contract proceeding, DCP, document contract proceeding, should be signed by the KMP or any officer duly authorized by the board. So any DCP, document contract proceeding, should be signed by the KMP or any officer authorized by the board. Okay, DCP. Question may DCP, document contract proceeding, section 21. Then 22. If they are talking about any negotiable instrument like bill of exchange, hundi, promissory note made on behalf of the company, should be deemed to be made if it is signed by any person acting under its authority, whether express or implied. So someone to whom you have given the authority. Okay, any person who is duly authorized, either express or either implied, either express or either implied, either express or either it is implied. Okay, third sign. So we have done DCP. DCP may sign who will do? So it is KMP or an officer duly authorized by the board. Sir, in case of bill of exchange, hundi, promissory note, who will do? By person acting under its authority, express or implied. Okay. Sir, if they are talking about deeds, partnership deed, any agreement, any deed, please make sure you understand this word deed. A company shall authorize any attorney to execute deed on company's behalf. Such authorization shall be done by either common seal, or if common seal is not there, by one director, one company secretary, or by two directors. Understand? Three things are there. DCP would be signed by the person who is authorized or KMP. Bill of exchange promissory would be signed by person who is authorized. Deed would be signed by person by an attorney, and attorney ko authorization would be given. That authorization would be given to the attorney through common seal. If common seal is not there, then by one director, one CS. If CS is also not there, then by two directors. Cool? Important answer. Please take the question from the module. Towards the end you will find it. We have done in the class. In our question book we discovered already. People who have studied from other teacher, I am just telling to them. Sir, notice of alteration of Mahuwa and Ahuwa. Very simple section. So every alteration made in Mahuwa Ahuwa should be noted in every copy issued thereafter. If there is a default in the company and the every officer shall be liable for 1000 rupees per every copy of Mahuwa Ahuwa issued thereafter. So whenever you have changed the name or object or anything you have changed, please mention in that Mahuwa Ahuwa. And you have issued the copy without those changes, without noting those changes, 1000 rupees ka penalty is there. Then copies of Mahuwa Ahuwa to every member. Every company on requested by member and on payment of such fees will send copies of Mahuwa Ahuwa Agreement Resolution, MAR, Mahuwa Ahuwa Agreement Resolution within 7 days of request. So if I am a member, I want to see Reliance ka Mahuwa Ahuwa Agreement Resolution. So I will request to the company on payment of such fees as may be prescribed. So company will give me within 7 days. If 7 days they have not given, then company you are liable. Company and every officer is liable for 1000 rupees per day subject to maximum 1 lakh. 1000 rupees per day subject to maximum 1 lakh. Here it was only 1000 rupees per copy. If you have issued a copy without alteration, 1000 rupees. If you have not issued a copy on their request, they have given the payment of 1000 rupees, maximum 1 lakh rupees. So I have written here 8911 page 251 module. 8911 page 2.51 of the module. Please do it. It is important question. One more chapter is done, guys. Mahuwa Ahuwa is also done. 13 alteration, 14 Ahuwa alteration, 16 rectification. Okay, 15, 17 is these two, and 12, 5 is your 16 is rectification. Yeah, 12, 5 is your 12, 5 is change within the change outside the local, change within the state, and ROC getting change. ROC getting change is 12, 5. Cool, guys. Aim for a rank or 70 plus, whichever is earlier. Bye, guys. Take care. Hi, guys. Welcome to the class. So right now what we are starting with a chapter called as prospectus. 4 to 8 marks is the weightage. 4 marks you can expect as a descriptive, or 2-3 marks you can expect as a MCQ. 1 second. Now, so this is the index for the section numbers what we're gonna study. Let's quickly recall. First is what is public offer and private placement. It's a basic concept. As per section 23, a public company may issue securities to public through what all things? A prospectus or a private placement or a right issue or a bonus issue. Sir, in prospectus you can go for IPO, FPO, OFS. IPO is initial public offer, FPO is further public offer, OFS is offer for sale. So a public company may issue securities to public through prospectus, either through IPO, initial public offer, FPO, public further public offer, OFS, offer for sale, or through private placement or through right or bonus issue. However, a private company cannot go for a public issue. A private company cannot go for a public issue, but they can offer right shares to or bonus share with existing shareholder, or they can go for private placement, Okay, then explain prospectus. What are the reports to be filed with prospectus and provisions for filing prospectus with ROC. So everything regarding basic of prospectus is written here. So prospectus means any document described as prospectus which includes shelf, red herring, any notice, any circular, any advertisement, or any document inviting offer from public for subscription or purchase of any securities. So you call it a shelf, you call it a red herring or notice or a circular or advertisement or any document which invite offer from the public for subscription or purchase of any security is called as prospectus. Then it should be filed with ROC before its publication. It should be signed by every person who is named in the prospectus as either the director or a proposed director or his duly authorized agent. Following document should be attached with prospectus. What all? Expert consent. It can come as a separate answer. Expert consent should be attached. Number 2, consent of the auditor, lawyer, attorney, broker, and copy of underwriting agreement. Copy of underwriting agreement. Sir, expert consent, if his report is included in the prospectus, consent of the auditor, lawyer, attorney, broker, copy of underwriting agreement. Okay, then prospectus shall be issued how many days? Within 90 days of filing a copy of the same to the ROC, either through a newspaper or by an advertisement. If there is a default in complying with any of the above provision, company you are liable for 50,000 to 3 lakh, and every person who is a party will be liable to 50,000 to 3 lakh. Same penalty. Same penalty. Then the prospectus shall state such information and set out such reports on financial information as may be specified by SEBI in consultation with CEG. So if they are asking you what reports should be attached, so it shall attach such reports on the financial information as may be specified by SEBI in consultation with CEG. The prospectus shall also contain a statement that the company has complied with SECRA, Securities Contract Regulation Act, SEBI Act, and Companies Act. Companies Act, SEBI Act, SECRA. On this point is a question 3 on the module page 3.45. Please do this. The answer is this line only. They are asking what report should be attached. Such reports on financial information as may be specified by SEBI in consultation with CEG. In consultation with CEG. So point number 6 is important because there is a question on module question number 3, page 3.45. Then, sir, what is the liability for misstatement in the prospectus? Section number 34, 35, 447. So liabilities are of two kinds. One is civil, other one is criminal. Oh, she has written it wrong. Oh, no, she has written right, yeah. So criminal is written in 34, civil is written in 35. Criminal is written in 34, civil is written in 35. Criminal is written in 34, civil is 35. So civil liability means only monetary fine. Criminal means imprisonment also. Fine plus imprisonment. Then, first, if a person who has subscribed for securities of a company and of which contains any statement which is misleading and has sustained any loss or damage, then who will be liable, sir? Everybody. Everybody means all. All means sub matlab all. Sir, company and every person who is a director of a company. Then who has authorized himself to be named as a director. Sir, who is a director of a company? Then authorized himself to be named as a director in the prospectus or promoter of a company, or who has authorized the prospector or is an expert. Everybody, company, promoter, director, past director, present director, future director, expert, everybody shall be personally and unlimited liable to every person who has sustained such loss or damage. This line is very important. Civil liability, if person has subscribed for the securities which contains any statement which is misleading, then whatever loss they have suffered, these people would be liable. These people would be personally liable. Okay, when you will not be liable, sir, if I have withdrawn the consent before the issue of prospectus, or I gave a reasonable public notice that the prospectus contains a misleading statement and I am not liable, then I am not liable. In these two cases, you are not liable. Then third, sir, there will also be no liability if the prospectus contains any misleading statement if it is an extract from a report or a valuation of an expert and it was a correct and fair representation of the statement and the expert has believed and did believe up to the time of the prospectus and has not withdrawn the statement. So if imagine I am taking a amount from a valuation report and I am signing on the prospectus, I am an auditor there and everything is correct except the valuation amount is wrong. But that valuation amount I have not given, I have taken it from an expert. I had took his consent, that valuer, that expert, he has not withdrawn his sign, he is still believing that my value is correct. So law says, AB, you are not liable, you are not liable. So is he liable? I do not know. The content is here, you are not liable. There will be no liability if a prospectus contains any statement, if it is an extract from a report like a valuer report of an expert and it was a correct and fair presentation of the statement and the expert believed and did believe up to the time of prospectus and has not withdrawn the statement, then sir, you are not liable. That is very clear. Then criminal liability. If it is proved that the prospectus has issued with the intent to defraud the applicants, if it is proved that the prospectus was issued with the intent to defraud the applicants of the security, so if you see the word defraud, then 34 will come, criminal liability. Then company or any other person referred in 35(1), everybody shall be personally unlimited liable to compensate the loss suffered and shall also be liable under section 447. So sir, you are liable for that. You have to repay all the loss, plus you will be liable all under section 447. So what is 447? So check whether the fraud is big fraud or a small fraud. So how do you check whether it's a big fraud? So the amount of fraud is more than or equal to rupees 10 lakh or 1% of turnover, whichever is less. So if the amount of fraud is more than or equal to rupees 10 lakhs or 1% of turnover, whichever is less, or if the fraud is less than that, okay. Imagine I have written 10 lakhs because it is given in the law. Hypothetically, my 1% of turnover comes at 8 lakh rupees, whichever is less. So now my limit is 8 lakhs. Imagine if my fraud is of 9 lakh or 10 lakh or 11 lakh or 8 lakh, 8, 9, 10, 11 and above, then it is a big fraud, because it's a fraud is more than or equal to rupees 10 lakh or 1% of turnover, whichever is less. So first you remove the limit 10 lakhs or 1% turnover, which is less. That 8 lakh is my limit. So if 8 lakhs and above is my limit, okay, that's a big fraud. If it is 7, 6, 5, 4, then it's a small fraud. So if it is a big fraud, the minimum imprisonment is 6 months, maximum is 10 years. That is normally. However, if public interest is involved, 3 years and 10 years, 3 years to 10 years. And fine is amount of fraud, maximum 3 times the amount of fraud. Amount of fraud, maximum 3 times the amount of fraud. Sir, if the fraud is small and it does not involve public interest, the fraud is small and does not involve public interest, then it is up to 5 years or up to 50 lakhs or both. Up to 5 years or up to 50 lakhs or both. Then there would be no liability if the person proves that such statement or the omission was immaterial, or he had reasonable grounds to believe and did believe up to the time of issue of prospectus. So whatever omission or I have done, or if I have given a statement but it is not impacting anyone, it is immaterial, then I am not liable. Or whatever fact I have given, I have the proof of it, I have the evidence of it, then I will not be liable. There will be no criminal liability. If there is a misstatement in the prospectus, then the allottee, the person who buys the shares on faith of prospectus, will have following rights. First, cancel the contract. Number 2, claim damages. First, cancel the contract. Number 2, claim damages. But right to reject his loss if he has attended the general meeting of the company or accepts the dividend. So if you have behaved like a shareholder, then you have right to reject his loss. Then you can't reject it. Okay. So question number 3 is very lengthy answer, very important answer. It will not come completely. Either they can ask you civil liability or they can ask you criminal liability. If they are asking criminal liability, you have to write 447. Or they can ask you separately 447. 447 is very important. It's a penalty for fraud throughout the Companies Act. Whenever the anyone has done fraud in the company, either the employee or the employer or anybody, then they are liable under section 447. So in MCQ also it is useful. Then, so section 30, advertisement of prospectus. So if the prospectus is issued, it shall contain the following details. What? Objects of the company, that means object clause. Liability of the company, that means liability clause. Third, amount of the share capital and its capital structure, capital clause. The name of the signatories to the MOA, subscription clause, and the number of shares subscribed by them. 4. Object, liability, share capital and association clause or subscription clause. Name clause and register office clause is not there, but whenever the ad will become, when you will make the ad, name would be there. Obviously the state ka name would also be there, but that is indirectly. But directly, object, liability, capital and association clause. Okay, very rare in the exam. Now, explain offer of sale of shares by the members, section 28. Explain offer of sale of shares by the members, section number is 28. Now listen, offer of sale. So if the members of the company propose in consultation with the board to offer either the whole or part of their holding, like if you are a majority shareholder and if you are going to release your holding, okay, then they can do so by following the prescribed procedure. Any document for such offer of sale to the public shall be deemed to be a prospectus issued by the company, and all the rules regarding prospectus shall apply to the such offer of securities. Then, the members, whether individuals or body corporates, the members, whether individuals or body corporates or both, whose shares are proposed to be offered, the members who are either individuals or body corporates who are offering their shares, they will route it through company only. Company will give the prospectus. So whatever advertisement they are giving, it will always be assumed it is a prospectus issued by the company. So if anything is false or untrue, then the company would be liable. Okay. The members, whether individuals or body corporate or both, whose shares are proposed to be offered to the public, shall authorize the company and shall take all such steps for offer of sale, and they shall reimburse the company for all the expenses incurred by it on this matter. So whatever expenses they have incurred, it will be reimbursed by the company. Sorry, it will be reimbursed to the company. So they shall authorize the company and shall take all the actions, for such offer of sale, and they shall reimburse the company for all the expenses incurred by it on this matter. So because company is helping them, because they want to offer their shares, so whatever expenses company will incur, they will reimburse to the company. Okay. Now, next. Now, a company can vary terms / objects in prospectus only if passing SR in GM. Okay. The question is procedure for variation in terms of the prospectus. If you are changing any terms of the prospectus, guys, the section number is 27. Okay. A company can vary terms or objects in the prospectus only by passing SR in GM. And the notice of such resolution should be published in 2 newspapers, one in English, another one is in regional language of the city where the registered office is situated. The money raised through prospectus cannot be used for buying, trading, or dealing in equity shares of any other listed company. So the money what you have taken through IPO, you cannot go for buying the shares of MRF or any other company. Okay, that is wrong. Then the dissenting shareholders who are not agreeing to the terms getting varied will given an exit offer by the promoter of the shareholders at such price in such manner as may be prescribed by SEBI. At such exit price in such manner as may be prescribed by SEBI. So it says SR, that means 75% have approved, that means 25 has disagreed, so 25 will give an exit offer. Okay, you are not agreeing to the terms, right? It's okay, take an exit offer at such price as may be prescribed by SEBI. Then abridged prospectus. Abridged means a small prospectus. It is a summarized form of the prospectus. Application form should be attached to the prospectus. Application form is not required if the shares are not given to the public or given to underwriters. If section 33 is contravened, penalty is 50,000 for each default. This is abridged prospectus, section number 33. Shelf. Explain shelf prospectus. Shelf boxes. It is issued by company proposing a multiple issue of security. When you go for multiple issue of security, once shelf prospectus filed with the ROC, fresh prospectus for every issue is not required. Like it will have a validity of 1 year. If you are going for multiple issue, like at 10 rupee ka share I am offering, then 100 rupee ka share I will offer, then 1000 rupee ka share I will offer in 1 year. So law says whenever you are offering the securities, you have to issue prospectus. But law says why are you giving 3 prospectus? Give 1 prospectus. That 1 prospectus is called as shelf prospectus. Shelf prospectus has a validity of 1 year from the date of opening of the first offer of securities. If there is any change prior to the issue of second issue, the company will file IM. IM means what? Information memorandum to the ROC. Information memorandum to the ROC. The shelf prospectus and the information memorandum will make the final prospectus. Then third, red herring prospectus. What it is, guys? Red herring. So red herring means like I am afraid, I do not know what should be the size of the issue, what should be the price of the issue. So I will issue a prospectus containing everything. Everything means sub matlab sub, except 2 things, price and size. Then we will roll out a market survey. Market survey will be through information memorandum. On the basis of that, we will get the price and the size, and then we will file a final prospectus. So RHP is a draft prospectus which does not contain any detail regarding the price of the issue and size of the issue. Company will issue information memorandum in prior to the issue of prospectus in order to explore the demand for securities. Now at least 3 days prior, MCQ, at least 3 days prior, guys, at least 3 days prior to opening of offer, company will file RHP with the ROC. Now RHP has same obligation as applicable to the prospectus. Same obligation, same rights, duties, everything is same. On the basis of response, company will finalize the price and the size to close the offer. And after closure of offer, company will file the final prospectus with ROC. So if you do not know the price, if you do not know the size, you file RHP. Multiple issue is shelf, small is abridged. Then deemed. 25, 31, 32, 33. We call this as Dasra. 25, 31, 32, 33. Deemed, shelf, red herring, abridged. Deemed, shelf, red herring, abridged. Okay. Earlier, what company used to do? Company used to issue shares to the issue house, and issue house will offer the same shares to the public by way of advertisement. So company used to give shares to the issue house. Issue house was a mediator, and that issue house used to offer same shares to the public through advertisement. So company has given shares to issue house, so prospectus is not required, because prospectus says whenever the company offering shares to public. Number 2, issue house is offering to public, rule is on the company, so prospectus was not required. So in this way, company used to play with the law. So what did the government do? It helped the company to avoid the strict requirements of prospectus. So government came and said any document containing such offer of sale of securities issued by the issue house will be termed as deemed prospectus. we will consider it as a deemed prospectus. So when you consider as a deemed prospectus, so whatever the obligation is there in the prospectus, the same would be applicable for that advertisement, whatever advertisement you have offered. Okay. Now, such advertisement, okay, law says such advertisement will not be deemed prospectus if company receives full concession today from the issue house and the shares are offered to the public by issue house after 6 months from allotment by a company. Okay, if you say, I mean, company, you want that we should not consider this advertisement prospectus, no worries. Issuers pay money to the company today and wait. How many months? 6 months. After 6 months, you go and offer the shares to public. Now you think, will any issue house do? Today you are buying the goods and you are not selling it for 6 months. In 6 months, anything can happen. So in this way, no issue house came into the picture now. So law won, company lost. Law shocks. Sorry, company shocks, law rocks. Clear? Remember 6 months MCQ. Then the next answer is private placement. Section number is what? 42. Section number is what? 42. Private placement. Very important. Lot of objectives. Any company, whether it's public or private, can offer shares to identified person by private placement. By private placement. Identified persons by private placement. This offer can be made to maximum 200 persons. Maximum 200 person in a financial year. 200% in a financial year, that is April to March maximum. Whether it's a public company or a private company. Okay. QIBs and employees under ESOP shall be excluded from 200. So that is in addition. QIBs will not be counted. ESOP employees will not be counted. This limit is applicable per security, that is 200 for each equity, debenture, preference shares. This limit is applicable per security, that is 200 for each equity, debenture, preference shares. The payment can be made either by check, DD or banking channels, but not by cash. Then, money raised cannot be used until shares are allotted and a return of allotment is filed with ROC. Whatever money you have raised to this private placement, you cannot use it until the shares are allotted and return of allotment is filed with ROC. Like we have income tax return, GST return, same way return of allotment. Then, no fresh invitation or offer can be made unless earlier offer is completed or that offer is withdrawn or abandoned by the company. No fresh invitation or offer can be made unless the earlier offer is completed or that offer is withdrawn or abandoned by the company. That means cancelled by the company. Okay, company can offer multiple offers of private placement in a year financial year subject to the aggregate limit of 200% per security. 200% per security. 200 for equity, 200 for preference, 200 for debentures. This rule is applicable for each security. Clear? Like whatever is this, it is same for everything. Now, company shall allot the security within 60 days from the receipt of application money. If allotment is not done, company, you have to refund within 15 days from the expiry of 60 days. If it is not refunded within 15 days, then you will refund along with 12% simple interest from the expiry of 60th day. Like 61st day, say it is 12% simple interest. Okay, if you have allotted, company, you will file return of allotment to ROC within 15 days. If it is not filed, company promoter director liable up to 1000 rupees per day subject to maximum 25 lakh. Subject to maximum 25 lakh. If any provision is contravened of the entire section 42, company promoter director is liable for amount raised to private placement or 2 crore, whichever is less, and you have to refund the amount along with 12% interest within 30 days. So if anything is contravened, so your liability would be amount raised to private placement or 2 crore, whichever is less. This is the penalty, and you have to refund the amount with 12% interest within 30 days. Of order imposing the penalty, and such offer will be termed as a public offer, and then the requirement of Companies Act, SECRA, SEBI will apply. SECRA is Securities Contract Regulation Act, CAUA is Companies Act 2013, SEBI Securities Exchange Board of India Act. Okay, it will apply. So if any provision is contravened, company promoter director is liable for the amount raised to private placement or 2 crore, which is less, and you have to refund within 30 days at 12% interest, and this offer would be considered as a public offer, and the requirement of Companies Act, SECRA, SEBI will apply. Okay, these are the 4 questions, 3, 5, 7, 9 from model, what you have to do. Clear? Prospectus, Dasra, Deem, Shelf, Red Herring, Abridge, 25, 31, 32, 33. 34, 35 is basically a criminal liability and civil liability. Cool? Guys, one more chapter is over. Okay, so aim for a rank or 70 plus, which is earlier. I am going with a very quick revision. It's only for the exam oriented thing because you have studied it from whatever author, whichever teacher you have studied. I am talking only in 100% English. especially for South students. I hope it will be beneficial to you guys. Bye, take care, enjoy, aim for a rank or 70 plus, whichever is earlier. Hi guys, welcome back. So we are starting with a new topic which is called as deposits. So deposits is very important. It has been coming in the exam in every attempt. Minimum 3 mark. It can go to 5 marks, 6 marks including MCQ. Okay, very simple chapter. Only 4 sections: 73, 74, 75, 76, 76A. A is an amendment wala part. Okay, first, what do you mean by deposits? So like we do FD in the bank, same way people do FDs with the companies. And why they don't go to bank and they put the money in the company? Because of the interest, because the company will give them high rate of interest. So now this chapter is from the perspective of company, and the person who deposit the money is called as a depositor or deposit holder. Okay, so it means any receipt of money by way of deposits or loan and other forms or any other form by company. It means, one second, it means receipt of money in the form of loan or deposits or any other form, deposit or loan or any other form. And it does not include such categories of deposit, it does not include such categories of amount as prescribed by RBI. Now what is the categories? RBI has given the list. Where it is written? It is written on page number 372, page number 372. So we'll just scroll once, page number 372. These are the list of exempted deposits. So people who do not have my book, you can find this in the module and deposit chapter on the starting page. People who have my book, page number 372. Sir, any amount received from CG or SG, any amount received from CG or SG or local authority or state authority or any other source. The company is receiving any amount, it is not a deposit from CG, SG. Any amount received by the company from foreign government, foreign institutional bank, multilateral financial institution, it is not a deposit. This will help you in MCQs to identify what are deposits, what are not deposits. Any amount received from any banking company, from a PFI bank, it's a loan, right? Financial institution, it's a loan. Any amount received against issue of commercial papers, it is again a kind of a loan. So A to E is very easy. F, any amount received by a company from another company giving money to another company. So if AB Limited is receiving from Reliance Industries, it is kind of a loan, it is not a deposit. So A to F is easy. A to F is easy. CGSG का money, local authority का money, foreign government का money, banking company का money, public financial institution का money, issue of commercial papers or any other form, and company to company. All this is kind of a loan. It is not a deposit. It is not a public deposits. Now, share application money or advance towards allotment of securities, pending allotment, so long as such amount is appropriated against the amount due on allotment. If allotment is not done within 60 days of the receipt of application money, see, people have given the money, share application money on any advance towards allotment. You have to do the allotment within 60 days from the receipt of application money. If you have not allotted the shares, you have to refund the money within 15 days after completion of 60 days, or else on 75th day it will be treated as deposits. It will be treated as deposits. So public has given the money for what? Share application. So or pending allotment. So you have to allot the shares within 60 days from the receipt of application money. If you have not allotted the shares, refund the money within 15 days. If you could not refund it, then from the expiry of 15th day, that is total 76th day, it will become deposits. Then loan from director. In case of a public company, loan can be taken from directors. In case of a private company, loan can be taken from director or his relative. In case of a public company, loan can be taken from directors. In case of a private company, loan can be taken from directors or his relative. However, a director of a company or a relative of a director of a private company from whom the money is received, they have to give at the time of giving the money that the amount is not being given out of the funds acquired by him or by borrowing or accepting from others. See, in public company, loan taken from director is not a deposit. In a private company, loan taken from director or the relatives is not a deposit. Okay, the director of a company or the relative of a director of a private company, in both the categories, like your also, your director and your relatives. So all the three people, all the three category of people, they will give it in writing that we are giving the money out of our funds. Our funds. We have not taken the money from public and given to you. So it would be like, if imagine AB Limited में the director is AB or AB का relative is there. Imagine my wife baby. So if I give money to AB Limited, or if my relative give in case of a private company ABP Limited, okay, then it is not a deposit. Provided these two people, okay, will give a declaration that they have not taken money from others and given to the company. Or else what will happen? Public has given money to the company. It will look like, for example, if public has given money, it is indirect moving of money. So boss, you have to give a declaration that this is not public and it is our money, only from my bank account, from my savings. Then, so GH is important, I is important, secured debentures. Same logic, any amount raised by the issue of bonds or debentures secured first charge on assets excluding intangible assets. Any amount raised by the issue of bonds or debentures secured first charge on the asset excluding intangible asset. So you can't take charge on intangible asset, provided it should not exceed the market value of such asset. It should not exceed the market value of such asset. Convertible bonds or debenture which are converted into shares within 10 years. And if public has taken money, given money for convertible bonds or debenture, it is also not deposits. If you have taken a loan on giving debentures which are secured on assets excluding intangible assets, and it covers the market value, then it is not a deposit. Else it is a deposit. Then non-convertible unsecured debentures. Non-convertible unsecured debentures listed on stock exchange. It is also not a deposit. This came in the exam. Non-interest bearing security deposit received from the employee of a company not exceeding the annual salary. If imagine Ramesh is my employee and Ramesh's salary is 5 lakh rupees and he has given 5 lakh rupees as to the company, maybe kind of a loan to employee, has given money to the company. So public has given. I agree, public has given, but it is not a deposit. But it should not exceed annual salary and it should be non-interest. We will not pay any interest on it. Any non-interest bearing amount received and held interest on behalf of someone. Any amount received as an advance for supply of goods, like for example, our customer has given some advance to us, it is not a deposit. N, important, any amount brought in by the promoters by the company by way of unsecured loan in pursuance of a condition of any lending financial institution or bank. Bank says I will give loan to AB Limited only if the promoter is also giving unsecured loan. So promoter is giving unsecured loan, that means director promoter is giving unsecured loan, so it is also not a deposit. Any amount accepted by a needy company, any amount received by way of chit fund, it is not a deposit, or collective investment scheme, it is not a deposit. Then any amount received from alternative investment fund, domestic venture capital fund, infrastructure investment trust, REITs and mutual funds registered with SEBI, it is not a deposit because they are ordinary course of business. Okay. R is important. There are 6 points. Every point is important. An amount of 25 lakh rupees or more received by a startup company, that is minimum 25 lakh rupees or more. Number 2, by a startup company by way of convertible note. Convertible means it is converted into equity share or repayable within a period not exceeding 10 years, like maximum 10 years, in a single tranche, from a person, from an individual. 6 points are there. If all 6 conditions are complied, it is not a deposit. Minimum 25 lakh rupees received by a startup company by a way of convertible note, that is convertible into equity shares or repayable within period of 10 years, maximum 10 years, in a single tranche, from a person, it is not a deposit. If all conditions are satisfied, it is not a deposit. Cool. So I'm giving you 5 minutes time. Just recall to all the points. They can ask you descriptive, they can ask you MCQ also on this. What is deposit, what is not a deposit? What is not a deposit is important. Read. Done? Now what is eligible company? It means a public company and having net worth of minimum 100 crores or turnover of minimum 500 crores. Very important definition. Net worth of minimum 100 crores or turnover of minimum 500 crores and members have passed SR in GM and that SR is filed with ROC. It means a public company having net worth of minimum 100 crores or turnover of minimum 500 crores and members have passed SR in GM and that SR is filed with ROC. It is called as what? Eligible company. An eligible company is one which is accepting deposits within the limits of section 181C. Okay, and an eligible company is one which is accepting deposit within the limits of 181C. Deposits can be accepted by OR. An eligible company which is accepting deposits within the limits of 181C, then they can accept by OR. By OR, it is OR, by OR. Generally, we say that SR should be passed. Okay, public company having minimum net worth of 100 crores or turnover of minimum 500 crores and members have passed SR in GM and that SR is filed with ROC. But if an eligible company is accepting deposits within the limits of 181C, what is 181C? It will come in CA final if any, if you reach till there. 181C and they can accept the deposit by OR. They can accept the deposits by OR. They can accept the deposits by OR. Clear? SR, OR both. SR is special resolution, OR is ordinary resolution. Then, sir, from whom deposits can be accepted? In case of a public company, from public, from members. In case of a private company, only from the members. In case of a public company, from public, from members. In case of a private company, only from the members, only from the members. The person or member who give money is called as what? Depositors. It is called as what? Depositors. It is called as depositors. Then, sir, what is the limit for max amount of deposits from the members? Okay, here we are studying members. Okay. In case of an eligible company, what is an eligible company? Public company, net worth 100 and 500, net worth 100 crores or turnover 500 crores and they pass SR and that SR is filed with ROC. So, eligible company can accept from member, this point. Maximum 10% of paid up capital plus free reserve plus sec prime. Okay. Eligible company can accept from public how much? Max 25% paid up capital plus free reserve plus sec prime. Total is 35%. Total is 35, but the breakup is 10 and 25. 10 is from the member and 25 is public. It's maximum. You can't swap it. Maximum 10, maximum 25 public. In case of eligible government company, there is no bifurcation as such from the member or public. It is maximum 35%. If that public company is a government company you become at the percentage of 51%. Okay. So it is maximum 35% of paid up capital plus free reserve plus securities premium without breakup. That is without breakup. Sir, in case of a private company, so maximum 100% you can accept from of paid up capital plus free reserve plus securities premium. For IFSC private and IFSC public, IFSC means International Financial Service Center company, maximum 100% of capital free reserve plus sec prime and they have to file DPT3 to the ROC, DPT3 to the ROC and DPT3 to the ROC. Clear? So it is 10, 25, total 35. Here total 35, no breakup. Here 100%. So this is section 73. Deposits and money which is not a deposits. So everything is written in section number 73, prohibition and acceptance of public deposits. Now if you remember, we just did amount which is not deposits and there was a debenture wala question. That debenture wala question has come in the in RTP also. Let's do that question so that you will get confidence. I have done when I had solved this RTP on YouTube. See, E Limited raised secure deposit of 80 crore on 30th June 23 from the public on interest at the 12% repayable after 3 years. The charges have been created within prescribed time in favor of trustees or depositors against the deposit taking following assets. So they have taken charge. Land building 55 crores, plant and machinery 15 crores, factory share 10. 55 plus 15 is 70, 70 plus 10 is 80 crores. Bro, Babu. Yeah. Trademark, goodwill 10-15. If you know intangible, sir, intangible should always be excluded. Intangible should always be excluded. Decide the validity of the charges. Validity of charges. So how much is the deposit? So it is 80 crores. 80 crores into 12% into 3 years. Repayable after 3 years, right? So how much is the percentage? So total is coming as 28.8. So 80 crores plus 28.8 is your total liability. That means 108.8 crores is your total liability. That means you have to repay the deposits. You have to repay the deposit plus the interest. So 108.8. Total amount is what? 108.8. But you have given as a security only 80 crores. It is invalid. It is invalid because it should be at least 108.8. The same question we have done in the class. It was a past exam question. I still remember. I think at Seshadipuram I had done. I mean, someone had given the right answer. It is 80 crores. I mean, it is the charge is invalid. Let's check the answer. Total asset is 80 crores. Deposits accepted and interest payable is 108.8 crores. So the charge is not validly credited. It is not valid. The charge is not valid. Understood? So you have to add interest. That is your hidden adjustment. This will come when we do section 76. Remember this percentage, it may come in the exam as MCQ. 10, 25, 10 members, 25 public, total is 35. Eligible government company, total is 35. Private company, maximum 100%. Okay. Repayment of deposit before a commencement of this act, section 74, it is waste section, it is irrelevant section because it is before commencement of this act. Old provision. 75. If a company fails to repay deposits part or its interest, deposit is not paid, part of the deposit is not paid, interest is not paid within the time specified or extended time given by the tribunal, then what will happen? So fraud they have done, and it is proved that the deposits were accepted to defraud the depositors or any fraudulent purpose, then every officer of the company was responsible shall be liable under section 447, shall be liable under section 447 and shall be unlimitedly and personally liable for all the damages they have been incurred, that have been incurred by the depositors. So they will be liable under section 447. They will be liable under section 447. Easy. Section 75, which is damages for fraud. If you see the word fraud, it is always AK-47, section 447. AK-47, section 447. Then, any suits or proceeding or action may be taken by any person or a group of persons who have suffered loss on account of non-payment of deposit. So any legal case will also go on them, but penalty they will be levied as per section 447. So this is section number 75. 75. Next is 76A. 76A. Penalty for contravention under section 73 and 76. It says, if a company has accepted deposits in contravention of the condition mentioned in 73 and 76, or you have not repaid, either you have accepted wrong or you have not repaid, so there is a default in repayment of deposits or part or interest, then company will be liable for repayment of deposits plus penalty of 1 crore. Deposit you have to pay plus penalty of 1 crore or twice the amount of deposit subject to maximum 10 crore. Penalty of rupees 1 crore or twice the amount of deposit, whichever is less, subject to maximum 10 crore. Subject to maximum 10 crore. So rupees 1 crore or twice the amount of deposits, whichever is less, subject to maximum 10 crore. At the most penalty is 10 crores. Officer will be liable for imprisonment up to 7 years and 25 to 2 crore. Up to 7 years and 25 to 2 crores. Up to 7 years and 25 lakhs to 2 crores. So this is the penalty for contravention of 73 and 76. This is 76. It came as a new section. If you have accepted a deposit where you were not allowed, or you have accepted but you have not repaid, then company you are liable for, first you have to repay the deposit plus penalty of 1 crore or twice the amount of deposit, which is less, subject to max 10 crore. And officer will be liable for imprisonment up to 7 years and 25 lakhs to 2 crore. 25 lakhs to 2 crore. If it is proved that the officer of the company who is in default has contravened such provisions knowingly, willfully, with intention to deceive the shareholder, creditor, depositor, he will also be liable under section 447. This is just a mere repetition what we did in the earlier section. but this is written in section 76A. That was pure on fraud section 75. So it was introduced off late. 76A means it was an amendment ka part. Clear? Do this again. 76A is important MCQ because it is a late new section of late. Done? Then what is the procedure for acceptance of deposit? Section number 73. It's a procedure very rare in the exam, but yeah, a lot of MCQs are there. It says a company is required to pass a resolution at general meeting for accepting deposits. If it is within the limit, it is OR. If it is above the limits of 180, 160, it is SR. Company shall issue circular whether in English and vernacular language before accepting the deposits. Okay, a certificate of stat auditor in form number DPT1. DPT1 means deposits should be attached, stating that a company has not defaulted in repayment and deposits in repayment of deposits in past. Repayment of deposits in past. Then the circular shall contain the following: what? The financial position, total number of depositors, then credit rating obtained, amount due towards previous deposits, and other particulars as prescribed. A fresh circular shall be issued every year for inviting deposits during that financial year. Company should file circular with ROC within 30 days before the date of issue of circular. So first you have to file with ROC before the issue of circular to the public. So it's very important. Circular should be issued. Form number DPT1. You have to take a certificate in form DPT1 should be attached to the that circular. Then company should deposit minimum 20%, MCQ, minimum 20% of the amount of deposits maturing during the following financial year. Whatever deposit will mature in the next year, you have to deposits minimum 20% of that. It shall be deposited in a separate bank in a scheduled bank called as DARA account. DARA means deposits repayment reserve account. Deposit repayment reserve account. That means whatever deposit will get matured in 24, as imagine 100 rupees, uska 20%, that's 20 rupees I will deposit in a scheduled bank called as DARA account. It should be deposited on or before 30th April each year. Before 30th April each year. It cannot be used for any other purpose except repayment of deposits. Cannot be used for any other purpose except repayment of deposits. Then company should certify that there is no default for repayment of deposits or interest. If defaulted and the default is rectified and 5 years have passed, then only they can accept fresh deposits. So if you have defaulted in the past, you cannot accept deposits for 5 years. Sir, if you have taken the deposits and you have not repaid, that means you have defaulted and the default is rectified. Still you have to wait for 5 years. Still you have to wait for 5 years. MCQ. Still you have to wait for 5 years. Then only you can accept deposits. Then only you can accept deposits. Okay. Company shall provide security for repayment of deposit, and for this they will create a charge on the asset. Charge wala point. If deposits are unsecured, all circular advertisement will state that it is an unsecured deposit. But if it's a secure deposit, they have to create a charge on the assets. If deposits are unpaid, the depositors can apply to the tribunal, and then tribunal will take a necessary action. Then the tribunal will take the necessary action. Babo. Babu. Then deposits can be accepted for minimum 6 months, maximum 36 months. Minimum 6 months, maximum 36 months. Minimum 6 months, maximum 36 means 3 years. It can be less than for 6 months also if such deposit are maximum 10% of capital frees up plus security, and such deposit are accepted for minimum 3 months. So below 6 also you can go, but at least for 3 months you have to go. But that deposit can be maximum 10%. So MCQ, minimum 6 months, maximum 36 months. Below 6 months also you can go, but that is for minimum 3 months. And such deposits are for maximum 10% of capital frees up plus securing. If a company fails to repay deposits, whether secure or unsecured, they are liable for 18% interest for the amount overdue. First interest percentage in this entire chapter, 18% interest. MCQ, 18% interest. A company can pay brokerage or interest, but it shall not exceed the max rate prescribed by the RBI. Okay, in case of NBFC for acceptance or deposits. Okay, brokerage ka percentage will be prescribed by RBI. Max limit of deposits. Max limit of deposit is not applicable to the following. Max limit of deposit is not applicable to the following. Max limit of deposit, this one. This diagram is not applicable to the following. A startup company for 10 years and a private company following 3 conditions. A startup company for 10 years and a private company fulfilling 3 conditions. Okay, it is not an associate and a subsidiary of any company, and they have taken a loan of less than twice of the capital or 50 crores, whichever is less, and they have not, and there is no default existing for such loan. So they can accept more than the percentage prescribed. Startup company for 10 years and a private company following 3 conditions, not an associate and a subsidiary, and loan is taken of less than of twice of paid up capital of 50 crores, and no default for existing for such loan. Such company shall file DPT3 to ROC, that is if they can accept more than 100%. So I have given the interpretation here, they can accept more than 100%. Point 1 to 4, 1 to 4 are not applicable to following, that is they can accept deposit without following 1 and 4. 1 to 4 without following 1 to 4. This circular, resolution, circular, 20% wala rule, and 5 years wala rule. That is a private company accepting deposit up to 100%. Startup company for 10 years, that is same above wala point. A private company fulfilling above conditions, above 3 conditions. So these two are same. These two are same from the above. So just a theoretical point for practical life, very rare in the exam. Okay. Then appointment of trustee and register of depositors, you have to do it from the main book. I'll just open the notes so that you can check. Appointment of trustee. So whenever you are accepting the deposits, secure deposit. Which deposit? Secure deposits. So you can accept it only if you have appointed one or more trustee for the depositors. Consent of trustee. Before appointing them, you have to obtain written consent from them. Then you will enter into a deposit trust deed in form number DPT2 at least 7 days before issuing circular or the advertisement. So you will enter into a deposit trust deed in form number DPT2. Sir, following are not eligible to be the trustee. They can ask you this in the exam. A director or KMP or officer of an employee of the company or the holding company or the subsidiary company or the associate company or the depositor. You cannot, these people cannot become the trustees. Person indebted to the company or the holding company or the associate company, Chas company. Okay, you cannot be a depositor trustee. Person having any material pecuniary relationship with the company. Person who has given guarantee, or any person who is related to the person specified A. So these 5 people cannot become depositor trustee. Other than these people they can become. Removal. No trustee for deposit shall be removed from office after the issue of circular or advertisement before the expiry of term, except you can remove if all the directors present at the meeting. All the directors means 100% approval is required, and in case the company is required to have ID, at least one ID shall be present in such meeting. So 10 directors were there on the board, 7 directors have attended the meeting. That means all 7 directors should give the approval. 4 directors have given the approval, removal is invalid. So all the directors present at the meeting, all the directors present at the meeting. If you have 10 directors on the board but 7 are present at the meeting, so all 7 ka approval is required. If ID is applicable to you, one ID should also be present in such a meeting. Then register of depositors, I have told you, can just read this. It is an RTP one answer. RTP. Finish. Chapter is over. So deposits may come in the exam, minimum 3 marks, it can go to 6 marks. So with this, deposit is also done. Okay guys, so all the best, aim for a rank or 70 plus, whichever is earlier. We continue in the next class. Bye guys, take care. Babo. Bye.
Hi guys, welcome back to the class, and right now we start with our second part, wherein right now I'm teaching you foreign company chapter. So in your notes, please open foreign company chapter. So all those people who have studied through me at any of the class in English, or whether you have studied in Hindi with me, so this is a chapter revision. Again, I'm repeating, it is just a revision. It is not teaching. For teaching, you have to buy the lecture. In case whenever you are appearing, in case of any of your friend, cousins, family friend, office colleague is appearing and they want law lectures, they can buy the lectures from the link given below. Okay, so we start with foreign company chapter. That's companies incorporated outside India, new chapter. It will definitely be there in the exam, like for next 2-3 attempts ISA would definitely be asking it. So first section is section 242. So it is a company which is incorporated outside India, having a place of business in India, established either through itself or through agent, whether physically or electronically, and conducting any business activity in India. That's the definition 242. So they have to file scrap A. So what is S? Section is 380. Section is what? 380. Scrap A. S. S says details of secretary, directors, their name, address, occupation, nationality. C, details of charter, MOA in English. If it is not in English, in a certified translated copy. R, full address of the registered office, foreign wala. A, authorized person resident in India. A, authorized person resident in India. P, place of business in India. E, eligibility. Eligibility, what you will say? None of the directors or authorized person have been ever debarred, whether in India or outside India. Okay, they will give a declaration. Scrapper should be given to ROC of New Delhi in form number FC1. What is the form number? FC1. Within how many days? 30 days of establishment of business. Any alteration you will give in, any alteration scrapper you will submit in form number FC2 within 30 days of making the alteration. Any alteration scrapper should be filled in form number FC2 within 30 days of making alteration. Then, sir, place of business include what? Section is 386C. It includes share transfer office, share registration office. Share transfer office, share registration office. Share transfer office, share registration office. Now, sir, what is deemed Indian company? 379. If in a foreign company, minimum 50% of paid up capital is held by either preference or equity or both is held by either Indian citizen or Indian company. Indian citizen or Indian company. Then such company shall be deemed to be. Such company shall be deemed to be a company incorporated in India. Then if it is a foreign, it is a deemed Indian company, they have to comply with chapter 22. So what is chapter 22? Chapter 22 is foreign company chapter and such other provisions. What will you say? Such other provisions as may be prescribed by CG. Such other provisions as may be prescribed by CG. Such other provisions as may be prescribed by CG. You have to comply with chapter 22. That's foreign company because you are a foreign company, and some other provision because you are an Indian company. So central government will tell which provision you have to apply. So these 4 sections are very important. Definition will be there in the exam. Then section 381. It says accounts of foreign company. Every foreign company shall prepare the affairs of its Indian business operation as per schedule 3, or as near thereto, including documents to be attached, as per chapter 9, that is accounts of company, as per chapter 9, accounts of company. And they also have to attach the latest CFS. They also have to attach the latest CFS and other documents which the CG has prescribed. But if you want exemption, guys, if you want exemption, what you have to do? You have to apply to CG. For exemption, you will apply to CG. The above document should be in English. If it is not in English, then a certified translated copy. Foreign company should also give it to ROC. What? List of place of business in India. In form number FC3. Form number, guys, FC3. Now, foreign company shall also give a statement. Along with the statement, they have to give 3 statements. Along with the FS, they have to give 3 statements. Statement of related party transaction, repatriation of profits, transfer of funds. Related party transactions, repatriation of profits, transfer of funds. All the documents should be submitted to ROC within 6 months from the close of the financial year. And it should be audited by a practicing CA or CA firm, including LLP. It should be audited by a practicing CA or CA firm, including LLP. Cool. Now, Section 382, to disclosure. Section 382, to disclosure. So the name of the company and the country of incorporation. What it is? Name of the company and the country of incorporation should be exhibited outside every office or place of business in English and in local language. And it should also be stated on all the letters, bills, notices in English. Sir, second disclosure, the liability of the members is limited. The fact that the liability of members is limited, same point, should be exhibited outside office, place of business in English and local language. And it should also be stated on all the letters, bills, notices and prospectus. What is added? Prospectus in English. Prospectus in English. Okay. 382, to disclosures. 383, service of documents. 383, service of documents. How you will serve to the authorized person? Either by post, hand delivery, electronic mode. Post, electronic mode, hand delivery. 383, service of documents. Kassa section. 380, charges. So foreign company shall file returns to ROC in respect of creation, modification, satisfaction of charge. Creation, modification, satisfaction of charge. Now, few section will be mutatis mutandis applicable to foreign company. What are the few sections? Sir, first one, section 71, that talks about issue of debentures. 92, annual return. Then 128, books of accounts. 135, CSR. Then chapter 6, that talks about charges. And chapter 14, inquiry, inspection, investigation. Inquiry, inspection, investigation. So this section shall apply mutatis mutandis to foreign company. 71, 92, 128, 135, chapter 6, chapter 14. Okay. And one important point. Annual return should be given in form number FC4 within 60 days. So 4 forms are there. FC1, it is 30 days from coming to India. FC2, alteration, 30 days from the date of making alteration. FC3, list of place of business within 6 months from the close of financial year. FC4, annual return within 60 days from the close of the financial year. So 3 and 4 is from the close of financial year, that is 6 months and 60 days. Sir, penalty. Very important penalty. Sir, 392, minimum 1 lakh, maximum 3 lakhs. Minimum 1 lakh, maximum 3. Plus 50,000 rupees per day till the default continues. Per day till the default continues. Officer ka fine is 25 to 5 lakh. 4 mark ka answer. Officer 25 to 5 lakh. Company 1, 2, 3 and 50,000 per day. 50,000 per day. Okay. Then next section 6, contents of prospectus. Section number is what? 387. Contents of prospectus. Sir, an instrument defining or constituting the constitution of company. That's Mawa. Number 2, the provision under which the company was incorporated. The provision under which the company was incorporated. Then, address of place in India where the above documents can be inspected. Address of place in India where the above documents can be inspected. D, date of incorporation. D, date of incorporation. E, country. E, country of incorporation. F, address of place of business in India. Address of place of business in India. Okay, the first three, A, B, C should not be given, is not applicable when the prospectus is issued after 2 years of commencement of business. Foreign may. So ABC is not applicable when the prospectus is issued after 2 years of commencement of business. Clear? 389 talks about annexures to prospectus. Annexures to prospectus. That's what will you add behind the prospectus. Prospectus should be signed with ROC before circulation and it should be approved by chairman and 2 directors. It should be approved by chairman and 2 directors. Number 1, sir, expert opinion you will add. Number 2, copy of contracts with MDWTD. If the contract is not in writing, then the memorandum should be attached. Then material contracts not entered in ordinary course. Guys, material contracts not entered in ordinary course but entered in last 2 years. Material contracts not entered in ordinary course but entered in last 2 years. And then copy of underwriting contract. E, power of attorney. What is E? Power of attorney. Prospectus is signed by the agent of the directors. Power of attorney of the prospectus is signed by the agent of directors. Okay. So these 5 things will be annexed to prospectus. 389. Then Indian deposit receipts. So a company which is incorporated outside India, having a place of business in India or not having a place of business in India. That means a company which is, whether it's a foreign company or not a foreign company, only they can issue IDR. Only they can issue IDR, which should be authorized by CG in addition to the direction issued by SEBI and RBI. So the rules will be framed by CG in consultation with SEBI and RBI. Rules will be framed by CG in consultation with SEBI and RBI. Now, 393 section is what? 393. It says company's failure to comply with the provision of this chapter not to affect the validity of contracts. Section 393. If company has contravened the provisions, okay, whatever contract they have made prior to that, those contract will be valid. Those contract will be valid. Any failure by a foreign company to comply with this chapter will not affect the validity of the contract or a dealing or a transaction entered by the company or its liability to be sued. They can't sue, but somebody else can sue. They can't sue, but somebody else can sue. Section number is what? 393. Then, the company shall not be entitled to bring any suit, claim any set-off, make any counterclaim or constitute any legal procedure until the company has complied with the provision of this chapter. Okay. So, you can't file the suit, you can't claim set-off. Somebody else can sue on you. Then, very Kassa section 34, 35, 36 shall apply mutatis mutandis to foreign company, and winding up chapter 20 shall also apply mutatis mutandis to foreign company. Shall also apply mutatis mutandis to foreign company. Section 34, 35, 36 plus chapter 20, that is winding up, shall apply mutatis mutandis to foreign company. This is section number 391, Kassa section. Expert का consent. See, sir, if you are taking the expert का consent, you are taking expert का opinion. Obviously, you will take his consent to be added in the prospectus. So you add consent also, you add opinion also. But sir, you have taken the opinion, but you are not adding that opinion. So he has given some opinion somewhere, and you are using that reference. Yes, that reference. Will it be assumed that you are using expert का opinion? The answer is yes. So if you are using that opinion, you have to take his consent, and that consent should also be attached. So if you have added the opinion or you are added the reference, it will assume that expert has given the opinion. And if expert has given the opinion, you have to take his consent, and consent should also be attached. Okay. Read this section from the screen. Only read. Done? Now, 4 forms are there. FC1, 2, 3, 4. 1. Registration. 2. Alteration. 3. Place of business. 4. Annual return. 30 days from the establishment of business. 30 days of the alteration. 6 months from the close of financial year. 60 days from the close of financial year. Finish. Foreign company. Finish. Again, I am telling you, it is not a fast track batch. It is not a crash course. It is just a pure revision for the exam content. No time pass, straight to the point. Okay. Foreign company, very, very, very important chapter. Okay. Now come to a chapter called as membership. Again, very simple. I am not getting membership in my book. Yeah. Membership. So define members and ways of acquiring membership. So member means a member does not include bearer of share warrant. What will you say? Member does not include bearer of share warrant. You can become member by state. Subscribing to the MOA, T. Transfer, A. Allotment, T. Transmission, E. Estoppel. Sir, subscribing to the MOA, T. Transfer, A. Allotment, T. Transmission, E. Estoppel. Important estoppel for the exam. Sir, who can become a member in a company? Everybody can become a member. Society, trade union, foreigner, government, insolvent, who is already a member. Okay, new insolvent cannot become. Joint shareholder can be a member in the company. Trust, HUF partnership firm. Who? Sir, trust, HUF partnership firm cannot become a member. Trust, HUF partnership firm cannot become in the member in a company. However, a partnership firm can become a member of Section 8 company. Partnership firm can become a member of Section 8 company. Partnership firm can become a member of Section 8 company. Now, sir, can a minor be a member in a company? Sir, as per Indian contract, any agreement with minors would have been issued. However, Companies Act does not contain any disqualification. As per Mohiri Bibi versus Dharamdas Ghosh, it was held that the minor can be a beneficiary. Minor cannot subscribe to the mover. Agreed. Because any agreement with minor is void. Minor can become a member by what? Transfer or transmission. By transfer or transmission, provided the shares are fully paid up. Very important line. Minor can become a member by way of transfer or transmission, provided the shares are fully paid up. The company should take care to enter the name of guardian in the register of members. Then, sir, what are the rights of member? To receive notice, to vote, to attend meeting, to declare dividend, to appoint proxy, and to appoint auditor or director. So these are the rights of member. Receive notice, vote, attend meeting, declare dividend, appoint proxy, and appoint director or auditor. Then fifth, how can a membership be terminated? How can the membership be terminated? Sir, fish 2. The code was fish 2. F, forfeiture of shares. I, issue of share warrants in exchange of share certificate. S, surrender of shares. S, sale of share. T, transfer. One more T, transmission. Fish 2. Forfeiture, issue of share warrants, sale of shares, surrender of shares, transfer, transmission. Finish. Only 2 points are important. First, minor can become a member provided the shares are fully paid up. That is 1 point. Number 2, estoppel wala point. You can, if you are a member by estoppel, you are liable for the debts of the company. Okay. Chapter over. Very simple chapter. Next, we are doing General Clauses Act. We are doing General Clauses Act. Okay. General Clauses Act. Okay. So very simple chapter. 3 to 6 marks of weightage. Sir, what is the purpose of the act? It is the purpose is to provide interpretation of various terms, providing the statute, act or law. Statute ka spelling is wrong, which is given in the Central Act. The terms which are not defined or which is defined but the interpretation is contradictory. So this act will be used. Sir, when it is applicable? If you remember the diagram, this diagram we have studied long back. If an act is formed after GCA 1897, okay, then the GCA 1897 will be applicable to the wholly. But if there is an act which came before 1868, like Society Registration Act, then GCA will not be applicable. However, if an act came between 1868 to 1887 and 1887 to 1897, then the GCA will be applicable partially. GCA will be applicable partially for some definition. Okay. So GCA is applicable on all the central act formed by the Parliament with the assent of President of India. When? After 26 January 1950. This diagram. If an act is formed after 26 January, it will be approved by Parliament and approved by via President. If the act was formed before Republic Day, then it will be approved in Constitutional Assembly and approval of the Governor General. Approval of the Governor General is required. So GCA 1897 is applicable on all the central act formed by the Parliament with the assent of the President of India, or formed by with the Constituent Assembly with the assent of Governor General. Understand? Pre-Republic and post-Republic. However, Section 4 provides that the provision of such shall also apply partially. On all the central acts which were incorporated during the applicability of GCA 1868 or GCA 1897. So it will be applicable partially, not completely, partially. They will never ask in the exam. Types of states, you can mark this as RTP. Type of states, mark this as RTP. Now, next question is explain preamble. So preamble is basically when you open the bare law, you have to read the first few lines. It gives you the object scope of the act. It does not override the provision of the law. Every act has a preamble which expresses the scope, object and purpose of the act. It acts as an aid to interpretation. It helps in interpreting the act. Preamble does not override the provision of the act, but it can be used for interpretation of the act. Okay. The next answer, explain definition. Definition we are studying. So every act contains some definition which is usually written either in section 2, 3 or some initial section, that's section 1. However, if the definition is mentioned in the act, you will follow that definition. If it is not followed or the interpretation is contradictory, you follow GCA Act 1897 should be followed. Okay. Very important answer, means and includes. Means it is used in the definition, that is, it is called as exhaustive definition. If it is used in the, if includes is used in the definition, it is called as extensive, that is inclusive definition. Sir, means is basically what? Exhaustive. Includes is called as inclusive, that is extensive definition. Exhaustive, extensive. Along with the example, they have asked 2 mark answer. So director means a director appointed by the to the board of the company. It is called exhaustive, clear definition. Same. Includes means a lot of things. Body corporate includes a company incorporated also India or some other thing. That is inclusive definition. 2 mark answer, 3 mark answer. Straight away this much only. Me, means exhaustive, includes means extensive, includes means extensive, includes means extensive. Then the word shall is a mandatory force, the word may is a directory force, correct? But shall may be used as may shall be used as shall, correct? Mandatory force, directory force. Questions from the our book, okay? Question, there are 22 questions, do those questions thoroughly. Now few definitions we have to define, so I am doing right now all important definitions. First we are doing affidavit. Sir, affidavits include what? Any affirmation and declaration in the case of persons by law allowed to affirm or declare instead of swearing. So when I am saying that I am saying this thing, this, okay, that I will give it in writing. It is called as what? Affidavit. It is called as what? Affidavit. Now of late, I mean, when you turn the page, you will see that affidavit, swearing, oath, everything means the same. Affidavit important. Document. So document includes any matter, whether it is written or expressed or described upon any substance by means of any letter, figures or marks by more than one of those means, which is intended to be used or which may be used for the purpose of interpret or for recording that matter. It is called as document. If I draw something on a paper or write, I record, it is called what? Document. Important. Financial year, important. Financial year versus calendar, the question is there in a book, it came in the exam 2 marks. Financial means a year which is starting on 1st day of April, ending on 31st March. Calendar year starting on 1st January, ending on 31st December. Financial year versus calendar. In the book, there is a question, okay? Sir, Central Act. Central Act means an act of the Parliament and shall include an act passed before the commencement of the Constitution and an act made before the commencement of the Constitution by Governor General. Who will do this? By Governor General. Logical. Before Constitution, who was there? Constituent Assembly, Governor General. After Constitution, it is Constitution, Parliament and President of India. Central government. Very nice definition. If an act is formed before 26 January 1950, then Governor General will be the central government, and it includes government of province with respect to laws of provinces, Chief Commissioner with respect to the state under control of Chief Commissioner. Like we have central government and state government, right? Today, at that time it was Governor General, Government of Province and Chief Commissioner with respect to state under the control of Chief Commissioner. Now, an act which is formed on or after 26 January 1950. Who will give the approval? President of India. And it will include what? State government with respect to state government, Chief Commissioner or government of the neighboring state and the administrator of UT. This is current stage. So this also they have asked in the exam. Explain central government. Explain central government. Then, important, official gazette. So official gazette means the Gazette of India and the Gazette of State. Gazette of India and the Gazette of State. The Gazette of India, it's a gadget, okay? Gazette of India is a public journal which is an authorized document which is published by the Government of India, published weekly, MCQ, published weekly by the Department of Housing and Urban Affairs. Now it is printed by which? Government of India Press. It is printed by whom? Government of India Press. So 3 mark, 4 mark answer, explain official gazette. It is basically Gazette of India or the official gazette of state. It is a public document which is published weekly by the Government of India via which department? Department of Housing and Urban Affairs. It is printed by the Government of India Press. Clear? The term affidavit, oath, swear all have the same meaning. Sir, what is effective date? If the date is mentioned, from the midnight of that date. When we say a law is effective from this date. So from which date? Sir, from the date, if the date is specified, from that particular date. If the date is not specified, the day when the act has been assented by the, in case of President of India, when the acts are incorporated after 26 January 1950, and Governor of India, if the act is incorporated before 26 January 1950. Okay. Then, explain repeal of provision and deletion of provision. Repeal is basically you have removed it, delete is like permanently delete. Okay. So just read this, you need to mug it up, direct answer. You need to mug it up. Read this answer right now from the screen. Done? So repeal brings complete obliteration, means complete deletion of the provision as if it never acted. It's like ukhad ke fenkna, in Hindi we say ukhad ke fenkna. It's removed completely, okay? Now, deletion only takes effect from the date, from that date it is deleted. Deleted means it is deleted from that date, and repeal means it is removed like from, it never existed only in the provision, okay? It never existed. Now, explain commencement and termination of time, okay? So, for the purpose of law, when you calculate, there are questions on this, like dividend ka question is there, when you calculate the time limit, how do you calculate? The first day should be included, and sorry, the first day should be excluded, excluding the first day, including the last day, excluding the first day, including the, like when we say we have posted this letter and it should reach by within 30 days. Okay, so what will you do? You will exclude the first day, include the last day, exclude the first day, include the last day. From the word, if from is used, exclude that, and if it is to, you have to include this. Refer questions for more clarity. Exclude the first day, include the last day. Computation of time. Now, time to take legal action, okay? Within the time, you have to take the action within specified time, like 2 years, 3 years. Now, if the court is closed, if on that day the court is closed, if it is a limitation act transaction, then you will follow which day? You have to go, the last day will be the preceding day. If it is any other act transaction, then the next working day on which the court is open. The next working day on which the court is open. Generally, for limitation act transaction, it is the previous day. But if any other act transaction, it will be next working day on which the court is open. Limitation act is like 3 years, time bar date wala point. Gender and numbers. The word importing the masculine gender shall be taken to include females. The male will include female, male will include female. The words in singular shall also include the plural and vice versa. However, bullocks could not be, okay, so the word bullocks could not be interpreted to include cows, okay. So this is important because there's a question in the question bank in our book, okay. Now, what is the procedure to make rules or bylaws? Like imagine if ICA came up with the new notification, we are bringing the new law. So what is the procedure generally? So it says, whereby any central like a power to make rules or bylaw is expressed to be given, subject to the condition in the previous publication, then the procedure will be, following is the procedure. First, the authority has the power to will publish the draft of the proposed rules for the information of the interested person, like all the stakeholders, ICI students were there, CAs were there, government was there, okay. Whatever you have a comment, you please tell us the comment. Then, the publication shall be made in such manner as the authority deem fit, The time period shall be published, should be published in the draft published by the authority, like it will be open for 2 months, it will be open for 30 days. Then the interested person will make the recommendation and the objection received from the interested person. If the authority is in consultation with any other board, then or panel, then the recommendation, their recommendation should also be considered. Thereafter, the authority shall publish the rules and the bylaws, and that publication shall be conclusive evidence of framing that particular law or rule. So, if considering those comments, whatever comments they have received, what they have received, it will be published. Once it is published, it means it is applicable. Okay. Now, punishment under 2 acts. It is punishment under 2 acts. So, if you are punished in like CA Act also, in Companies Act also, so you will not be punished in 2 acts there. You will be punished only in 1 act. So, when an act or omission constitutes an offence under 2 or more acts, then the offender shall be liable to be prosecuted and punished under either or any of those enactments, but shall not be punished twice. Okay. So, there are question, advocate wala question is there in the book. Please do that question. Now, meaning of service by post. What it is? It is meaning of service by post. Important answer. Now, all these are important answers. Where any law or regulation requires any document to be served by post, then unless a different intention appears, it will always be assumed that it is effective when you are properly addressing it, you are prepaying it, that means you are paying the post company and you are sending it by registered post. Properly addressing it, prepaying it and posting it by registered post. If a notice is required to be sent by registered post acknowledgement due, then it should be sent by registered post acknowledgement due only. But if it is sent by registered post, then the benefit of section 27 will not be applicable. Okay. If somebody has refused it or not claimed it, it will be assumed that they have served. So, rent wala question is there in the question bank. Okay. Rent wala question is there. Do those questions thoroughly. Good faith. A thing shall be doomed to be have done in good faith when in fact it is done honestly, whether it is done negligently or not. However, remember, jago grahak jago. The term good faith has been defined differently under different laws. An honest purchase made carelessly without making proper inquiries cannot be said to have been made in good faith so as to convey good title. An honest purchase made carelessly without making proper inquiries cannot be said to have been made in good faith so as to convey good title. Okay. Government. Wow. The word government or the government. shall include both central government and state government also. However, whenever the word government is used, it will include both central and state government. Time pass answer. Important answer. Immovable property. What it says? Sir, immovable property includes land, benefits arising out of land, things attached to the earth, and permanently fastened to anything which is attached to the earth. Okay, I have a land, on that there's a building, in building there's a machinery. Okay, so that machine is also immovable property, that building is also immovable property, that land is also immovable property, like land, trees, roads. Okay, but two things are not immovable property. What? From the model we have done this, timber and right to drain water is not immovable property. Don't ask me logic, but it is not immovable property. In MCQs they can ask. Timber is logical, this is tree. When you cut this, so tree is immovable property, okay? When you cut this, it is a timber, like the wood. It is not immovable property. And right to drain, what it is given in the model, so you mug it up, it is not immovable property. Understood? One more chapter done. Cool. Next, we start with the next chapter. Next chapter we are doing is LLP. Please open LLP Act. Okay, let's start. Sir, what it says? So LLP, important points. The bill was passed on 12th December 2008. President Cutting came on 7th Jan 2009. Act was notified on 9th Jan 2009. Applicable to whole of India. How many sections are there? 81. Now 81 is now omitted. All 81, only 81 is now omitted, and there are 4 schedules. First, second, third, fourth. First talks about rights and duties of partner. Conversion of firm into LLP, conversion of private into LLP, public into unlisted public company into LLP. Rights and duties of partner, firm into LLP, that's partnership firm, then private into LLP, public company into LLP. LLP is a hybrid between the company and partnership, basic of your foundation. Now, what are the features of LLP? So, it is the liability will be limited to the extent of the capital contribution. Now, LLP itself will be liable for all the debts of the company to the extent of its assets, all the debts in case there is a debts to the extent of its asset. Now, it allows the partners the flexibility of organizing their internal structure, alternative organizing corporate business vehicle it is, and it is a new form of legal business entity with limited liability. Features, very rare in the exam. Refer definition from the book. Okay, body corporate, financial year, foreign LLP. Body corporate definition, financial definition, foreign LLP. This you have to read it from the book. Okay. Now, what is small LLP? A small, very important, it will come in the exam for sure, or maybe in MCQ. LLP means, small LLP means contribution is less than or equal to 25 lakhs, that's max, and turnover is max 40 lakhs, 25 lakhs, 40 lakhs, 25 lakhs, 40 lakhs, and meet such other requirement or conditions, or meet such other requirements or conditions which may be specified. Right now, nothing is specified. Contribution maximum 25 lakhs and turnover maximum 40 lakhs. If you remember small company, we have done 4 and 40, capital and turnover, 440, right? 4 crores and 40 crores. Here it is contribution and turnover, it is 25 lakhs and 40 lakhs, 25 lakhs and 40 lakhs. Now, sir, what are the advantages of LLP? It is a form of business model which is organized and operates as a basis of an agreement. It provides flexibility without imposing detailed legal and procedural requirements. It is easy to form. What will you say? It is easy to form. All the partners enjoy limited liability. And it is easy to dissolve. So what it is basically the advantage of LLP. Now, sir, partners. An individual or a body corporate can be a partner in LLP. An individual or a body corporate can be a partner in LLP. An individual cannot be a partner if he is unsolvent, undischarged, insolvent, applied for insolvency. That's logical. Now, following persons can become a partner in LLP. Who are the people? Individuals, resident, non-residents, overseas citizens of India, and foreign nationals. Resident, non-resident, overseas citizen of India, foreign national. LLP can also become. Company including foreign company can become. Foreign LLP can also become. LLP incorporated outside India, having no place of business in India, and foreign companies can also become partners in LLP. However, corporate society and corporation cannot become partners in LLP. Two important points: corporations and corporate society cannot become partner in LLP. Corporations and corporate society cannot become partner in LLP. Now, minimum partners. So, there should be minimum how many partners? 2 partners. If number of partners fall below 2 and such LLP carries on business for more than 6 months, same concept of Companies Act, then the partners who is left will be liable for the obligation of the LLP incurred during that period. Obligation of the LLP to incur during that particular period. Sir, designated partner. What it is? Designated partner. Every LLP shall have minimum 2 designated partners who are individuals, and at least one of them shall be a resident of India. What will you say? And at least one of them shall be a resident of India. If in LLP all the partners are body corporate, or in which one is individual and the other are body corporate. One is individual and other is body corporate. Then at least two individuals who are partners of such LLP or nominees of such body corporate shall act as designated partner. If in LLP all the partners are body corporate, or in which one is individual, other is body corporate, then at least two individuals who are the partners of such LLP or nominees of such body corporate shall act as a designated partner. One should be there. Okay. Resident in India means who are staying in India for minimum 120 days. Minimum 120 days of a financial year. Okay. Residential status for LLP is different. Then, if the incorporating document states that the designated partner, then such person shall be designated partner. Mr. Ram Shyam is DP, then he is DP. If it states that each partner, then from time to time, then such DP then shall be DP, then every partner shall be DP. Generally, Mr. Ram and Shyam, if they say he will be DP, then they are DP. But if it says each partner from time to time can become DP, then every partner will be a DP. Okay. Incorporation document, basically like we have company memo, here we have incorporating documents. Any partner may become DP or cease to be DP as per the LLP agreement. Any partner may become DP or cease to become DP as per the LLP agreement. An individual shall become DP only if he has given a prior consent to become DP in the prescribed form. So, okay, I am ignoring the form numbers in the prescribed form. Every DP shall obtain DPIN, that is designated partner identification number. Designated partner identification number. Clear? Now, sir, changes in DP. What is changes in DP? Sir, LLP shall appoint a DP within 30 days of vacancy arising. LLP shall appoint a DP within 30 days of vacancy arising. If no DP is appointed, or if at any time there is only one DP, then each person shall be deemed to be a designated partner. Then each person shall be deemed to be a designated partner. So, what is the penalty for contravening? It says if the number of DP is less than 2, then LLP and each partner shall be liable for minimum 10,000 rupees, 100 rupees per day, subject to maximum 1 lakh for LLP, 50,000 for partner. If LLP fails to contract of DP, file contract DP within 30 days. So it says this is number false. This you have failed to file the contract of DP within 30, like the consent. Okay. Then LLP and partner shall be liable for minimum is 5,000. Here it was 10. Here it is 5. 100 per day. 100 per day. 1 lakh. Okay. Here it is 50,000. 25,000. Half. 10 ka half 5. 100 per day remains same. 1 lakh ka half 50. 50 ka half 25. If the vacancy of DP is only not filled, then same as point number 1. Same penalty. 10,000, 100 per day, 1 lakh maximum, 50,000 for the partner. Okay, penalty important. Then, sir, what are the contents of incorporation document? Direct theory answer. What are the contents of incorporation document? Sir, you have to state the name of LLP, then the proposed business of LLP, state the address of the registered office of the LLP, then state the name and address of each of the persons who can be the partners of LLP on incorporation, state the name and the address of designated partner, and contain such information as may be prescribed. 3 mark ka 4 mark ka answer. Contents of incorporation document: name of the LLP, business of the LLP, address, registered office ka address, name and address of the persons who will be the partners on incorporation, designated partners ka details, and any other. Okay. Sir, incorporation by registration. Incorporation by registration. If all the requirements of section 11, that is incorporation document, are complied with, then ROC within 14 days will register the incorporation document and will give a certificate that LLP is incorporated by the name so specified. The ROC may accept the statement delivered under section 11 as a sufficient evidence that all the requirement of section 11 has been complied with. Okay, he will accept it. The certificate so issued shall be signed by the registrar and authenticated by his official seal. So, this is a procedural requirement. Then, the certificate shall be a conclusive evidence that all legal formalities have been complied with and LLP is incorporated. It is a conclusive evidence. Registered office of LLP and changes therein, you have to read the book, page 383, point number 5. Okay. People who are doing it from the module you have to read 12.7. Just you have to read change of office, registered office and changes. Okay. Like we in the companies, like we had shifting from one office, like Mumbai se apan Calcutta gaye, right? Calcutta you went. Now, sir, what is the effect of registration? LLP shall be capable of suing and being sued. You can also sue, someone else can sue. They can acquire, hold, dispose both movable, immovable property, both tangible, intangible property. Okay, have a common seal, do and suffer other things, like a body corporate, because it's a feature of body corporate only. Then, reservation of name. So, few sections you have to just read from the book. ROC will preserve the name for a period of how many months? 3 months from the date of information, from the date of intimation by the ROC. Okay. So, ROC, the time it informed you that this name is available, it will preserve the name for 3 months. 3 months. Okay. Model people, module, book people, book. Then, there is one more answer, rectification of name. Please mark rectification of name important. Like we had in the companies also, here also it is there, rectification of name LLP. Okay, book 384, module 12.18. Now, cessation of partnership interest. What it is? It is called a cessation, means stoppage of partnership interest. Sir, कब होगा वो? A partner may cease to become a partner by giving notice of minimum 30 days to other person. A partner may cease to become a partner by giving notice of minimum how many days? 30 days. Babu, yeah. A partner may cease to become a partner by giving a notice of minimum 30 days to other partners. Okay. A partner shall cease to become a partner if on the death, dissolution, declared unsound mind and declared as insolvent. Death, dissolution, unsound mind and insolvent. If a person ceases to become a partner, then the former partner, that's ex-partner, shall still be a partner unless he has given the notice, because it is mandatory to give notice to the partners, or the notice has been delivered to the ROC. So either you inform to the partners or you inform to the ROC. Then only you'll cease to be a partner. So what does that mean? Boss, if you have not given the notice, then you are still a partner, then you are liable for the debts. You are liable for the debts. The former partner shall also be liable for the acts done when he was a partner. That's logical. The former partner or the person who is entitled to his share, in case like nominee, in case of death or insolvency, shall be entitled to receive what? Capital so contributed and the right to share profits after deducting losses. So if you are alive and you cease to be a partner, so you will receive your capital plus the profit. If you died, your nominee will receive the capital plus the share of profit after deducting the losses. Then, former partner or the person entitled shall have no right to interfere in the management of LLP. Because you are ex, why will you interfere in the life? Okay. Then, registration of changes in the partners, you just have to read that, page number 386. Partners agent. Every partner of LLP is, for the purpose of the business of LLP, shall be the agent of LLP but not of the other partners. He is the agent of the LLP but not of the other partners. Liability. LLP ka liability, partner ka liability. So it's a direct answer. Just try reading this. Read directly from the screen. LLP ka liability, partner ka liability. Read. Done? Now, unlimited liability in case of a fraud, like 447 we have in Companies Act. So here also it says, in case of a fraud done by LLP or any of the partners with intent to defraud the creditors or any other person, then they shall be liable for unlimited for all or any of the debts or other liabilities of the LLP. However, LLP will not be liable if the act is done without the knowledge or authority of the LLP. So partners also are liable, LLP also liable. But if LLP do not knew the fact that they have done the fraud there, then it will not be liable. Such person shall also be punishable for minimum 50,000, maximum 5 lakhs imprisonment, 5 years. minimum 50, maximum 5, and imprisonment up to 5 years. There would be a question, so that's the reason we have written important this. Such person shall also be liable to pay compensation to the person who has suffered loss. Unlimited liable, penalty plus compensation. 3 things. Financial disclosure. They should maintain proper books of accounts in a prescribed manner. They should file statement of account and solvency within 6 months from the end of each financial year. 6 months from the end of each financial year. The statement of accounts and solvency shall be filed with the ROC every year in the prescribed form and manner along with the prescribed fees. Then audit of accounts and central government may exempt them. You have to read page number 390, main book, model people, page number 12.97, the audit of accounts. Who will do it? CA will do it. A practicing CA or a form of chartered accountant or LLP. Then next answer is basically your winding up. So LLP may be wound up by the tribunal, either or voluntary or by tribunal. Finish. If the LLP decides that the LLP may be wound up by the tribunal, if for a period of more than 6 months the number of partners is reduced below the 2, or if the LLP has acted against the interests of the sovereignty, integrity of the India or the security of the state or public order, like against the government of India, or if the LLP has made a default in filing with the ROC and the statement of accounts and solvency for how many years? For 5 consecutive years. If the tribunal thinks it is suitable and equitable, then the tribunal will wind up the LLP. First one is voluntary, other one is by the tribunal. These are the grounds. First one, membership, partners below 2 for more than 6 months. Number 2, against the sovereignty integrity of the country. Number 3, FS financial statements is not filed, a statement of account is not filed for the next 5 years. Then 4th, if it is just and equitable, then LLP wind up. Read differences on page number 397 in the book and model number 12.39. Annual return. Every LLP shall file annual return within how many days? Within 60 days from the close of financial year. FS was 6 months, it is 60 days from the close of the financial year in the prescribed form. Penalty 1000 per day, maximum 1 lakh, 100 per day, maximum 1 lakh, 100 per day, maximum 50,000. Penalty for false statement. If a person makes any false statement in any return, statement disclosure, which is false, he knows that it is false, or omits any material fact, then how much is the penalty? If it is false statement, then 1 lakh to 5 lakh, imprisonment 2 years. If it is, he omits it, 1 lakh to 5 lakh, imprisonment up to 2 years. Same. How do we remember this? 1 2 ka 5, 1 2 ka 5. Then read compromise arrangement, page number 393 and 395. Just a compromise arrangement, that means you are giving the share to the creditors, you are not giving money to them. That's compromise and arrangement. Again read well apart. Finished. LLP is over, guys. Important chapter, new chapter, it may definitely come in the exam. I do not know the weightage, it could be 4, 6, 8, 10, 12 also. Few small questions will be the 2 mark, 3 mark, 4 mark answer. Okay, do model questions thoroughly. Solve model questions thoroughly. Understood? Cool.
So hi guys, welcome back to the class. Today now we are starting with a chapter called as kinds of company. Okay. Again, people who have studied from different teachers, you will find this in preliminary chapter only. This is basically the definition wala chapter, definition wala content. Okay. So for sure you will see the weightage of the chapter is minimum 4 mark, it can go to 8 mark also. At least 2 or 3 definition you will find it in the exam. So first definition, define what is private company. So a company having a minimum paid up share capital as may be prescribed and having following restriction is called as a private company. What are the restrictions? The code is TRP. The code is TRP. T, restriction on transferability of share. R, restriction on membership. P, prohibition on public issue. So T, transferability of restriction on transferability of shares. R, restriction on membership. P, prohibition on public issue. Okay, how much is the membership, sir? Maximum 200. When accounting 200, employee member and ex-employee member. Employee member and ex-employee member shall be excluded. Joint shareholder shall be counted as 1. Joint shareholder shall be counted as 1. Employee member, ex-employee member shall be excluded and joint shareholder will be always counted as 1. Sir, what is a public company? What is a public company? If a company which is not a private company is a public company. A company which is other than a private company is called as a public company. The minimum paid up share capital shall be as may be prescribed. A subsidiary of a public company. A subsidiary of a public company shall be deemed to be a public company even when such company continues to be a private company in its article. A private company, if it becomes a subsidiary of a public company, then that private company shall also be called as deemed public company. Okay. Very rare in the exam you will see this definition. Question number 3. Very important definition. Sir, what is a small company? What is a small company? Very important in exam you will find this definition for sure because it's an amended definition of the previous attempt, not this attempt, the previous attempt. Sir, small company is a type of a private company. What will you say, guys? Small company is a type of a private company having paid up share capital of less than or equal to 4 crore, which can be increased up to 10 crores. The government can increase it, and having a turnover of less than or equal to 40 crore, which can be increased up to 100 crores. For your attempt, the limit is how much? 4 and 40. What is the limit, guys? 4 and 40. Sir, it is less than equal to, that means it is maximum 4 crore, maximum 40 crore. Maximum 4 crore, maximum 40 crore. So, small company is a type of a private company having a capital of maximum 4 crore and turnover of maximum 40 crore. Turnover of maximum 40 crores. So, nothing in this clause shall apply to a holding subsidiary. That means a small company can never be a holding subsidiary or a section 8 company or a company governed by any special act. So, small company can never be a holding subsidiary, section 8 company or company governed by special act. That means like LIC, UTI, they have a different act. Then, sir, government company. So, government company means in which minimum 51%, guys, how much percent? Minimum 51%, minimum 51%, minimum 51% of PUSC. PUSC means paid up share capital is held by central government or state government or both. Is held by state government, central government or both. Then a subsidiary of a government company is also a government company. Because government ka stake is there, a subsidiary of a government company is also a government company. The auditor of a government company is appointed by CAG. The auditor of a government company is appointed by CAG. Then, if in a government company, the member is CG, like it's a pure central government company, the CG shall cause an annual report on the working of the government company to be prepared within 3 months of the AGM, and paid before both the and laid before both the house of the parliament, Sir, in case of state government, same point. Here to be laid before both the house of state legislature, Vidhan Sabha, Vidhan Parishad. For central government, Lok Sabha, Rajya Sabha. State government, Vidhan Sabha, Vidhan Parishad. So, in case if both the government have taken a stake, yeah, the report would be laid within 3 months. 1 second, yeah. Before both the house of the parliament and before both the house of state legislature. So, 3 months is your MCQ. Very rare in the exam you will find it, but yeah, MCQ mein 3 months can come. Definition mein 51% you will check. Don't get confused. Holding subsidiary mein there's a different percentage. For government companies, minimum 51%. Take 2 minutes time and recall the definition quickly on the screen, everybody. I am here only. I am switching off the video. I am here only. Please read the definition from the screen. Then question number 5. Sir, what is a foreign company? As per 242, a foreign company is a company. So sir, foreign company, section number is what? 242. So foreign company is a company which is incorporated outside India and having a place of business in India, established either by itself or through agent, whether physically or electronically, and conducting any business activity in India. All three conditions needs to be satisfied: incorporated outside India and having a place of business in India, established either through itself or through agent, whether physically or electronically, and conducting any business activity in India. Every foreign company shall give following details to the ROC of New Delhi within 30 days of establishment. So in India, if foreign company is coming, wherever you are doing business in Chennai, Bangalore, Calcutta, wherever you are doing business, sir, within 30 days of establishment of business, you have to submit the documents to ROC of New Delhi. So for you, your state ROC is not applicable. Foreign company, for you, the ROC is of New Delhi. What documents you have to give? Sir, scrap A. You have to give scrap A. Scrap A. S. Details of secretary, directors like name, address, occupation, nationality. C. Details of charter, statute, mawa in English. If it is not in English, then a certified translated copy. R. Full address of registered office. Full address of registered office. A. Details of authorized person resident in India. Authorized person resident in India. P. Place of business in India. P. Place of business in India. Eligibility. E. Eligibility. You will state that none of the directors or promoters or authorized person has ever been debarred, whether in India or abroad. None of the directors or promoters or authorized person has ever been debarred, whether in India or abroad. Okay. Then section 379. If in a foreign company, minimum 50%. For government company, we studied minimum 51%. Here it is minimum 50% of paid up share capital, whether equity or preference or both. Whether equity or preference or both. If it is held by Indian citizen or Indian company, if it is held by Indian citizen or Indian company, then that foreign company shall be deemed to be incorporated in India. We will assume that this is an Indian company. So if in a foreign company, to be a foreign company, first you have to satisfy the three conditions: incorporated outside India and place of business in India and conducting any business activity in India. If in that foreign company minimum 50% of capital is held by is held by Indian citizen or Indian company, held by Indian citizen or Indian company, or singly or jointly or both, then such foreign company shall be deemed to be incorporated in India. So this is section number 379 of Companies Act 2013. Okay, again giving you 2 minutes time. Please read the definition of foreign company. Read. Hello, Paushi. Then holding company and subsidiary company. If in a company, okay, if a company is holding more than 50% of the nominal value shares carrying voting rights in another company, or controlling more than half of the composition of the board, then this company AB Limited becomes the holding company. This company becomes the subsidiary company. If this subsidiary company is holding more than 50% of the nominal value of the shares carrying voting rights in another company, then this subsidiary becomes the subsidiary of the main holding company. So this is holding company, this is subsidiary, this is sub-subsidiary, this is sub-subsidiary. Okay. If in a holding company along with the subsidiary or subsidiaries, if a holding company along with the subsidiary or subsidiaries hold more than 50% in this company, more than 50% in this company, then this company becomes the subsidiary of the main holding company. Then this that Bansal Limited becomes the subsidiary of the main holding company. Here you have to check more than 50%. In foreign company it was minimum 50%, minimum 50%. In government company it was minimum 51%, minimum 51%. Okay. Then dormant company, section 455. If a company is formed and registered under Companies Act for a future project or to hold an asset or intellectual property and has no significant accounting transaction, then such a company is called as a dormant company or inactive company. Now what does significant transaction means? It means any transaction other than this, payment of fees to ROC, payment made by a company for fulfilling the requirements of the act, and allotment of shares to fulfill the requirement of the act, or payment for maintaining office and records. So this all four are not significant accounting transaction. That means if you are doing this transaction, are you active company? No, I am still, sir, inactive company. I am still inactive company. Clear? Then, sir, what does authorized capital, nominal capital mean? Sir, authorized capital or nominal capital means it is a maximum amount of the capital authorized capital or nominal capital is the maximum amount of share capital of the company as it is authorized by the MOA of the company. Is the maximum capital. Then books of accounts include details of income and expenses, details of purchase and sales, details of assets and liabilities, and cost records. Books of accounts include four things: income and expenses, purchase and sales, assets and liabilities, and cost records. Very important definition of net worth. It came in the paper May 23. Net worth, you should remember net worth. So it can come in MCQ again. How do you calculate net worth? So paid up share capital, add free reserves, add securities premium, add credit balance in P&L. So paid up share capital, add free reserves, add sec premium, add credit balance in P&L, minus accumulated losses, minus deferred expenses, minus miscellaneous expenses not written off. So paid up share capital, add free reserves, add sec premium, add credit balance in P&L, minus accumulated losses, minus deferred expenses, minus miscellaneous expenses not written off. You will get the net worth figure. Very important definition. You can write exactly in this form in the exam, but if it comes in the calculation, you have to calculate it. Then question number 11. Sir, explain what is financial year. Generally in India we follow April to March. But sir, what if the company is incorporated in October? So April to March will not come, October to March will come. So what if the company is incorporated in December? Then December to March will come for the first financial year. Sir, what if it is incorporated in Feb? So Feb to March will come in the first year. Then second year onwards it will be April to March. So to have that problem, to overcome that problem, government have said if the company is incorporated before 1st Jan, that means till 31st December, then the financial year end will end on coming 31st March. Then the financial year would end on the coming 31st March. For example, if the company is incorporated 2nd June 23, that is before 1st Jan, right? Then the financial year will start from 2nd June 23 to 31st March 24, like coming 31st March. So if the company is incorporated on or after 1st Jan, like on 5th January 24. So we have coming 31st March. So financial year would not end on the coming 31st March. It would end on the next 31st March. Then the financial year would end on the next year's 31st March. That means from 5th Jan 24 to 31st March 25. So here this is basically around 9 months financial year. Here it will be around 15 months financial year. So this is a problem only for the first financial year. From year to year we will have April to March. Only for the first year you have to see this. So where a company is a holding company or a subsidiary company or associate company of a company which is incorporated outside India, like foreign company ka holding is in India or subsidiary or associate is in India, and they are required to follow a different financial year for the purpose of consolidation for doing CFS, then such company shall apply to CG. And the CG may allow any period as its financial year, whether or not such period is a year. Like in UK they follow Jan to December. India we follow April to March. Some countries follow 10 months ka financial year. We do not know. So 10 months, whether it's a year or not, still it will be considered financial year. MCQ, they have to apply to CG. Okay. Read this definition, important definition, question number 11. Read. Done? Done? Then question number 12 says explain officer in default. OID, explain officer in default. It can come also as a descriptive answer plus to identify an MCQ. Sir, OID means either a whole time director or a KMP. If KMP is not there, then any director who is authorized. First, whole time director. Number two, KMP. If KMP is not there, then any director who is authorized. If no such director is authorized, then all the directors. This is very important. These 3 points are very important. Whole time director, KMP. If KMP is not there, then authorized director. If such no authorization is not there, if no authorization is there, then all the directors. Then any person under immediate authority of the board or KMP. Then any person under the immediate authority of the board or KMP. Then any person on whose instruction, direction, advice the board is accustomed to act. If chartered accountant, company secretary or cost accountant, lawyer has given the advice in professional capacity, they are not officer in default because they give advice in professional capacity. Okay. If a normal director is giving instructions, advice, then he is a officer in default. Then every director, then in respect of shares, transfer agent, registrar and share merchant, merchant banker. In respect of shares, share transfer agent, registrar and merchant banker. Cool. Then Babu, Very important exam question, November 22. Listed company. A company which has any of its securities listed on any recognized stock exchange is a listed company. Recognized stock exchange in India is only two, BSE and NSE. There are many stock exchanges like Ahmedabad, Madras, Calcutta, Chandigarh, Rajkot, but recognized only two, BSE and NSE. A company which has any of its securities listed on recognized stock exchange is a listed company. However, following cannot be a listed company. Following cannot be a listed company. A public company which have not listed their equity shares. Public company which have not listed their equity shares, but listed their what? If you see the word non-convertible debt securities issued on private placement or non-convertible redeemable preferential issued on private placement. If you see the word non-convertible and private placement, not a listed company, not a listed company. So private companies which have listed their non-convertible debt securities on private placement basis. Again, non-convertible private placement. Then public companies which have listed their equity shares, which have not listed their equity shares on RSE. RSE means recognized stock exchange. Sorry, but listed on other stock exchange like Ahmedabad, Rajkot. So still it is not a listed company. So this talks about public company. This talks about public company. Point number 2 talks about private company. Point number 2 talks about private company. So following cannot be listed company. Public company which have not listed their equity shares on RSE. Okay, but listed what their non-convertible debt securities or redeemable preference shares on private placement basis. Public company which have not listed their equity shares but on RSE but listed on other stock exchange. Private company which have listed their non-convertible debt securities on private placement basis. Understood what is listed company? Kindly read the definition, very important definition. Then what is the procedure for conversion of public company into private company and vice versa? Public to private, that means from a big company we are becoming small company, sir, or small to big. Both the procedure is same. If you see, both the procedure is same. So from a section number is 14. Section number is, guys, 14. Private company to public company. So board will call a board meeting and pass BR. Here also same point. Board will call a board meeting and pass BR. A general meeting would be called, SR would be passed. SR would be passed. From a private to public, I mean from a small to big we are becoming. Increase the member to 7. Increase the member director to 3. Delete the word private limited, add the word limited, and delete TRP. Here this 2 point will not come. Add private limited and delete the word limited. and here you will add TRP. Then here also CG will give the approval, CG will give the approval. Then same point, SR copy, CG approval ka copy, altered memo should be sent to ROC within 15 days. Very important MCQ, within 15 days. ROC will check and will issue KOI that all legal formalities have been complied with. All legal formalities have been complied with. Understood this much? So do it again. Either of it can they ask. And section number is 14 of Companies Act 2013. Done? Then, so question number 15, explain Section 8 company or a license company. That's NPO basically. So generally every company is registered with the word private limited or limited. But Section 8 gives a power to CG. CG will give the license to NPOs to be registered without the word private limited or limited. So who will give the license? CG will give the license. Then NPO should have the following objectives, that is promotion of commerce, arts, science, charity or any other useful objects. And they can earn profit, they can definitely earn profit, but the profit should not be distributed as a dividend to the members. It should be applied for the same purpose, it should be applied for the purpose. So income should be applied for promoting the object and not for payment of dividend. Then NPO can alter the object clause or register office clause only with the approval of CG. If NPO does not follow the objectives, license will be revoked, that means it will be cancelled. And CG will give the, before cancelling, CG will give the option of being heard. CG can also pass an order for amalgamation of Section 8 company with another Section 8 company. So Section 8 getting amalgamated with another section company having which or company having similar or same objects. If on winding up any assets are sold and after paying all the liability surplus is left, the proceeds will be credited to insolvency bankruptcy fund formed under IBC 2016. So they can amalgamate with any another Section 8 company having similar object. If the on winding of a Section 8 company assets are sold and any surplus is left to after paying off the liability, whatever excess is there, what they can do, will transfer it to insolvency bankruptcy fund under IBC 2016. IBC means insolvency bankruptcy code 2016. Then if any provision is contravened, company is liable for 10 lakhs to 1 crore, officer is liable for 25,000 to 25 lakh. If you can remember this penalty, or you can skip it. Okay, plus if the affairs of company are conducted fraudulently, then every officer will also be liable under section 447. Liable under section 447. Section 8 company. Then procedure for registering section 8 company, you will just refer to the book. Okay, and people who have studied from a model from any other author book, it's a procedure. So they can ask you a case like this, Mr. Ram, he wants to incorporate section 8 company, what is the procedure? Okay, all the documents should be submitted plus definition plus the object wala point, write it in your own words. Question number 70, service of document, section number 20. A document may be served on ROC or member by sending it to him by post, register post, speed post, courier or electronic mode. If a company wants to serve document to the member, or if a company wants to submit any document to the ROC, or vice versa, ROC want to submit some document to the company, he can serve by post, register post, speed post, electronic mode. Okay. Now, for example, there's a member, Rahul. He said that please send me the document by Blue Dart courier. So, sir, Rahul will give the money. So, company, it is your duty to send the document by Blue Dart courier only. So, the question has been asked in this on this concept. If a member is requested for delivery of any document through a particular mode for which he shall pay such fees as may be determined by the company and its AGM, then the company is bound. To serve him by such mode. Otherwise, service will not be deemed to have been served. Okay, section number 20, service of documents. Read this. Point number 2 is important in this. Done? Then explain entrenchment. Sir, entrenchment means what? Generally, in a company, if they want to alter AUA, it can be done by SR. But Companies Act says I have 100 rules. If a company says I have 100 rules in my AUA, I want to put some more conditions on rule number 5, 10, 15. So rule number 5, 10, 15 will be altered only by 90% approval. Generally, all the rules can be altered by SR, that means 75% approval. But rule number 5, rule number 10, rule number 15, a company says I want to put more restrictive conditions. So that putting more restrictive conditions is called as entrenchment. It's called as entrenchment. Okay. Article of a company may contain provision for entrenchment to this effect that articles can be altered only if more restrictive conditions than a SR are met. SR means 75%. We want to put 80%, 85%, 90%. Babu. Yeah. Provision for entrenchment shall be made either on the formation of a company when the company is incorporated or by amendment in the articles. See, either it will be from the inception, right, from the incorporation, or you can amend the articles later on. In case of a private company, all members ka approval is required. All members means 100%. In case of a public company, SR is required. Guys, it is not doing the transaction. It is for putting entrenchment in the articles, that we will alter the articles only by having 80% approval. So to do this thing, either it should be applicable from formation, but at the inception we have not added this provision of entrenchment. We want to add now. To add entrenchment, in case of a private company, we require 100% approval. Then the transaction will be done by like 90% approval. To add entrenchment, it is 100% approval, and to do the transaction, whatever company says, 86%, 79%, 95%, 93%, whatever they want to put. In case of a public company, SR is required. In case of public company, SR is required. To add entrenchment, the transaction will be done whatever the company has thought, maybe 80%, 85%, 90%. That is more than SR. To add entrenchment in the articles, either it is formation or by amendment in the articles. In case of a private company, by all members. In case of public company, by SR. If articles contain provision for entrenchment, company shall give notice to the ROC. Company shall give notice to ROC. Cool. Last question, question number 19, OPC. In OPC, there can be minimum 1 member, maximum 1 member, that is only 1 member. OPC can have more than 1 director. Member can be only 1. The member of OPC shall indicate the name of nominee, who in the event of subscriber's death or his incapacity shall become the member of the company. The nominee shall give his prior written ka spelling is wrong, it is written consent, which can also be withdrawn by the nominee. The members of OPC may also change anytime its nominee by giving a notice to the company that I want to change my nominee, and the company shall intimate the same to the ROC. Such change shall not be deemed to be alteration of MOA. It can come in MCQ. Generally, if you are changing the name clause, object clause, it is an alteration. But if you are changing the nominee, it is nomination clause is getting changed, but it will not be deemed to be alteration of MOA. Only a natural person who is an Indian citizen, whether resident in India or otherwise, can incorporate a OPC or can become the nominee for the sole member of OPC. Sole ka spelling is SOLE, sole member of OPC. A person can be a member of one OPC at any point of time, and the said person shall also be a nominee of one OPC. So one member, one nominee. I can become a member of one OPC, and one OPC I can become a nominee. One OPC I can become a member, one OPC I can become a nominee. No minor shall become a member or nominee of OPC. Or he can hold any beneficial shares with beneficial interest. He can't hold any beneficial shares also. Okay, such OPC cannot enter into the business of non-banking financial investment activities, including investment in securities of any body corporate. So they can't do non-banking ka business. They can't do any investment activities. Such OPC cannot be converted into Section 8 company. Such OPC cannot be converted into Section 8 company also. Small company ka definition and OPC ka answer, both are very important for your attempt. Please concentrate and revise. Okay, read now. Read. Done. So minimum 4 mark to 8 mark chapter definitions are very important. OPC small company, please concentrate on these two answers. It can come in the exam. Cool. Bye guys, take care, enjoy, and aim for a rank or 70 plus, whichever is earlier. I thank Bhargavi for such wonderful notes and everybody who has written the notes in the class. Kindly revise with your own handwriting. It will be very useful to you guys. Bye. Take care. Hi guys, what's up? Welcome to the class. So we are doing now incorporation of a company. Okay, incorporation of a company is a very simple unit. Lot of provisions are there which we need to remember. My first question says define promoters and the right to receive remuneration. Define promoters and the right to receive remuneration. So what does a promoter means? Promoter means a person who has been named as a promoter where either in the prospectus or annual return, or who has a control over the affairs of the company as a shareholder or a director or otherwise, or on whose advice, instructions or direction the board of directors is accustomed to act. He is called as a promoter. Promoter means a person who has been named as a promoter in the prospectus or annual return, or who has the control over the affairs of a company as a shareholder, director or otherwise, or on whose advice, directions or instruction the board is accustomed to act. He is called as a promoter. Now, sir, promoter is not the agent of a company since the company is not into existence. Acha, promoter is law says if you are a promoter, it is not mandatory that you should be a subscriber and eventually the director. It is not mandatory, but at least one promoter should be the director. He should not make a secret profit. That is, he should give full and fair disclosure of such profit to the board. If he makes secret profit, then company can recover from the promoters. Sir, he can't make he can make a profit, but he cannot make a secret profit. If he is making a secret profit, then the company can recover it from the promoters. Promoters do not have a right to receive any remuneration or recover any expenses. Even if the AUA provides for payment of such payment, even if the AUA provides for such payment, it is not binding on the company. It is not binding on the company. However, if company wants to give remuneration, it can pay in following ways. How? By issue of shares at discount, by lump sum remuneration, or on purchase of property by the company, or commission on the shares sold by the promoters. Issuing shares at discount, lump sum remuneration, commission on the purchase of property, commission on the shares sold by the promoter. So it's a short note on promoters. They can ask you a direct answer. Definition also they have asked twice in the exam. Again it can come. Read promoter. Done? Then Sir, what are the documents to be filed with ROC at the time of incorporation? A direct question, it can come in the exam. MOA, obviously. OVA, MOA. Number 3, declaration from each subscribers and the first director. Declaration from each subscribers and the first director stating that they are not convicted for any offense. Offense, the spelling is wrong. It's OFFENCE. Regarding the promotion, formation, management of a company, he is not found guilty of breach of trust in the last 5 years, and all the documents which are filed with ROC are true and correct. So they will give the declaration. Private company में 2 subscribers are there. Public company में 7 subscribers are there. Then the address for corresponding until that the registered office is established. 5th, particulars of every subscribers like the name, address, nationality, etc. Particulars of every subscribers like the name, address, nationality, etc. Then particulars of the person mentioned as first directors of the company. Particulars of interest of person mentioned as the first directors. So particulars of the person mentioned as first director. Particulars of the interest of person mentioned as first directors. Then a company shall within 30 days of incorporation shall at all time have a registered office for receiving and acknowledging all the commission notices as may be addressed to it. So it is not mandatory that at the time of incorporation company should have a registered office. Once the company is incorporated, within 30 days they should have a registered office. So they can ask you separately on this question, what is a registered office, what is the use, and when we should have. We should have it within 30 days of incorporation for receiving and acknowledging all the communications. So 8 points are there, guys. So they can ask you a question, Mr. Ram, he wants to incorporate a company, you are a chartered accountant, he wants to understand what documents should be attached to while incorporating the company. So all 8 points you need to know. Read. Done? Question number 3. Explain commencement of business, section number 10A. So if a company is incorporated having share capital, they cannot commence the business unless 2 conditions are satisfied. A company incorporated with a share capital shall not commence business or execute borrowing power. That means they can't take even a loan. So you can't do the business or you can't take a loan. Unless a declaration is filed by the director within 180 days, a declaration is filed by the director within 180 days stating to the ROC that that every subscriber has paid the value of share which is agreed to be taken by them as per MOA, and company has filed this declaration, and company has filed a declaration with ROC, a verification of his register office as per section 12(2). He will state, a director will state in a declaration within 180 days, every subscriber within 180 days, and every subscriber has paid the value of share which was agreed to be taken by him, and verification of register office is done as per 12(2). Then, if a company has defaulted in section 10A, then company is liable for 50,000, officer 1,000 per day, subject to maximum 1 lakh. If a company has defaulted in section 10A, then the company is liable for 50,000 and officer is liable for 1,000 per day and subject to maximum of 1 lakh. Then, if the declaration is not filed within 180 days and ROC has a reasonable cause to believe that the company is not carrying on any business or operation, then he may remove the name of a company from the register of company. If the declaration is not filed and ROC believes that the company is not carrying any business, then he may remove the name of a company from the register of company, from the register of companies. Cool? 1, 2, 3. Read point number 3. Done? Then, question number 4. What is the penalty for submitting false information while incorporating a company? If any person furnishes false or incorrect information while incorporating a company, or if the company is incorporated and later on it is proved that they have submitted false or untrue information, then all the subscribers or the false directors who are guilty shall be liable under section 447. Then all the subscribers or false directors who are guilty shall be liable under section 447. If a company is incorporated by submitting false information, then the tribunal on an application submitted to it may pass following order. So penalty though you will be liable, plus they can pass following order. What are the orders can be filed by the can be passed by the tribunal? The tribunal may pass order for regulating the management or changes in MOA for public interest. Direct that the liability of the member shall be unlimited. Direct the removal of the name of the company from the register of companies. ROC means here register of companies. Pass an order for winding up and pass such order as it may deem fit. Regulating the management, regulation of the management, changes in MOA or AUA for public interest. Then direct the liability of the member shall be unlimited. Direct the removal of the name of company from the register of company. Pass an order for winding up and pass such order as it may deem fit. Twice they have asked this question also. Do it again. Punishment for submitting false information while incorporating a company. Then, what is pre-incorporation contract? Any contract entered prior to the date of incorporation. What will you say? Any contract entered prior to the incorporation is called as pre-incorporation contract. These are entered by the promoters on behalf of the company. These are entered by the promoters on behalf of the company. They are entered before incorporation. These contracts are void with respect to the company. Company cannot ratify pre-incorporation contract as the company was never in existence. However, company can adopt, that is company can go for novation. That is if the company adopts, company is liable. If the company does not adopt, then the promoters would be personally liable. Company is not liable. It is entered by the promoters. It has void with respect to the company. It is entered before incorporation. Company cannot ratify. However, company can go for novation. If company adopts, company is liable. If company does not adopt, promoters will be personally liable. Cool. Then, next answer is your illegal association. Section number is 464. It says, any person or association or partnership doing any business with more than 50%. Any association or partnership doing any business with more than 50% shall convert itself into a company, else it will be illegal association. What are the effect? Every member would be liable for a penalty of 1 lakh rupees. Members would be personally liable for all the debts of such business. Association cannot enter into any contract on its own name, and even a subsequent reduction cannot make it legal. Once illegal, always illegal. We have done this. Once illegal, always illegal. But there are certain exceptions to it. Number 1. Association or partnership formed by the professionals like CA, CA, CMA. Association or partnership formed by professionals governed by special act like CA, CA, CMA. You can have more than 60 members, 100 members, 200 members, 300 members. It's allowed. More than 50% you can have. And 1 HUF. Sir, 1 HUF means only 1 HUF. Only 1 HUF. That is combining major male and female members. In question, if minor is given, you have to exclude it. Major members and female members. If it is only 1 HUF doing business more than 50%, it is allowed. If my HUF and assume Shah Rukh Khan ka HUF, we both HUF mixed together, My HUF 45 people, Shah Rukh Khan HUF 7 people, 52 people doing business together, not allowed, sir. Maximum 50 is allowed. And it is illegal. Shah Rukh Khan says, sir, I will remove 3 members. No, sir. Once illegal, always illegal. Once illegal, always illegal. Okay. Revised Illegal Association, section 464. Then, question number 7. It says binding force of Mahua and Ahua. Binding force of Mahua and Ahua. Section number क्या है सर ये? Section number is 10. Sir, company is bound to its members. That for all the rights, if the rights are deprived, member can sue the company. Member is bound to the company to pay the call ka money. If money is not paid, company can sue the member. Members bound inter se. Inter se means with each other. INTERSE. Inter se. Members can enforce his right against another member through the company, but not directly. So member is not in relation. Member company member. Is company bound to the outsider on the basis of Mahua? The answer is no. Outsider cannot establish a contract only on the basis of Mahua. However, if he proves a contract which is independent of Mahua, then the third party can sue the company. That is, company will be liable. So if the article says I will appoint Rakhi Sawant is a lady of Bollywood. I can appoint Rakhi Sawant as my lawyer, and we have removed her due to no fault of her. Can she sue the company? No. Because company is not bound to the outsider on the basis of Mahua. But yes, if Rakhi Sawant and the company has an independent contract, then and the company is removed because due to no fault of her, then Rakhi Sawant can sue the company. If there is a contract which is independent of Mahua, then the third party can sue the company. That is, company will be liable. Understood? Binding force of Mahua. Then, sir, doctrines. So we have 3 doctrines. So doctrine of ultra virus, doctrine of constructive notice, and doctrine of indoor management. Doctrine of ultra virus, doctrine of constructive notice, and doctrine of indoor management. The case ka name is Ashbury Railway Carriage and Iron Company Limited versus Ritchie. Number 2, Kotla Venkateswamy versus Ram Murthy. Number 3, Royal British Bank versus Turquoise. Royal British Bank versus Turquoise. Royal British Bank versus Turquoise. Okay. First, so what is doctrine of ultra virus? It means beyond the power of company. An act is said to be ultra virus if it is not permitted as per Companies Act, falls outside the object clause of Mahua, and it is not incidental or ancillary to the main object, to the attainment of main object. Sir, what are its effect? It is void ab initio. Directors will be personally liable. Third party can sue the directors for breach of laws. It cannot be ratified. This the third party can obtain injunction order. Injunction order means a stay order from the court, that is stopping the person from proceeding with what he was doing it. An act can be legally executed. If you want to do the act, you can do it only by altering the object clause of MOA. For example, if my object says I want to sell vada pav, so I can sell vada pav. Sir, but I am selling chutney. Allowed? So even if it is not written, allowed because it is incidental. If I want to sell this pencil, sir, not allowed. If you want, because it is ultra-virus, if it is void ab initio. If you want to sell this pencil, you can sell it by altering the object clause of MOA. Everything should be written in your object clause of MOA. Okay. So first let me read all the three doctrines, then you will recall all the three doctrines. Okay. Number 2, constructive notice. Law says if third party you are dealing with a company, it is your duty to read MOA. Your duty is not only to read but also to understand the MOA and AUA. That means third party, whenever you are contracting with a company, we will take always an assumption that you have read the MOA and you have understood the MOA. If you have not read and you are dealing with a company, and if any liability has occurred, company will not be liable. This doctrine protects the company. This doctrine protects the company. The exception to this doctrine is the doctrine of indoor management, which will protect the outsider. Sir, company shall mandatorily file MOA and AUA. Once filed, it becomes the public document. This doctrine operates in the favor of company. Third party is required to appraise himself with the contents of MOA AUA before contracting with the company. It is assumed that the third party have read and understood the contents of MOA AUA. If he does not have actual notice, he is deemed to have a construct, that is implied notice. The only exception to this doctrine is the doctrine of indoor management. It is what? Doctrine of indoor management. Doctrine of indoor management. Then, third, doctrine of indoor management. So, outsider ka duty was to read MOA, he read MOA. But if there is some internal irregularity in the company, then company, it is your problem. Third party is never put to loss. Third party is never put to loss. Any outsider dealing with the company is entitled to assume that the internal management was done regularly, where third party enters into a contract with any director or officer of a company. If there is some irregularity in the internal proceeding, the contract would be still valid and enforceable against the company. It will be valid and enforceable against the company. The third party is only required to be satisfied that the contract is within the scope of MOA. He did not inquire into the internal management of the company. See, there's a corporate bill. Outsider anyways can't see. So company, you are responsible for your internal irregularity. So what is exception to DOIN? The code is FRISK. F, forgery. R, knowledge of internal irregularity. I, illegal transaction. S, suspicious transactions or suspicious circumstances. K, no knowledge of AUA. In FRISK, there is no protection to the third party. Like if third party has knowledge about the indoor management and still you are getting into the contract, you are liable. If I have not read MOA only, then sir, third party, this doctrine will not protect you. Because the basic rule of this doctrine is that you should read MOA. Understood all the three doctrines? And with this, one more chapter is over. Cool. So what you will do, you will just read all the three doctrines again. Giving you 5 minutes time. I will just scroll the answer. You read it from the notes. Read. Babu. Bye.
Hi guys, what's up? So today we are starting with a chapter called as Meetings and General. So people who have studied from different teacher, you will find this chapter in the module as Meetings, Management and Administration. In my book, we have noted as 2 units, Meetings and General. So the section starts from 96 and it goes to 119. So it is 96 to 119. Okay, let's start with meetings concept. So guys, meetings are of 2 kinds. One is the member committee, other one is board committee. When we talk about board committee, it is basically board of directors committee. You will find this content in CA final. Now when you talk about members committee, sir, it is basically general meeting. So it is annual general meeting or extraordinary general meeting, either annual general meeting or extraordinary general meeting. Now question number 1 says section 96 to 99, it says annual general meeting. Sir, annual general meeting, it is about first annual general meeting. So first annual general meeting means the company is incorporated and the first general meeting they will have, it is called first AGM. Okay, it should be held within 9 months from the close of the first financial year. Within 9 months from the close of the first financial year. That means during the year, whenever you have incorporated, in April, in June, in October, in November, in December, and whenever you have incorporated, it says within 9 months from the close of the first financial year. So go to 31st March. From there you will count within 9 months. That is till 31st December. So 31st December is your due date. ROC cannot give any extension. If 31st December like you have not conducted the meeting, you have contravened section 96. You have contravened section 96. Sir, subsequent AGM, there are 3 conditions. It should be conducted every year. Number 2, max gap between 2 AGM. Max gap between 2 AGM can be 15 months. And max gap between year ending and date of ensuing AGM, upcoming AGM, can be 6 months. Every year, max gap between 2 AGMs can be 15 months and max gap between year ending and date of ensuing AGM can be 6 months. ROC can however give 3 months extension. If the question is silent, never ever assume that ROC has given the extension. Never ever assume. Now as per section 97, if there is a default in calling AGM, what will happen? The tribunal will come into the picture. On an application by any member of the company will call the AGM and give such directions as the tribunal may deem fit. So as per section 97, what will happen? If the company has not conducted the AGM, the tribunal will call the AGM. Now the direction will also include that one member or in person or a proxy shall be a valid quorum. Tribunal is the godfather. He will say, okay, if it is attended by one person is not coming, proxy is coming, still it will be a valid quorum. A general meeting held as above shall be deemed to be the AGM of the company. It will be assumed it is an AGM of the company. 96 was the provision, 97 was the tribunal ka power. 98 EGM. If it is EGM, okay. If a general meeting cannot be held due to any reason, the tribunal will either suo moto or an application by a director or a member shall call the EGM and give same answer and give such directions as the tribunal may deem fit. The direction will also include that one member in person or proxy may constitute a valid quorum. The same point for EGM also. A general meeting held as above shall be deemed to be the EGM of the company. So tribunal in both the cases, if AGM is not called, tribunal will call it. If EGM is not called, tribunal can call it. Okay, and it will be assumed that it is the AGM or EGM. So 96, 97, 98, 99 is your penalty. If 96, 97, 98 is contravened, then company and the officer will be liable for up to 1 lakh, important penalty, up to 1 lakh and 5,000 rupees per day till the default continues, and 5,000 rupees per day till the default continues, up to 1 lakh rupees and 5,000 rupees per day till the default continues. And few important provision. AGM should be held during the business hours, that is 9 AM to 6 PM. This is our business hours. In MCQ they can ask you. It should be held within business hours, that is 9 AM to 6 PM. If AGM can be held on any day other than national holiday. 26 January, 15th August, 2nd October. AGM can be on any day other than national holiday. What is a national holiday? A national holiday means a national holiday which has been declared as a national holiday by central government. Now it can be held either at the register office or any other place in the same city, town, village. AGM should be held at the register office or any other place in the same city, town or village. However, AGM of an unlisted company may be held at any time in India, may be held at any place in India if the consent is given by all the members in writing or electronic mode in advance. Generally, AGM should be held. When? Sir, AGM should be held on any day other than a national holiday, and it can be held either at the register office or
any other place in the same city, town, village. This is the AGM ka provision. But for unlisted company, AGM can be held anywhere in India, provided consent is given by all members. All members means 100% approval. 100% approval. So it can come in MCQ. The word is unlisted, unlisted company. Now sir, EGM, section number is 100. So 96, 97, 98, 99 is all on AGM. 100 is EGM. It can be called by the board or by the members or by the tribunal. It can be called by the board or the members or tribunal. Sir, what about the members? In case of a company having share capital, how many members can request? Members holding minimum 1/10 of paid up share capital. Members holding minimum 1/10 of paid up share capital. In case of guarantee company, members holding 1/10 of voting powers. Members having 1/10 of voting power. They can request to call the EGM. Okay. If members have requested to the board that please call the EGM, they will call the EGM within 21 days of the request. Within 21 days of the request. At the most they can call up to 45 days. So within 21 days up to 45 days. If it is not called or not held, then members will themselves hold the meeting within 3 months from the date of request. Within 3 months of date of request means effectively it is 45 days only. Generally they will be giving to the board a request, please call the EGM. Board will call within 21 days. Conduct the meeting within total 45 days. If they have not called or they have not held the EGM, then members will have a power to call the EGM themselves within 3 months from the date of request. So 3 months from the date of request means effectively it is 45, because first 45 you will wait that board will call. Right? Now if you members have called the EGM, any reasonable expenses incurred by requisitionist shall be reimbursed to them by the company. So if imagine board have not called, so you will conduct the meeting. Imagine at Taj Hotel you have conducted the meeting. So whatever expenses is there, you can reimburse by the company. I mean you can take the reimbursement from the company, and the company shall deduct the same from the remuneration payable to the director who has defaulted in calling the EGM. So because it was a director's cut duty, they have not called it. So company will pay to the requisitionist, but it is a loss to the company. They will recover it from the director's cut remuneration. Okay. Now EGM can be held on any day except national holiday during business hours. Business hours are 9 AM to 6 AM. And anywhere in India, guys, AGM either at the register office or the same city, same town, same village. But for unlisted company you can hire at anywhere in India, provide consent of 100% members are taken. Here EGM can be held directly anywhere in India if it is a wholly owned subsidiary of a company incorporated outside India. If it is an Indian company, is a subsidiary, wholly owned subsidiary, holding company is foreign, then the EGM can be held even outside India. Then the EGM of such subsidiary can also be held outside India. That's logical, na? Holding company is outside India, subsidiary is in India, and it's a wholly owned subsidiary, wholly owned 100% stake. So if this company is calling the EGM, they will call the members. Where are the members? Sir, all are outside India. So why to conduct meeting in India? So there they have given a benefit. If you are a wholly owned subsidiary of a foreign company incorporated outside India, if you are a wholly owned subsidiary of a company incorporated outside India, the EGM can be held even outside India, because that's logical, na? Now, length of notice. How long? Sir, a general meeting shall be called by giving 21 days clear notice. 21 days clear notice. For calculation of 21 days, follow the following. Date of sending notice 1 day, plus 21 days 22 days, plus 2 days of post 24 days. So 24 days a gap should be ideally there. The 25th day should be the date of meeting. 25th day should be the date of meeting. Okay. So 1 day, that is date of sending notice, plus 21 days 22 plus 2 days of post 24. Then 25th day is the date of meeting. Then receipt or non-receipt of notice is immaterial. What does the provision says? Receipt or non-receipt of notice is immaterial. Company should have a proof that they have sent the notice. Okay. Now shorter notice, generally it says there should be gap of 24 days. And 25th day should be the date of meeting, not earlier than that. 25th, 26th, 27th, 28th, 29th, 30th, you can have later, but not earlier than that. But for MCQ, you will write 21 clear days. For calculation, it is 25th you will take, but for MCQ, it is 21 clear days. Sir, shorter notice is valid if it is considered by, in case of AGM, members holding 95% of the paid up share capital carrying voting rights. For AGM, members holding 95%, they should agree that, acha, keep 15 days gap, we will come for the AGM. But sir, for EGM, in case of a company having share capital, majority number and members holding 95% of paid up share capital carrying voting rights. Majority number and member holding 95% of paid up share capital carrying voting rights. In case of a guarantee company, that is company not having share capital, members holding 95% of voting power. So 95% approval is required in simple words. That keep 7 days ka notice, 10 days ka notice, because you are keeping shorter days ka notice. So these people should agree. These people should agree. Then, so notice should be sent to Malti. I have written refer section 136 notes accounts of company. Malti, members, auditors, official assignee, legal representative of deceased member, TSA trustee of debenture holders. Malti. The notice should contain the place, date, time of the meeting and the business to be transacted, that is agenda. The directors or secretary must be authorized by the board to send the notice. Secretary cannot call the meeting on her own. Director or the secretary must be authorized by the board to call the meeting. If omission to send this notice is willful, then the notice is invalid, meeting is also invalid. However, if it is accidental or by mistake I forgot to send, then the meeting is also valid and the notice is also valid. In the question, always assume it is accidental omission. Always assume it is accidental omission. Clear? 96 to 99 was AGM, 100 was EGM, 101 was length of notice. Now 102, to business. What will you say? 102, to business. Sir, at the AGM, there are only ordinary business. At the EGM, there are special business. Ordinary business is conducted at the EGM and all the business transacted at the EGM is called as special business. Sir, ordinary business is ADDA. A. Adoption of accounts, audit report, board report. Adoption of accounts, audit report, board report. D. Declaration of dividend. One more D. Appointment of directors and fixing their remuneration. A. Appointment of auditors and fixing their remuneration. Sir, special business. Any business other than ADDA. Any business other than ADDA. That means any business other than ordinary business will give you special business. Will give you special business. Sir, for ordinary business, we require ordinary resolution. For ordinary business, we require ordinary resolution. That means more than 50% people should say yes. Acha, special business, sir, it can be conducted by OR also, it can be conducted by SR also. For SR, we require 75% approval. For SR, we require 75% approval. Clear? Now, section number is 102, to business. Resolutions are written in 114. Resolutions are written in 114. Then, if any item of special business is to be transacted at the meeting of the company, an explanatory statement should be annexed to the notice. It shall disclose the interests of every promoter, director, manager and KMP. That explanatory statement should contain everything, including the interests of the director, promoter, manager, KMP. KMP means key managerial person in the other company, and if it is more than 2% of the paid up share capital of that other company. Sir, interest means what? If someone has bought shares of how much? More than 2% in another company. That should be disclosed. That should be disclosed. So it says AB Limited is buying a machinery with Baby Limited. So for that we require SR in SR. So SR will be heading, we will be passing at EGM. If AB plus other director is holding more than 2% in Baby Limited, if AB plus other directors holding more than 2% in Baby Limited, then AB would be called as interested director. AB would be also called, another director would also be called what? Interested director, more than 2%. Cool? In case of non-disclosure or insufficient disclosure, it has come in the exam. What is the penalty? I mean, what are the provisions? In case of non-disclosure, insufficient disclosure, what will happen? The directors, manager, promoters, KMP shall be liable for penalty. So what should be disclosed? This came as an exam question. Following shall be disclosed in the notice. The nature of concern or interest, financial or otherwise, of every director, KMP, manager and the relatives, or any other information or facts that may enable the member to understand the meaning, scope and implication of the items of business to take decision thereon. So these things should be disclosed when a director is interested, where it should be disclosed in the explanatory statement attached to the notice of EGM. Attached to the notice of EGM, because with every notice of EGM, explanatory statement will be going. In explanatory statement, you have to give every disclosure. This is 102. Okay. 103 is, guys, quorum. 103 is quorum. So for private company it is minimum 2, for public it is 5, 15, 30. Sir, 0 to 1000, basically it is 1 to 1000, okay? Not 1 to 2 to 1000 you will say. No, sorry, 7 to 1000 because a public company, public company. So just to remember, 0 to 1000, 1001 to 5000, 5001 and above. 0 to 1000, 1001 and 5000, 5001 and above. So if in a company I have 800 members, so this limit is for members. So in the AGM, 5 members should come. Minimum 5 should come. If I have 1500 members in my company, then at least 15 members should come for the AGM or EGM. So this quorum is written in section 103. It says 103 ka quorum or AUA ka quorum, whichever is higher. So if in AUA you have stated a higher number, then that will be the quorum. So 103 or AUA, whichever is higher. If within half an hour quorum is not achieved, the meeting would be adjourned. That means extended by 1 week to the same day, same place, same time. Meeting would be adjourned by 1 week to the same day, same place, same time, or some other day, some other place, some other time, as the board may decide. So meeting would be adjourned by 1 week. Always remember, preference shareholders and proxies are not counted for quorum. Preference shareholders and proxy are not counted for quorum. Preference shareholder and proxy are never counted for quorum. Sir, if EGM is called by board, quorum is not achieved, meeting would be adjourned. If EGM is called by the members, remember EGM can be called by the members, section 100, right? Quorum is not achieved, EGM would be cancelled. So read the question very thoroughly. If EGM is called by the board and quorum is not achieved, meeting would be adjourned. If EGM is called by the members, quorum is not achieved, meeting would be cancelled. Sir, for adjourned meeting, how many days ka notice? 3 days ka notice. For normal meeting, 21 days ka notice. Then at the adjourned meeting, within half an hour, if quorum is not achieved, members present will be the valid quorum. Clear? Sir, chairman, section 104, chairman. Chairman shall be elected among members themselves by show of hands. Who want to become the chairman? Please raise your hand, show of hands. However, if a poll is demanded, audience poll, okay, voting on the election of chairman, then the person so elected as chairman as a result of poll shall be the chairman for the rest of the meeting. Generally, MCQ, chairman will be elected only by show of hands. However, if the poll is demanded on election of chairman, the person so elected shall be the chairman for the rest of the meeting. Then 105 PROXY, 5 alphabets proxy, PROXY proxy. Sir, any member can appoint proxy and proxy need not be a member. Any member can appoint proxy and the proxy need not be a member. Proxy can be outsider. Anybody can appoint proxy. Like if I'm not attending Reliance ka meeting, so I will send someone else in my place. That someone else is called as proxy. A proxy is not entitled to vote except on poll. Proxy can never vote except on poll. An individual can be appointed as proxy on behalf of maximum 50%. So imagine Rahul is there. So I will say Rahul can be appointed on behalf of 50%. Okay, subject to the holding of maximum 10% of share capital carrying voting rights. So he can be appointed on behalf of 50 people. Their maximum holding can be 10% of the total share capital carrying voting rights. By such 50 persons. Okay. Proxy form shall be deposited maximum 48 hours before the meeting. Proxy can be changed by the member subject to the time limit of 48 hours. So you can change the proxy subject to the time limit of 48 hours. And the latest proxy will supersede the earlier proxy. Also, proxy form can be done subject to following conditions. 3 days notice should be given to the company. Minimum 3 days ka notice. Then it shall commence. The inspection shall commence 24 hours before the start of the meeting till the conclusion of the meeting. It shall commence 24 hours before the start of the meeting till the conclusion of the meeting and should be inspected during business hours. So minimum 3 days ka notice. Inspection should start 24 hours before the meeting till the conclusion of the meeting and it can be done only during business hours. Then section 112. A body corporate, a president of India, governor of state. Body corporate means company, LLP, president of India, governor of state can appoint a person as a representative on their behalf and to vote at the meeting. Such representative will be counted for quorum as number of persons he represents. So section C, if an individual is sending someone else, he is called as proxy. Proxy can never be counted for quorum and he can never vote. But if a body corporate, president of India, governor of state is sending someone else, that person would be called as representative and he will be counted for quorum and because he will vote. Now imagine Rahul has been sent by president of India, Maharashtra government and Karnataka government. So Rahul is representing 3 people. So Rahul will be counted for 3. Rahul will be counted as 3. He is one person only but he will be counted 3. So such representative will be counted for quorum as a number of persons he represents. Understood this much? Cool. Sure. Now after doing proxy PROXY, that's 105. Now we do voting, VOTING, 106 voting. So
Can a member, if I don't like your face, can a company restrict their voting rights? The answer is no. The answer is no. It says no company can restrict the voting rights of any member, except, only one reason is there, if the calls have not been paid up. Except if the calls have not been paid up. That's the only reason, guys. That's the only reason where you can restrict. Nowhere else you can restrict it. Always remember that. Okay. Now, voting. How do you vote? By show of hands. How do you vote? By show of hands. That's just next section 107. 107. Voting by show of hands. Now, all the resolution at general meeting. What we will say? All the resolution at general meeting shall be decided by show of hands. Except when the poll is demanded or voting is carried out electronically. Except on poll or when the voting is carried out electronically. So all the decisions would be always by show of hands, MCQ. Okay, except when the poll is demanded or if it is carried out electronically. Now, the declaration by chairman of passing the resolution or otherwise by show of hands and the entry in the minutes book will be a conclusive evidence that the resolution has been passed. So in show of hands, the chairman says, okay, the resolution is passed, then it will be assumed that the resolution is passed. Voting by electronic means every listed company or a company having minimum 1,000 shareholders, every listed company or a company having, like unlisted company or a private company having 1,000 shareholders, shall provide to its member a facility to access their voting by electronic means. So you can vote by like electronic vote, you can vote it through website or through a mobile. So which company? Every listed company and every company having minimum 1,000 shareholders. So 1,000 is your MCQ. That's 108. 5 was proxy, 6 was voting. How do you vote? By show of hands, and 8 is electronic means. Then I have marked some page 218 from the main books. You can read it. People who have their other teacher ka book or module, you can refer voting by electronic means ka content. Just read for MCQ purpose. Now 109, demand for poll. Very important answer. A poll can be demanded either before or after the declaration of the result. So you can demand a poll either before or after the declaration of the result on voting by show of hands. Poll who can demand? Chairman, member, proxy. Proxy can also demand a poll. This is also a separate question. Can a proxy demand poll? The answer is yes. Now the chairman shall order a poll if a demand is made by, if a company having share capital, member plus member present in person or by proxy, like member sitting at home, member present in person, proxy, together holding how much? 1/10 of the voting power on the resolution, or the aggregate sum of which 5 lakh have been paid up, or the aggregate sum of which 5 lakh have been paid up. In case of guarantee company, member sitting at home, member in person, member by proxy holding 1/10 of the voting power on resolution. This number should be request, then a chairman will demand a poll. So chairman can do it suo motu, that is voluntary, if these people request, or a proxy. So when you talk about member and proxy, you together you add them, and if they fall in this category, poll can be demanded. Then demand for poll can be withdrawn at any time by the person who made the demand. So whoever is requested, he can withdraw it also. A poll for adjournment of the meeting and on election of chairman must be taken immediately. So two things: poll for adjournment of the meeting and election of chairman should be taken immediately. Rest other question can be taken within 48 hours of making the demand. Rest other question can be taken within 48 hours. These two has to be taken immediately. Then resolution by postal ballot. How do you do it? By sending it through post. OPC other companies having members up to 200 are not required to transact any business through postal ballot. One person companies or other companies having members up to 200, that is maximum 200, are not required to transact the business through postal ballot. That means they have to make sure they do the meeting in person. A company has a discretion to pass any resolution by postal ballot except for ordinary business items like adda wala item, or any business in respect of which director or auditor have a right to be heard. So these two cannot be done through ballot. That means it can be done physically. Okay, OPC and a private company up to 200, or other company means public also up to 200, they can do meeting, or they can pass a resolution only through physical presence, not through postal ballot. Okay, if other companies from whom ballot is allowed, ordinary business item, that is adda, plus where the director or auditor have a right to be heard, that cannot be decided by ballot. Then read A to J transactions, page 219 main book. You just have to read this content. Okay. Now question number 13, important resolution requiring special notice. Following are the resolution which requires special notice. Section 140, a resolution appointing an auditor other than retiring one, and a resolution providing that retiring auditor shall not be reappointed. Same way for director, a resolution appointing a director other than retiring one, a resolution providing that the retiring director shall not be reappointed. Same content, same content. These two require special notice. Special notice means 14 days notice. The request for special notice shall be given to the company by members holding minimum 1/10 of voting, minimum 1% of voting power, or holding shares of which maximum 5 lakh have been paid up, 1% or holding shares of max 5 lakh have been paid up. Section number is what? 115. Resolution requiring special notice. Exam question, it came in the previous attempt. Again, it is important, MCQ purpose. Then, resolution at the adjourned meeting. I had called the meeting on 20th September. I have adjourned on 27th September. Okay. Now, the resolution was passed on 27th September. So, the question is the effective date will be from 20th, that is original meeting, or 27th, the adjourned meeting. It will be from 27th, the adjourned meeting. If a resolution passed at the adjourned meeting, it shall be treated, that is effective from the date on the date it was actually passed and not on any earlier date. From the date on which it was actually passed. Okay. MCQ. Resolutions and agreements to be filed with ROC, section number is 117. It says a copy of every resolution, any agreement, explanatory statement under 102 shall be filed with ROC within 30 days of passing such resolution or making such agreement. A copy of every resolution for altering the articles shall be added, embodiments included in every copy of the articles issued thereafter. If it is not filed, then there is a penalty. You can ignore. Company 10,100 per day, maximum 2 lakh. 10,000 per day, 10,000, 100 rupees per day for the officer, maximum 50,000. You can ignore this section, irrelevant. Now, section 118, 119, what will you write? Minutes and inspection of minutes. So, refer question 9, 10 and question 23 on page 232 of main book. So, question 9, 10 and 23. These three questions you have to read for minutes book. I will just quickly recall for minutes. Generally, member has a right to inspect the minutes book, right? If there is a matter which is detrimental to the member or to the company, chairman has a power to decide what to include, what to exclude. Nobody else on this earth, chairman, okay? If every minutes book ka page has to be initialized by the chairman, last page the chairman have to sign. But due to any reason, if chairman could not sign, like he has died or he has shifted to some other place, then the next meeting ka any director can sign. Any director of the company can sign the minutes book. Okay. So all these things you will read in question number 9, 10 and 23. Register of members. Every member limited by share shall maintain a register of members in form number MGT1. Form number MGT1. For debenture of the security, the register is MGT2. Entry should be made in the register within 7 days. Within 7 days of the board or the committee approving the allotment or transfer. So within 7 days you will make the entry. Such register should be maintained at the register office of the company. However, it can also be kept at some other place, that is in India, provided where more than 1/10 of total members entered in the register reside, provided a special resolution in GM is passed. So imagine in Bihar, if my more than 1/10 of the members reside, so I can keep the register there also, provided we have passed what? Special resolution. All the changes should be regarding the status of members shall be updated in the register. If the number of members is minimum 50, then the maintenance of index is mandatory. MCQ. If the number of members is minimum 50, then the maintenance of index is mandatory. A company, if authorized by articles, can keep a part of the register outside India, okay, containing the names and particulars of members, debenture holders, security holders, beneficial owners residing outside India. The company shall transmit to the register office in India a copy of the entry in the foreign register within how many days? Within 15 days after the entry is made. Like I can keep a foreign register, and foreign register, whenever the entry is made, it will pass on to the register office in India within 15 days. And that register shall be deemed to be a part of main register. It will be just part of that register. Main register is here only. If the register is not maintained as above, company 3 lakh penalty, officer 50,000. Company 3 lakh, officer 50,000. Possible, remember, or else you can ignore. Then, annual return. Sir, what is annual return? Every company shall prepare annual return in form number MGT7 and file it with the ROC within 60 days. Within 60 days from the date of AGM. Very important, 60 days within 60 days from the date of AGM. However, the AGM is not held, it should be filed within 60 days from the date on which AGM should have been held. That is 30th September. Then, annual return shall be signed by the director and a CS. If no CS, then a CS in practice. Every listed company shall certify the annual return in form number MGT8 by another CS in practice. Okay. Copy of annual return shall be placed on the website and the web link shall be given in the annual report. If it is not filed within 60 days, then company 10,000, 100 rupees per day, max 2 lakh. Officer 10,000, 100 rupees per day, maximum 50,000. If CS in practice certify the annual return without the conformity of the requirements of 92, then he is liable for 2 lakh rupees. So CS penalty is 2 lakh rupees. All the records and registers shall be preserved for 8 years. MCQ. except register of members in India and foreign register shall be preserved permanently. So register of members in India and foreign register shall be preserved permanently. Rest all the register throughout the Companies Act will be preserved for 8 years. 8 years, 8 years, 8 years. Finish. So we are done with meeting also. One more chapter finished. Cool. Bye guys. Take care, enjoy, and aim for a rank or 70 plus, whichever is earlier. Cool. Bye guys. Take care.
So hi guys, what's up? Today we are starting with a new topic which is called as shares. Okay, very important unit for exam point of view. Close to 8 to 12 marks it will come. MCQ may also, it is very important. It can be a very important chapter for MCQ also. Half of the chapter is used in your audit paper also. I'll let you know from where it is used in audit. Let's quickly discuss one by one. The first point says minimum subscription. Okay, so it is section number 39, minimum subscription. So section 39 says no allotment of shares shall be made to public unless minimum amount stated as stated in prospectus has been subscribed. The application money on every security shall be minimum 5%. That's your MCQ. It should be minimum 5% of the nominal value of the security. The application money should be minimum 5% of the nominal value of the security or such percentage as may be prescribed by SEBI. Right now it is minimum 5%. Now if minimum subscription is not achieved within 30 days from the date of issue of prospectus, then the company has to refund the money within 15 days. If they have not refunded within 15 days, then the directors and officers shall be liable to repay the money with 15% interest per interest per annum. Okay, so minimum subscription should be achieved within 30 days. If it is not achieved within 30 days, then you have to refund within 15 days. If you are unable to refund, then you have to refund. You have to refund the money along with 15% interest, along with 15% interest per annum. Okay, then whenever company makes an allotment, the company shall file a return of allotment with ROC. You have to file a return of allotment with ROC. In case of default of section 39, then it says the officer shall be liable to minimum 1,000 rupees, maximum 1 lakh. Minimum 1,000 rupees, maximum 1 lakh. Minimum 1,000 rupees, maximum 1 lakh rupees. Section number, guys, is 39, minimum subscription. Now, return of allotment. So whenever company allots the share, they have to file a return of allotment. If the shares are issued for cash or for consideration other than cash, then the company shall file a return of allotment in form number pass 3, prospectus and allotment of securities. Prospectus and allotment of securities, pass 3 within 30 days along with the prescribed fees. So that's a part of section 39 only. Section 40, underwriting commission. So again, it's a repetitive question of underwriting commission. So meaning, in an underwriting contract, the underwriters guarantee the minimum subscription for which they are paid a commission, which is called as what? Underwriting commission. Now, it can be paid only for the shares or debentures which are offered to public. Only for the shares or debentures which are offered to public. A. It should be authorized by AUDA. R. In case of shares, the maximum rate is 5% or AUDA rate, prescribed AUDA rate, whichever is less. For debenture, it is 2.5% or AUDA, whichever is less. 5% or AUDA, whichever is less. Debentures 2.5% or AUDA, whichever is less. Okay. R. K. Copy of underwriting agreement shall be filed with ROC along with prospectus. For the sound, K. Copy of underwriting agreement shall be filed with ROC along with prospectus. E. Eligibility. Sir, underwriters will be paid even if single share or debenture is not subscribed by them. That means if it is an over subscription, so underwriter will not take any share, but still they will get the commission because they had taken a risk when the company was having a problem. Okay. Now it can be paid out of P&L also as well as share capital also. So again, MCQ, it can be paid out of P&L also as well as share capital also. G. Details of underwriters, number of shares underwritten, rate should be disclosed in the resolution, and it may be paid in cash or lump sum or kind. So this is marked section number 40, underwriting commission. Okay. Now, what is irregular allotment? We have written refer question 5, page 190. People who are studying from model from different author. Irregular allotment means if you have contravened the section of prospectus or shares, whatever shares you have allotted at that time, that allotment would be irregular. That allotment will be irregular. So for example, the basic requirement is that you have to issue shares. You have to issue prospectus. You have not issued prospectus only. Or prospectus was issued but it was not registered with ROC and you have allotted the shares. Sir, it was registered with ROC but it was containing some false, misleading statements, untrue statement. Allotment is irregular. Sir, minimum subscription was not achieved and you have allotted the shares. Minimum subscription was not achieved, you have allotted the shares. Sir, and the application money is has to be minimum 5%. It was less than 5%. So still, the whatever shares you have allotted, it will be irregular allotment. So we have applied for listing to the exchange, but the permission has not been received. The allotment, whatever you have done, it is irregular. So whatever conditions were there, you have contravened those conditions and you have given the allotment. That allotment is called as irregular allotment. That allotment is called as what? Irregular allotment. Now, so section number 52, it says securities premium. Section number 52, securities premium. RP is BB. RP is BB. R. Sir, sec prem can be used only for 5 purposes: premium on redemption of preference shares and debentures. P. Writing of preliminary expenses. I. Writing of share and debenture issue expenses. B. Bonus shares. Once more B. Buyback of shares. Sec prem can be used only for 5 purposes. Other than this 5 purposes, sec prem cannot be used anywhere. If the company has used sec prem for other than this 5, then the company has contravened section number 52. Company has contravened section number 52. Sir, what is 53? Sir, prohibition on issue of shares at discount. No company shall issue a share at discount, and if they have issued such issue will be void. Such issue shall be void. If 53 is contravened, what will happen? Sir, amount raised to discount issue is the penalty, or rupees 5 lakhs, whichever is less, will be the penalty. Along with that, you have to refund the money. At the rate of 12% interest per annum. So penalty plus refunding the amount plus interest, all three things would be there. So company can issue shares at discount to 2 people. One, at the time of sweat equity shares. Other, when the shares are given to creditors, when the debt is converted into equity as per the scheme approved by RBI. Clear? So two exceptions, it was asked in the exam. One is sweat equity shares, other one is when the shares are given to the creditors, when the debt is converted into the equity as per the scheme approved by RBI. Now, section number 54, it says explain sweat equity shares. So sweat equity shares are given to employees. Okay, sweat equity shares will be given to employees. So some companies may issue sweat equity shares at discount or for consideration other than cash. MCQ, at discount or for other than cash to their employees or director for their value additions, intellectual property, technical know-how, etc. Now, what are the conditions? So the code is sweat. S. Shares should be of same class already issued. W. When will you issue it? Sir, at any point of time company can issue. E. Employee and director details like number of shares, market price, concession if any should be disclosed in the resolution. A. It should be authorized by SR. For sweat equity it is SR. T. Terms and conditions. In case of listed company you have to comply with SEBI rules. In case of unlisted company you have to comply with central government rules. Okay. Now, the company can issue amendment. The company can issue sweat equity shares for a maximum of 15% of its paid up capital in a year, or shares of rupees 5 crores, whichever is higher. So in terms of number it is 15%, in terms of value it is 5 crores. So what should be 5 crores, whichever is higher. Subject to maximum 25% of paid up capital at any point of time. Subject to maximum 25% of the paid up capital at any point of time. 15% or 5 crores, whichever is higher. Subject to maximum 25% of paid up capital at any point of time. However, a startup company may issue sweat equity shares of maximum 50% of the paid up capital up to 10 years. So if it is a startup company, you can issue maximum 50% of the paid up capital up to 10 years from the date of incorporation. May 23, question number 1A, law paper, CA Inter, May 23. Please solve that question. It's very, very, very important. Okay, it was on in this concept only, startup wala concept. So they have given 2 solutions. You can follow either of it. ICA has given correct to both. So I repeat, May 23, question number 1A, suggested of ICA. Okay. Now, redemption of preference shares, you just have to read. Company can redeem the preference shares. Okay, and when you are redeeming it, sir, you have to pass SR. You have to pass SR. Okay. Then, very important, distinguish diminution of capital, reduction of capital. If you cancel your authorized capital, that means market is not getting affected. You are cancelling your authorized capital, that means the market is not getting affected. It is called as diminution of capital. You are cancelling your subscribed capital, your market is getting affected, it is reduction of capital. In the both, tribunal ka approval is required. Okay, for one OR is required, for other one SR is required. OR is required, SR is required. Clear? Okay, this I have to read from the book. Now, purchase of own shares. Section number is what? 67. Purchase of own shares. Sir, no company means no company can buy its own securities, that is own shares, at or give loan guarantee security to any person to buy the shares in its company or its in holding company. So no company can give buy the own shares or give money or guarantee or security to anybody to buy share in the same company or in the holding company However, a company can give loan for buying shares in it or in its holding company, provided all the three conditions are fulfilled. Provided all the three conditions are fulfilled. So, what are the three conditions? If it is given to its employees other than director or KMP, that means normal employees. If it is given to the normal employees. Number 2, amount is maximum 6 months ka salary. Amount is maximum 6 months ka salary. And the amount should be used to purchase fully paid up shares. The amount you should be used to purchase fully paid up shares. If it is given to, it is to be given to the employees other than the director and KMP. Number 2, and maximum 6 months ka salary you can give as a loan. Number 3, and the amount should be used to purchase fully paid up shares. To purchase fully paid up shares. The shares held by the employee will be in the capacity of beneficial owner. He is not the actual owner, he is just the beneficial owner. He is not the actual owner, he is just the beneficial owner. Clear? Now, section 68, it says buyback of shares. Section 68 says buyback of shares. So, 67, 68. Company can buy back how much? Maximum 25% of paid up capital. Company can buy back maximum 25% of paid up equity share capital. So, company can buy back maximum 25% of paid up equity share capital. And which shares can be bought back? Sir, only fully paid up equity shares can be bought back. What is required, sir? SR is required for buyback. However, if the buyback is up to 10%, then we require only BR. Okay. So, what are the sources of buyback? Number 1 is free reserve. Number 2 is sec prem. Number 3, proceeds of fresh issue. Now, buyback should be authorized by AUDIT. Fresh issue, sec prem, sec prem and free reserve. Only this can be used for buyback. Okay. Always remember this. Now, the entire buyback should be completed within 12 months of passing BR or SR. So, period is 12 months. This was also asked in the exam. The company is prohibited from issuing same class of shares for the next 6 months. The company is prohibited from issuing same class of shares for the next 6 months. Post buyback, the debt equity ratio should be 2:1. Post buyback, the debt equity ratio should be 2:1. Now, as per section 69, if a company buy back the shares out of free reserves or out of sec prem, an amount equal to the nominal value, like the face value of the share, should be transferred to CRR. And the money in CRR can be used only for one purpose, that is only for issuing fully paid up bonus shares. Then, as per section 70, following is a prohibition for buyback. Okay, very important answer. This can be asked separately. Number 1, through any subsidiary company, including its own subsidiary, you can't buy back. Through investment or group of investment company, you can't buy back. If the company has default repayment of deposits, interest, redemption of debentures, preference shares, payment of dividend, the loan ka interest or loan amount, then you can't buy back. This prohibition would be lifted if the default has been rectified and the period of 3 years have elapsed, and the period of 3 years have elapsed after the rectification of such default. That means this prohibition is lifted if the company has rectified the default and over a period of 3 years has passed after the rectification of such default. Okay, if company has default in filing annual return or dividend contraventions or penalty for failure to pay dividend and FS, still you can't do buyback. If section 68, section 70 is contravent, company liable for 1 lakh to 3 lakh, officer 1 to 3 lakh. So 68, 69, 70. 68 is on your buyback, 69 is on CRR, 70 is on prohibition of buyback. All three are important. 67 is purchase of own shares. Last answer, right issue. If a company goes for public offer, the shares should be first offered to existing shareholders only by a notice. Okay. The notice should contain all the particulars, that is number of shares offered, time, and time, that is minimum 15 days, maximum 30 days. Minimum 15 days, maximum 30 days. 15 days can be reduced, but at least 7 days are required. At least they should revert back within 7 days. With the minimum, it has to be 7 days. The above right is given only to equity shareholders, and not to preference shareholders. If you remember, right of renunciation, you can sell that right. Right of renunciation is available to existing shareholders. However, issue can be offered to outsiders if SR is passed by the shareholder, OR is passed and CJ approval is taken. Okay, if it is declined by the existing shareholders, conversion of debenture into shares and reissue of forfeited share. In this case, you can directly offer to outsiders, not going to the existing shareholders. Then, last answer is issue of bonus shares. We have written refer question 31, page 190. Very simple. Company will offer bonus shares only to existing shareholders. Whatever bonus shares they are offering, it has to be fully paid up. Existing shareholding should also be fully paid up. Okay, money will come from free reserve, okay, and sec prem and CRR. If the company has default in repayment of loan to the bank or public ka money or deposits or employee ka dues, you can't go for bonus shares. If company says bonus shares can be issued in lieu of dividend, the answer is incorrect. Dividend is different, bonus shares are different. Section number 63, bonus shares. Cool. So it was a very important unit. Small things, days and the provisions are very important. Buyback, remember, purchase of own shares, remember, and that startup wala question, sweat equity share wala, from question number 1A, May 23 suggest. Please do that thoroughly. It's very important. Cool. So guys, with this we finish our entire marathon. I know I was late, but I had promised that I'll give it. I'm very sorry for that. I could not record it due to some reasons, but I've given my best to you guys. Please do all these chapters what we have done thoroughly. Handwritten notes are available. Okay, handwritten notes are available in the Telegram group, or you can visit my website www.letslearnindia.in. From there, you can get it. Number 2, okay, for general clauses as interpretation of statutes, general clauses, interpretation of statutes, and negotiable to some extent. At least for this chapters, I know it's very dry chapter. Do past questions thoroughly. Past question ka sheet also, I mean exam question ka sheet also have circulated in the Telegram group. You can find there. Okay, and I will be uploading it today. It's not uploaded. I'll be uploading it on letslearnindia.in. You can download it from there also, the past questions. When you do the past question, just do that question thoroughly. You will clear for sure. You will clear. Okay, so go to www.letslearnindia.in. In that free resources, in that you will find this handwritten notes also, plus you will find it the past questions of general clauses and interpretation also. In case you can't go to the website, you can download from the Telegram group, our Telegram group. Okay, I hope I get to see you in CA final, because in CA final I'll be teaching you audit, as law is not there now. So I'll be teaching you audit, because I teach both the subject for law and audit for inter and final. I hope I get to see you in class. People will be having a CA final very soon. You can buy recorded lectures, live lectures, pen drive lectures, whatever you are comfortable. Cool. So connect with me on YouTube, Instagram, Telegram, wherever you want. I'll be there to help you. All the best, guys. Aim for a rank or 70 plus, whichever is earlier. Do like the video, comment and share with your friends so the maximum people take the benefit of this video. And let's meet in CA final. Okay. Bye guys. Take care. Enjoy.
Hi guys, what's up? So today we are starting with a chapter called as Foreign Exchange Management Act. Okay, 4 marks to 8 marks. It can go to 10 also, including MCQ. The 4 marks to 10 marks. Foreign Exchange Management Act. So it says any transactions. First one is capital account transaction. Any transactions which alter the assets or liabilities outside India of a person resident in India. Assets or liabilities including contingent liability of outside India of a person resident in India, or vice versa. Assets or liabilities including contingent liability in India of a person resident outside India. It is called as what? Capital account transaction. What it is? It is called as capital account transaction. Now, important definition, current account transaction. What is current account transaction? It means a transaction which is other than a capital account transaction. Current account means what? A transaction which is other than capital account transaction. Achha, what it will include? Like your basic personal things, like payment due in connection with the foreign trade or other current business service or short-term banking or any credit facilities, or in the ordinary course of business, Payment made due as interest on loan. So loan is a capital account. Interest on loan, current account. Net income from investments, capital account. Net income, current account. Now, remittance for living expenses of parents, spouse, children and residing abroad. When you are making payment for your parents. Expenses in connection with the foreign travel, education, medical care of parents, spouse and children. All this is your current account transaction. They can ask us to identify, or they can ask us explain current account transaction. 3 mark, 4 mark answer. So what does export means? So export basically means taking in goods, any goods outside India to a place outside India, or services, giving services outside India. Okay. Import. What is import means? Import means bringing into India any goods or services. Foreign security. Foreign security means any security in the form of stocks, shares, bonds, debentures or any other instrument which is denominated or expressed in foreign currency, including any return, interest or dividend payable in Indian currency. Any return or interest or dividend payable in Indian currency. Understood? Now, explain PRI. What will you say? Explain PRI. PRI means what, sir? Person resident in India. PRI means what? Person resident in India. Sir, a PRI is an individual residing in India for how many days? For more than 182. That is basically 183 days. How many days? 183 days in the previous financial year, but does not include A. Sir, A means what? A person who has gone outside India or who has stays outside India. In either case, for B, business or vocation outside India, A, in their purpose which will indicate his uncertain period, and E, employment outside India. So, sir, he will not be included in PRI. That means these people will become what? PRI. From the day they go outside India. B, a person who has come to India or stay in India, otherwise then for B. So, till here, you are PRI. Otherwise then means if you are coming to India for business or any other purpose for uncertain period or for employment in India, you become PRI from the day you come to India. Important answer, important definition. Then, a body corporate in India. Then a branch office agency owned or controlled by PROI. Then any branch office agency owned or controlled by PROI. what it is? It is also person resident in India. Explain PROI. So PROI means what? PROI means a person who is not a resident of India. There are 4 illustrations in the module also, in the book also. People who have my book, 1, 2, 4 same illustrations we have copied there on page 3.1. So very, very, very important illustration. Those will only be repeated. Then, sir, what is current account transaction list? So, as per foreign exchange management, current account transaction rules, following is the list. Sir, schedule 1, 2, 3. What will say? Schedule 1, 2, 3. Schedule 1, 2, 3. Rule 3, 4, 5. Rule 3, 4, 5. This is prohibited ka list, this is CG ka list, this is RBI ka list. It's prohibited ka list, CG ka list and RBI ka list. Okay, there are 8 items. How would you say? Gande kaam, like bad works. All bad work, like callback service is there. Then lottery tickets is there, banned magazines is there. All those are in prohibited ka list. You don't have to mug up the entire list. You have to understand. Always remember, bad work prohibited. Acha, transport ka items is in CG ka list. Okay, then personal things are in RBI ka list. Like if individual, there are individuals, they have given 9 items up to $250,000. What amount? Up to $250,000. Up to $250,000 per person, per financial year. You can remit for your personal use, like private visit, education, everything is there. 250,000. Okay, others they have given the 5 limits. 5 limits is there. Now, however, no approvals required. The payment is made into out of RFC or EFC account. No approvals required. The payment is made out of RFC or EFC. That's resident foreign currency account or exchange foreign currency account. Exchange earners foreign currency account. No approval is required. Sir, what it is? Now listen. So like this list is there. CG ka mein bad work. Transportation is in prohibited ka list, bad work. CG is basically transportation. RBI mein they have given 250 ka LRS, liberalized remittance scheme. However, if you are using the money from immigrations and medical treatment abroad, studies abroad, 250 is not applicable. It is on the basis of that they have given, what do you say, the estimation they have given. Estimation from the immigration country, estimation from the doctor abroad, estimation from the university. You can transfer more than 250 also. Then, if you are a person resident in India but not permanent resident and you are a citizen of a state other than Pakistan or a citizen of India who is on deputation to India, you can remit net salary. Even though it is more than 250, you can remit your net salary without RBI ka approval. Okay, this is important. There is a question in the model on this. Okay. Then, 5 limits for other than individuals. First one, donation by corporate. How much you can give? 1% of foreign exchange earnings of 3 years or $50 lakh, whichever is less. Up to this amount you can give. If you go beyond that, you require RBI ka approval. However, approval is not required. The payment is made out of RFC and EFC. Okay. Number 2, reimbursement of pre-incorporation expenses. How much you can give? 5% of inward remittance or $1 lakh, whichever is higher. This is higher. Okay, higher. Always remember, donation has to be less. Rest both the limits are higher. Okay, up to this limit you can give. If you go beyond the limit, you require RBI approval. However, approval is not required if the payment is made out of RFC or EFC. Okay, consultancy, big consultancy, big means like infra consultancy, power, railway, seaport, airport, big consultancy, $1 crore per project. How much will you say? $1 crore per project, $1 crore per project. Small consult like Vastu consultancy for my house, $10 lakh per project. Up to this, no approval. Beyond that, RBI approval. If the payment made out of RFC, EFC, no approval. Then, commission per transaction to the agents abroad for sale of residence flats or commercial plots in India. So if my agent has sold my flat, I have to give him commission. How much I can give? 5% of inward remittance or $25,000, whichever is higher. Up to this, no approval. Beyond this, RBI approval is required. Okay. If payment is made out of credit card, no approval is required because RBI knows it, right? No approval is required. Correct? Done with the limit. So PROI ka answer, limit ka answer. These two are important. Explain capital account transaction. You can read this. Time pass it is. This one. As per FEMA, capital account transactions rules 2000, following are CAT. So it is permissible by PROI and PROI. So they have given the list. Always remember, asset liability in India, person will be outside India. Asset liability outside India, person will be in India. That is permitted list. Okay, that is RTP. Sir, where restrictions can't be imposed. RBI can't impose restriction on amortization of loan, depreciation of direct investment. Amortization of loan, depreciation of direct investment. RBI cannot impose any restriction there. Okay, it is freely permitted. Okay, then prohibited. Very important list. Very important list. Prohibited list. So 5 things may you can't do foreign exchange transactions. Like it can't be done in foreign currency. First one. So no PROI shall make investment in India which is engaged in business of chit fund, Nidhi company, and AFP. Chit fund, Nidhi company, AFP, agriculture farmers plantation. Fourth, Real estate business, fifth, TDRs, transferable development rights. In these 5 things you can't do, you can't use foreign exchange. No pro can make investment. No pro can make investment in the company which is doing business of chit fund, Nidhi, AFP, real estate business and TDR. However, real estate business will not include what? Development of township, construction of residential commercial houses, bridges and trust. That means pro can make investment. This pro can make investment. So pro ka definition, okay, including that company ka branch outside that country that controls this branch. In the model we have done a lot of questions. In the book also we have done. Then that CG ka list, prohibited list, RBI ka list. Then RBI ka list for other than individuals. And this prohibited list. These 3-4 answers are repeated. It will only come in the exam. Okay. So here pro can't make investment. Very, very, very important answer. Cool. Done. Fast track. Super fast track. Crash course. Done. FAMA is over. Cool. Bye guys, take care, enjoy and aim for a rank or 70 plus, which is earlier. Bye guys. So hi guys, I hope you guys have enjoyed all the revision videos, marathon videos, and I hope आपने बहुत अच्छी पढ़ाई कर ली होगी. You must have studied, and I hope I have helped you in preparing your exam. Okay. Now last 5 minutes from my side. So when you're revising it, this is a revision pattern which I have already shared in the class. Okay, so first you do foreign companies and preliminary, one small chapter and one you do important chapter, then you do LLP plus membership wala unit, then you do interpretation GCA and LLP wala act, and then you do 5 incorporation wala chapter pura, then you do dividend plus mahua hua, accounts plus prospectus, then you do auditor plus prospectus. Agar kuch reh jata hai prospectus mein se, then you do charges plus shares, you do deposits plus shares. 11th chapter you do meetings, 12 you do FEMA. Okay, so this is the pattern you will follow it when you're revising it. Okay. Generally, I assume that you will get up by 7:30. By ud jana. 7:30 to 9:30 you revise law. Then you do some practical subject. Then again you do practical. And evening again 7 to 9 you do law. So last lot, like post dinner, either you can revise law or what you can do is whatever content you have done, you revise the entire content. So kya ho gaya? Second time revision done. Second time revision done on the same day. Okay. Now, when you're coming after your accounts paper. So pehla what you have to do, you have to revise dividend, accounts, auditors. 25 to 30 marks. Then chutti day means holiday. Till your lunch break, you do other laws ka part. LLP, interpretation of statutes, GCA, FEMA. Revise it out. Okay. Then you do all important chapters. Mahua, incorporation, shares, prospectus, repetitive chapter. Then till the dinner time, you break, you finish your all the balance chapters are there. Now this is again budgeted. Actual will come something else. So you have to do the leftovers plus this attempt ka RTP plus this attempt ka mock 1 and mock 2. Finish it off. Okay. So this is your ideal revision pattern. You should follow this, and in case if you have one more holiday, तो क्या करेंगे? Double time. You into 2. Revise same pattern double. Now when the paper comes, 1:45 you will get the question paper. You will not get the answer sheet. Answer sheet will come at 2 o'clock. 1:45 you decide. Don't MCQ will not be there. MCQ का paper will not be given. Only descriptive का paper would be given. So you first decide what question you want to attempt. Question number 1 gonna be the most toughest question. Question number 1 gonna be the most toughest question there. So what do you do now? So just plan. Okay, question number 5 पहले करना है कि 3 you have to do, 2 you have to do, plan it out. Then 2 o'clock when answer sheet के साथ you will get the MCQ का paper, question paper. Keep that paper under the desk. Don't look up to it. First you finish off your descriptive. So from 2 p.m. to 4 p.m. guys, from 2 p.m. to 4 p.m. what will you do? You will finish off your descriptive. From 2 p.m. to 4 p.m. what will you do? You will first finish off your descriptive. Okay. Then when you aim for 4 p.m. by 4:15 it will be done. So last 45 minutes, like from 4:15, you will do the MCQs. So close to 10 questions are there for 1 mark, 5 questions for 2 mark, 5 questions for 2 mark. So close to 20 questions, 45 minutes. 2 minutes per question. Easily hota hai. Easily hota hai. Paper gets completed very easily. Don't leave the paper. Write all the questions. Even if you do not write any nonsense shit, teacher will give you 0. There is no negative marking. But complete the paper. Do not leave the exam hall before 5 o'clock. Do not leave the exam hall before 5 o'clock. Understood? So follow this pattern. In case आपको अच्छा लगा हो, do like the video, comment and share with your friends. And I hope I get to see you in CA final. Aim for one last time. Aim for a rank or 70 plus, whichever is earlier. Because if you get 70, I will take you to Taj. Okay, that's promise from my side, guys. All the best, and I hope I get to see you in CA final. Bye bye. Take care, and do message me on Instagram, Telegram. How do you find the marathon revisions, lectures, everything. And I hope you make your parents very proud. Bye guys. Take care. Ciao. Bye.